All right, friends, I welcome you all to this revision session that we are going to take for the subject of CA inter auditing and ethics. Okay, and for the revision sessions, guys, I hope that you can follow any material that you have been following. You can follow the ICI material. You can follow my material, which is again based on ICI material, or if you can see on the screen, we have these revision charts. These revision charts will also be available on my Telegram channel. You can download it from there also. So it is up to you, right? Okay. Now, how are we going to proceed? If you can see on the screen, guys, I have chapter number one. Okay, as our agenda today. So under chapter number one, what all topics we have to cover, you can see on the screen, right? These are the topics. Like if you can see introduction to auditing, then we have what are the different types of audit, some topic with respect to the auditor. So these are the things which we are going to cover in this particular chapter. Now the best part about these charts is that it gives you a complete picture. It gives you an overview as to what all things we have to cover in this particular chapter, and accordingly we are going to go into each of these topics. So if you can see, almost 6-7 topics we have to cover from chapter number one. Okay, all right. So let us start, guys. Chapter number one, which is nature, objective, and scope of audit. Okay, so if you can see on the introduction to auditing concept, okay, what all things do we have to cover here? We have, yes. So we have these topics that we need to cover. So first we'll be covering what is the meaning of the word audit, what are the objectives of audit, then a topic points to be taken care of to ensure that the financial statements are not misleading, what is the scope of audit, and what are the benefits of audit. So all the basics of auditing, introduction to auditing concept, I have just framed it under one head. Okay, so let us quickly start, guys. What is the meaning of the word auditing? All of you know this already. One of your favorite definitions, perhaps something which we had been covering from the fundamentals class, from in almost all the chapters that we do, right? So what is audit? Audit is number one, independent examination of what? Of financial information of any entity. This entity, guys, can be profit oriented or not, irrespective of its size or legal form. And when such an examination is conducted to basically express opinion thereon. So let us quickly break it down, guys. What is audit? Number one, independent examination of what? Of financial information of any entity. Now when I say financial information, it would mean, of course, the financial statements and all the underlying things we can check. Like for example, we can check the ledgers, we can check the journals, we can check all the underlying records. Okay, so that is why the word financial information is given. Now the entity that we are auditing, guys, it can be profit oriented or not. That means it can be a NGO also, it can be a charitable institution, trust, and irrespective of its legal size or form. It can be a big entity, it can be a small entity. And when I say form, it simply means, guys, it can be a company, it can be a firm, it can be an LLP, it can be a society, it can be a trust, it can be an HUF. So audit can happen for any type of entity. But just remember, guys, when we do the audit, when we do the examination of these financial statements, our objective is to express opinion on the financial statements. And because this is a revision session, guys, I hope all of you already know this, that what kind of opinion do we express when I say we have to express opinion on audit. So basically we give whether the financial statements are giving true and fair view or not. Okay, all right, done. Next topic, guys, what are the objectives of audit? Though this topic is something which is more relevant when we do SA 200. Okay, however, let's quickly understand, guys. All of you already know this, that the objective of audit is what? Objective of audit is to express an opinion on the financial statements. And what kind of opinion whether the financial statements are giving true and fair view or not. Okay, now few basic things about opinion that you need to know, guys. See, let's say if I am the auditor of your company and I give an opinion on the financial statements of your company, you should not be taking my opinion as an assurance to the future viability of your enterprise. That means that your enterprise is going to survive in the future, it is going to prosper in the future. You can't take my opinion as an assurance to the future viability of the enterprise, nor can you take my opinion with respect to the basically whether you have conducted your business efficiently and effectively or not. So I am not basically giving an opinion on that. So there is one line here: opinion is not an assurance as to future viability of the enterprise or the efficiency or effectiveness with which management has conducted the affairs of the enterprise. So a lot of people who don't know much about auditing, they might think, oh, this financial statements have been signed by a chartered accountant, so of course it would mean that management has done its business properly, they have conducted the affairs of the company, let's say, with effectiveness and efficiency. No, so this is not what we check or what we give an opinion on. Our opinion is only restricted to the fact that whether the financial statements are giving true and fair view or not. Done. Okay, so very basic things. Okay, so 2 points we have already covered, guys: meaning and objectives of audit. Now the third topic that is there, if you can see, I put a star mark also there. What are the points to be taken care of to ensure that the financial statements would not be misleading? Now this is one area wherein I feel you have to remember the points as well. I mean, of course, other than understanding, we have to somehow retain the points also. And the question has been asked also in the old syllabus as well in the exam, okay, or maybe in the RTP it was there. So what are the points to be taken care to ensure that financial statements would not be misleading? So as an auditor, what all things we have to take care of? So I think we have got 6 points here, guys, if you can see, and very easy points. Number one, we have to see that the accounts have been drawn up with reference to entries in the books of accounts. So whatever accounts, whatever financial statements they give us, basically accounts, let's say, accounts have to be in accordance with what? The entries. Okay, anything that you see, it should be based on the entries. So accounts have been drawn with reference to entries. Number one, it should be backed by entries. Okay, and then any entry that you check, entry should be further supported by some documents, guys. Okay, now for example, if an AC is purchased in the organization, okay, so you will see the entry for the air condition. Okay, when you see the accounts, you saw that AC is there, so you'll see the entry, and then on the basis of the entry, you'll ask for the supportings, whether it is a genuine entry or not. So you might ask for the purchase invoice of the AC or other documents. So entries are adequately supported by what? Sufficient and appropriate evidence. And it should never happen also in this case, guys, that they have purchased the AC but no entries have been made in the books, because all of you know this already, that omission of anything would also lead to misstatements, right? So first 3 points, if you can see, they are primarily, guys, with respect to entries, right? What are the 3 points again? Number one, that the books of accounts are in accordance with the entries. Number one, no entries should be omitted, and whatever entries have been made in the books, basically they should be supported by evidence. Okay, 3 points with respect to entries. Now next 3 points are with respect to financial statements. If you can see, that information conveyed by financial statements, whatever things are written in the financial statement, it should be clear and unambiguous. Okay, then financial statements should be made in alignment, in accordance with the accounting standards, whether AS is applicable on your company or Ind AS is applicable. Financial statements should be made accordingly, and your financial statements ultimately should give true and fair picture of operational results as in the PNL and your assets and liabilities. Okay, so this is just a way to remember that first 3 points, guys, are with respect to entries. Again, I'm repeating this because I feel, I mean, it requires a bit of retention. It has been asked in the exam, so I feel it is an important question. So what are the 6 points again, guys? Number one, accounts have been drawn up with reference to entries in the books. Number one. Second, all entries which is done should be supported, should be backed by certain evidences. Third, no entry should be omitted. Now let's talk about the financial statements. Financial statements should be clear, unambiguous. It should be made in conformity with the accounting standards, and last one is they should give true and fair picture of the operational results and of course the assets and liabilities. Done. Okay, so this was one important topic, guys. Okay, now the next is another simple topic. What is the scope of audit? Okay, now when I say scope of audit in very layman's terms, guys, it includes that when we are doing the audit, what all things we have to check, what all things should be included basically when you're doing the audit. So this can be referred to as scope of audit. So now under the new syllabus, the scope of audit is basically divided into two parts. If you can see, basically we are going to learn what does the scope of audit cover and what is not included in the scope of audit. Okay, so let's understand guys what it covers. Now, number one, when you're doing the audit, guys, you have to do full coverage of all relevant aspects of the business, okay, which is relevant to the financial statement. So you have to cover everything, okay. It doesn't, it simply means that, okay, you can't just ignore the purchase part, you just can't overlook the sales part, okay. So when I talk about the scope of audit, it has to have full coverage of what? All aspects, which is all relevant aspects of the business, basically, which is actually relevant to the financial statements. Number one. Second scope basically is about the reliability of information. Okay, so we have to make sure when we are doing the audit, we have to make sure that the data which is given to us, or the data that we are seeing, the information that we are seeing, let's say in the accounting records, it has to be reliable and sufficient. Guys, understand, if the underlying accounting records, the data from which financial statements are made, if that data is not reliable, if it is not, correct, of course it would have an impact on the financial statements, right? So as a part of our audit, of course, as a part of the scope of audit, we have to see whether there is reliability of information, because reliability of which information? Basically information in the accounting records, it should be reliable as well as sufficient. Okay, and third one is basically, again, we, as a part of our audit, guys, we also have to understand about the disclosure. Okay, it simply means that financial statements should properly disclose all the transactions and events, and basically all other relevant information which is required, it has to be properly disclosed. So as a part of our audit, we even check the disclosures. Now, for example, management has done some related party transactions, okay, so we have to see whether appropriate disclosures as per AS 18 has been made in the financial statements or not. So this is also again a part of our audit. Okay, so again guys, what are the things that audit should cover? Number one, full coverage of all relevant things to the financial statements. Second, we have to see whether the information, the accounting records, is reliable, sufficient. And third one is, we also have to see whether the financial statements discloses all things which are required. Now, done. Okay, now after this, we also have to, I mean, because we are discussing about scope of audit, so we have to be very clear, right, that what all things are a part of audit, what all things should be included in audit, right? So let's understand now what it should not include. So what does audit does not include basically? So yeah, number one is limits of expertise. Okay, now what does it mean, guys? From my fundamentals class, okay, I've been telling you this, that you know, we as auditors, we are always going to be called as experts in the field of accounting and auditing. Okay, so if probably, sometimes it might happen that when you're doing the audit, okay, you might have to check the valuation of inventory. Okay, you might have to, my client has bought a very costly painting, or my client is into jewelry business and he deals in diamonds, so you can't just see the diamond and tell the valuation, right? So during the audit, uh, we might have to get some help from the experts also. So you have to understand that you are not an expert in all areas. Okay, your expertise is only in the field of accounting and auditing. So when I say limits of expertise, it simply means that auditors are not experts in determining, let's say, the physical conditions of assets, maybe the machinery, or whether a building is, the structure is suitable or not. So here basically we need to take the help of experts. Okay, so of course there is a limitation on our expertise. Always remember, we as auditors, we are going to be experts in the field of auditing and of course accounting and auditing. Okay, now guys, we are auditors. Okay, so we basically see whether the financial statements are giving true and fair view. We check, we verify the underlying documents, right? But it doesn't mean, guys, we have the expertise to see whether a document is authentic or not, whether the signature is genuine or not. We don't have such powers. I mean, we don't do, guys, we are not a police officer or a person, like CID and who does investigation. So when I say no document authentication, it simply means auditors can't authenticate documents. Okay, we are not an expert in verifying the genuineness of papers. So whatever management is going to give us, of course we have to be alert, but we can't verify whether the signature is genuine or false, etc. So this is a second thing which is not within the scope of our audit. We can't verify the genuineness of documents. And thirdly, very important point you have to always remember, guys, we do audit. Okay, we are auditors. It's not an investigation. In simple words, guys, we can't just without intimating our client, just randomly go at his house or in his office premises and start searching and start looking in for documents, asking him for certain things. We just can't do things like a police officer can do or a person from CBI can do. We don't have investigatory powers. In fact, we belong from such a humble profession that when we even have to check, let's say, any part of the client's books of accounts, etc., we'll inform him that tomorrow we are going to come and please keep your fixed assets register ready. Okay, so when I say not an investigation, please always remember, guys, that audit is not an official investigation, and we as auditors, we don't have legal powers to conduct search, or we can't ask our client to give us statement, or under oath or something like this. We can't to go with this. So please remember, the scope of audit basically is you know um, it is different from what we do in investigation is totally a different thing. Okay, so guys, all right, so we are done with the topic of scope of audit. Okay, so in the new syllabus, it is given in this manner, what it covers and what it does not cover. I hope you are clear on this. Okay, all right. And now if you see in the introduction part, introduction to auditing part, guys, we are left with one last topic. What are the benefits of auditing? Okay, so we have got around 7 benefits of auditing to cover. Again, very simple topic, guys. Imagine, I mean, if somebody gets the financial statements audited, what benefits would accrue to that person? Okay, or that entity, right? So number one is basically high quality information. Guys, see, if let's say you are the user of the financial statement, okay, and you happen to be one of the shareholders, or let's say prospective investors, and when you go through the financial statements which is audited, so it gives you, you get to know that, oh, it's audited. That means whatever information is there in the financial statements, or let's say notes to accounts or disclosures, etc., it will be of high quality. I mean, the chances of errors would be very less. Okay, so guys, understand, I mean, when the financial statements are audited, it becomes more trustworthy document. So I can say high quality information, and because of this, the shareholders confidence also increases. Okay, now please understand, it is guys, in a company, if I talk about the company, the shareholders put in their money in the company, right? But the company, the daily affairs of the company is run by the management of the company, the directors or the management, right? So when the financials of the company are audited, it gives confidence to the shareholders that the company's affairs are managed properly. The directors of the company are not running the company for their personal gains, etc. So it gives them a confidence. Okay, now if you see, guys, there are two words with respect to fraud. Okay, point number 3 is fraud detection, and point number 4 is for fraud prevention. Okay, so in very simple terms, guys, if let's say I happen to be an employee of an audit of an entity, and I know, oh, in this entity we have audit, we have the audits. So this might basically, if I have something bad in my mind, if I have a malicious intention, but I know, oh, in this company we always have the audit. Even if I do some ghapla, if I do something, some fraud, I would be caught. So probably I would not be indulging in such kind of activities if I know audit is done and I would be caught. So remember, guys, that auditing helps in fraud prevention as well as fraud detection. When I say fraud prevention, basically, the employees would now be very much hesitant or reluctant. Audit will act as a deterrent. Basically, they would not indulge in any kind of fraud. Okay, so this is fraud prevention. It's a preventive aspect. But then let's say somebody has committed a fraud, but during the audit, if you do the audit properly, you might get to know about the fraud. So it might also help in fraud detection, if you can see. So audit can basically uncover instances of fraud or errors in the financial reporting. So we have 2 points: fraud prevention and fraud detection. Okay, now guys, one of the users of the financial statements, all of you know this, is government, right? Why would government be interested in our financial statements? Government would be interested in our financial statements for the purpose of determining the taxes, right? So one more benefit of audit is tax determination. When you submit audited financial statements with the government, they also rely that, yeah, the financial statements are correct and the tax amount perhaps which is calculated on the basis of the financials that you have given is also correct, right? So government authorities, they also use audited financial statements to determine the tax liabilities of business. Okay, then we have credit decisions. All right, now guys, if let's say a bank, you go to a bank and you want to get a loan from them, they would not just give you a loan by seeing your face. They would want to know whether you have the capability to repay the money or not, whether you have the capability to keep on paying the interest, the installment part. So for that, they would want your audited financial statements. They would basically want to see your credit worthiness, right? So when I say credit decisions, also lenders, bankers, they also rely on what? Audited financial statements, and accordingly they make a call, they take a decision whether to lend money to a particular entity or person or not. Okay, and finally, if you can see the seventh benefit, we have a point called as control review. Now all of you know this, right? I mean, I am assuming that a bit of auditing you all know, right? And you all know this, that guys, that auditor, when he does the audit, as a part of his audit, he is also going to assess the internal controls of the organization, right? So this is another benefit of auditing, that guys, when I assess the internal controls of the organization, if there are certain flaws, if there are certain deficiencies, I can give suggestion to the management that you need to have this control. The control that you are having at the moment, it is not good, there is a deficiency, right? So basically, audit reviews the existence, the effectiveness of the various controls within the entity, and it helps them to identify and address any deficiencies in the internal control. Okay, so always remember guys, there are seven benefits of auditing. I am repeating the headings again. If you remember the headings, I'm very sure you'll be able to write the points. So what are the points again? High quality information, number one. Shareholders confidence. So one and two somehow related, right? High quality information, and then it will be boost the confidence of shareholder. Then 2 points with respect to fraud detection and fraud prevention. Then one benefit for the government, that yeah, they would be able to assess whether the tax amount calculated by the business is proper or not. Then for lenders, creditors, bankers, etc. And finally, for your own good, for the benefit of the organization, this control review is a benefit which is going to accrue to the organization themselves, right? Okay, when we get our audit done, the auditor is also going to assess internal controls, and he might point out certain deficiencies that we have in our control. Okay, again, let me repeat guys, the objective of auditor is to express opinion on the financial statements. He doesn't give an opinion on the effectiveness of the internal controls, except in certain cases. Okay, but primarily the objective of audit is to give express opinion on the financial statements. Okay, so if you see guys, with this we have completed the introductory part to the concept of auditing. Though in your study material, if you see guys, we have few more points like where did the word audit origin from. So if you want to know the story guys, remember that audit word is came from the Latin word which audire. Okay, audire means to hear. So in the old times, in the medieval times, the accounts, basically the auditors used to hear the accounts. There would be people who would read out the accounts, and the auditor is going to hear the accounts. Okay, so this is how the name has come. And in India also, because of the need of this profession, the Institute of Chartered Accountants of India was established as a part of basically a statutory body under the Act of Parliament in the year 1949. Okay, all right, so the basics part is done. Let us come to the next topic guys, which is types of audit. All right guys, so the next topic that we have to cover is what are the different types of auditing. Again, a very simple topic. What are the different types of audit? So all of you already know this, guys. Primarily, there are two types of audit. One would be called as statutory audit, and the second one is voluntary audit. Okay, so if I define statutory audit means audit which is mandated, which is required to be done under some law. Okay, so what could be the examples of statutory audit, guys? Let's say companies. Okay, any company, whether we have a private company or a public company, so they are required, it is mandatory for them to get the audit done under which act? Under the Companies Act 2013. Similarly, the banking companies, they have to get the financials audited under the Banking Regulation Act 1949. Similarly, we have cooperative societies which are registered under the Cooperative Societies Act 1912. They need to get the audit done. We have the tax audit also under section 44AB. Some entities which will have a turnover of greater than, let's say, 1 crore rupee, they would have to get their financial statements audited under the Income Tax Act. Okay, so in very layman's terms, if I say, guys, if an audit is required to be done under any particular law, it would be called as statutory audit. But guys, audit can be done voluntarily also. Now, when I say voluntarily, it means that if it is not required to be done under any law. Now, when would a person get the audit done voluntarily? Let's say, guys, there is a partnership firm and they are asking me to become one of the partners, and then they are asking me to contribute this amount as capital and some amount for goodwill also. So I just can't randomly trust them and pay the amount of capital and goodwill. I might get the financial statements audited. I mean, I would ask them, see, I'll send a chartered accountant, he will audit the financial statements, and if he feels that okay, there is a requirement to pay capital of this much, then only I'll pay. So this audit I got done for the financial statements of that partnership firm. So this is a voluntary audit. Maybe it was not required under the Income Tax Act. Maybe, of course, Partnership Act is also silent about auditing, but I got it for my satisfaction. It's a voluntary audit. Now, one more example, if I tell you guys, let's say I need a loan. So I went to the bank, and now bank has asked me for financial statements. I happen to be an individual. My turnover is also very less, let's say 20 lakh rupees. So I did not get the financial statements audited. Now, bank tells us that it is our policy that if you want to get a loan, of course, we'll only see your audited financial statements. So now, even because, I mean, I am not required to get the audit done under any law, but because of the need of the bank, because the bank manager had asked me, so I went to a chartered accountant and got the financial statements audited. So again, this is an example of what? Voluntary audit. So just remember, statutory audit is audit required under law, and voluntary audit would mean, I mean, I told you, I mean, it can be basically done to give assurance to certain users of the financial statements, and which is not done as a requirement of law. Okay, done. So we are done with the second topic, guys. What are the types of audit? Okay, now if you see the third topic is about a bit of about auditor. We are going to cover some things about auditor here. Okay, so what are the things that we have to cover? Let's understand, guys. So yeah, we are going to cover two concepts with respect to auditor. One is basically, if you happen to be an auditor, what are the qualities that you must be having? Okay, so this is again a new topic. So what are the qualities of an auditor? And then we are going to learn about the basics of appointment of auditor. Now, in the old course, guys, we had the entire company audit chapter. So appointment and all, we used to learn in great level of detail under the old syllabus. But now we are just going to have the basics. Okay, so let's understand, let's know about what should be the different qualities of an auditor. If you can see, guys, we have 7 points here. What are the different qualities of an auditor? Very easy and simple points. Number one, guys, when you're doing the audit, you need to have understanding of the financial matters. Okay, I mean, you as an auditor deals with financial matters in business, and of course these financial matters, these are very much prone to errors, human errors and fraud. So you need to understand the financial matters. Of course, this is the first quality, first requirement that any auditor should be having. Second, apart from understanding of the financial matters, he should have certain personal characteristics or qualities like tact. He should exercise caution. He should have the firmness, good temper to deal with the different people, to deal with his own team members, to deal with the client staff, etc. So he should have a good temper, also patience. Okay. Third is business acumen, guys. Now, This is again one interesting aspect, a good quality that an auditor should be having: business acumen. I mean, you need to understand how the business works. You need to have good understanding of the business which your client is doing, and accordingly, you would be able to do a better audit. So, all the qualities that makes a good businessman basically also contribute to the making of a good auditor. Okay, then the most important quality, guys, we read it in the definition of audit also, that audit is what kind of examination? It is an independent examination. So the most important quality of an auditor is that he has to maintain integrity and he has to be independent. When I say integrity, it simply means he has to be honest, he has to be straightforward. Okay, then he has to have expertise and knowledge. And I've been telling you this, guys, we are going to be experts in which area? We have to have expertise in accounting and auditing aspects. Okay, we have to have knowledge, we have to have knowledge of the various laws, we need to have knowledge of the various standards, etc. Okay, all right. Now, if you see the next point, which is technical training, what does it mean? Please understand, guys. In addition to the personal qualities that we have covered in point number 2, auditor needs to update himself technically also, so that he is able to do the audit properly. Okay, so technical training would mean updating ourselves with the latest amendments, with the latest standards, so that we can do the audit properly. Okay, and next is critical review skills. Guys, see, we are, when we do the audit, we review, basically we verify the financial statements, the underlying documents and all. So we should be having good analytical skills, good or let's say critical review skills. Okay, so we have to, of course, verify so many things, right? So this is again one more quality that the auditor should be having. So remember, guys, we have 7 points here, very simple. Number 1, basics, understanding the financial matters. Then we need to have certain types of personal qualities. We need to have knowledge about the business also, business acumen, basics. Then we have to maintain integrity and independence. We have to have expertise and knowledge. We have to update this also through some technical trainings and educations, and we have to have good analytical skills, review skills. So these are certain qualities that should be possessed by an auditor. Okay. All right. Now, if I talk about the basics, guys, of appointment, again, a very simple topic. Okay. And it says, guys, if it is a company, who is going to appoint the auditor? Shareholders. If it is a government company, who is going to appoint the auditor? CNAG. And if it is a firm, partnership firm, who is going to appoint the auditor? Partners. Okay. And as a part of your in your CA intermediate course also, in the chapter of audit of different entities, we also learn about the appointment of auditors of LLP. We have covered their sole proprietorship, we have covered firms, etc. Right? Anyways, so for firms, the partners appoint the uh, auditors. Okay. Now, guys, one simple thing I want to ask you, I want everyone to write the answer in the chat box also, or if some of you would be watching it on YouTube, write it in the comments below. uh, See, we have covered appointment of auditors, right? Now, my simple question to all of you is, once the auditor does the audit, whom is he going to submit his report to? What do you think, guys? Whom is he going to submit his report to? Okay, I have got the answer. Some are saying shareholders, okay. But then, guys, let's say if it is a firm, do you see any shareholder here? If it is a firm, whom is the report going to be given to? Okay, now we are saying partners. Niveda, you are absolutely correct. This is the answer that I was looking for. Please remember, guys, generally what is going to happen is the report, the outcome of audit, the report is going to be given to the persons who appointed the auditor, the ones who made the appointment. Okay, so the report is submitted to person making the appointment. Just remember this part. Okay, all right. Yes, so with respect to auditor also, two things we had to cover: qualities and appointment part, which we have covered. Okay, now if you can see, guys, almost, I mean, out of 6-7 topics that we have to cover, we have already covered 3 topics: introduction to auditing, we have already covered what are the different types of audit, we have covered about auditors also. Okay, now a very basic theoretical topic, guys, that the subject of auditing, does it have relationship with other subjects and disciplines? That we have to cover this. Okay, so yes, auditing does have certain relationship, guys, with a lot of other disciplines or subjects, I can say. So what are the things that we have to cover here? Yes, auditing has got certain relationship with accounting, with law, with something called as behavioral science, statistics and mathematics, data processing, financial management, and economics. Okay, now we are just quickly going to understand how is auditing related to these subjects, guys. Of course, auditing is related to accounting. I mean, we have to see whether the financial statements are giving true and fair view or not, whether the financial statements are made in accordance with AS or not. So you have to have good knowledge of accounting. Then only you'll be able to tell or say or give an opinion whether the financial statements are giving true and fair view or not. So when I say accounting, guys, you have to have thorough and sound knowledge of the generally accepted accounting principles. That means AS or Ind AS, etc. And you have to have expertise in the accounting concepts. Then only you will be able to do the audit properly, right? Done. Sir, do we have to have knowledge of law also? Yes, to some extent, guys. Yes, you have to. If you are doing the audit of company, you have to check so many compliances with the laws of the Companies Act 2013, right? Let's say in the audit of a company, we also have to check the amount with respect to provision of taxation. So again, you need to have knowledge of the Income Tax Act also, right? So why do you think that the subject of auditing has some relationship with, let's say, the subject of law? So let's now understand this, how auditing and law is related. So you have to have good knowledge of the laws which affecting the entity, and auditing involves examination of transactions from legal viewpoint. So I told you whether the provision for taxation is correct in accordance with the Income Tax Act. You'll have to see whether the various transactions are done in compliance with the Companies Act, etc. Right? So you have to have good knowledge of the laws which affect the entity. Okay. Now, when it comes to behavioral science, always remember, guys, that what is behavioral science? It is basically an art. It is a tact of dealing with people. So always remember, guys, as an auditor, I need to know how to talk to people, how to interact with people, how to manage people. And it's not just that I have to manage my own team members. I will have to do constant interaction, constant communication with the client staff also. So please understand this behavioral science. This is something which is very essential for auditor in discharging his duties. And auditor should have the tact. He should have the art of getting along with the people. And when I say people, guys, it can be, you can see on the screen, it can be client staff and his own staff along with people, and it would mean his own staff as well as client staff. Okay, and he has to direct and supervise his own staff. So in these 2 points, perhaps you will see that there are two different majorly there are two different kinds of people with whom the auditor has to deal with: his own staff. He has to direct them, he has to supervise their work, and he will also have to interact with the, of course, client and his and their staff members. Okay, so the concept of behavioral science is, guys, really very important, one of the essentials for auditor in discharging his duties properly. Okay, then we have statistics and mathematics, probably a subject which many of you might not be liking. You had it last, I think, in CA Foundation. Okay, but then as an auditor, why do we have to have knowledge of statistics, a bit of statistics and mathematics? Always remember, guys, you know why statistics? Because as an auditor, we can't just go with 100% checking every time, right? We have to resort to something called as sampling or test checking. Okay, so how will you draw proper samples from the entire population? So you have to have some knowledge of statistics for that. Okay, now, and when I say data processing, guys, these days, always understand this, most of your clients would be using systems to manage their data, to keep the financial statements, or let's say, the accounting system entirely would be in computers, right? So you have to have basic knowledge of computers. And on top of that, guys, it's not just about the client keeping its financial information in the computer. If you also use computers to do the audit would be better. I mean, let's say for sampling, okay, if you use Excel, if you use some softwares, it would be better than rather than resorting to manual sampling, picking up things randomly, right? So when you use systems for your audit also, it is going to be a better audit. So when I say data processing, it simply means, guys, you have to have working knowledge of EDP. EDP is what? Electronic data processing. So you need to have working knowledge to conduct audit in a effective manner. Remember, guys, two things: that organizations, the clients these days would carry out their financial accounting in systems, number one. Secondly, you can also use systems to do your audit properly. So that is why you have to have knowledge about information systems. You need to know about data processing. Okay, all right. Now, why is FM taught to you? I told you again, guys. Remember, I always say this in my regular classes also, guys, that all the subjects that you have, let's say in your CA intermediate exams, right, in syllabus, you have law, you have taxation, you have costing, you have FM, you have uh, strategic management. Please remember, institute doesn't want us to be expert in all these subjects. They want us to be expert in accounting and auditing. Auditing is one subject which is actually going to be your bread and butter, guys. Okay, but then why are you taught all the other subjects? You are taught all the other subjects specifically, primarily, so that you can do the audit properly. Now, if you don't know Income Tax Act, you would not be able to calculate the provision for income tax, right? If you don't know the basics of mathematics, probably, or statistics, you won't be able to apply sampling technique properly. If you don't know the basics of financial management, you would not be able to understand the financial statements of the entity, because when we get the financial statements to do the audit, we calculate all the important ratios, we compare it with the previous years to see if there is any fluctuation and all, so that if there is a fluctuation, you would devote more attention to those areas during the audit, right? So you have to have a bit of knowledge of the ratios, comparisons, etc. Hence, financial management is also important. So it helps in understanding. Remember, FM will help in understanding and evaluating the financial statements in a better way. And of course, you will be able to do the analytical procedures, the intelligent audit procedures. Okay. We just can't go every time with test of details. Analytical procedure is much intelligent audit procedure. Okay. And economics was also there in your CA foundation, right? So as an auditor, guys, we need to have the basic knowledge of the business and economic activities affecting the client. Like, we need to have the knowledge of as to how the purchases, the sales, all these activities happen in the entity, right? So these are the economic activities with which we should be well versed in, right? So these are the different disciplines or subjects which the auditor should be having knowledge of. And hence, guys, this topic, I mean, it's a very age old topic. I mean, so many times the course has changed over the number of years, right? The syllabus of audit has changed, but this topic is there since almost like 15-20 years, right? They make certain changes, keep on making certain changes in the new syllabus. They have reduced the content, only one line they have given, but then yeah, it is still there in our syllabus, so you should be doing it. Okay, all right. Now we have completed, if you can see, guys, we have actually completed the basics portion. I mean, we have completed introduction to auditing, we have completed the different types of audit, about the auditor, and of course what is the relationship of auditing with other subjects. Okay, now we are actually going to start with the real audit. Okay, so the next topic that you see on your screen, guys, is basically about something about assurance engagement. Okay, now I hope all of you know this, that engagement means work. Okay, engagement means work. And when I say assurance engagement, what does it mean? So in assurance engagement, primarily we are going to understand first the meaning of assurance engagement, and then we are going to cover the different elements of assurance engagement. Okay, so what does assurance engagement mean? Okay, it's a long definition, and I have tried to basically divide it into points in your material also. I mean, if you are following my material, this material, you will see that yeah, the topics basically are given in the form of tables, right? And the definition is again divided in the basically broken down into points for better understanding. Okay, now what does assurance engagement mean? Now, assurance engagement means an engagement. Again, I'm repeating, guys, what does engagement mean? It's a work, okay, which the auditor might be doing. So work in which a practitioner expresses a conclusion. Practitioner is going to express a conclusion. Okay, and it is designed to enhance the degree of confidence of the intended users other than responsible party about the outcome of evaluation or measurement of a subject matter against criteria. Such a technical long definition, right? I'm reading it again, guys. What is assurance engagement? It means an engagement in which a practitioner expresses a conclusion about what? Conclusion which is going to basically enhance the degree of confidence of the intended users. And then about what? About the outcome basically of or evaluation of or measurement of a subject matter against some criteria. So perhaps This is going to be really very confusing. So let's just try and understand the definition in a better manner, guys. Okay, let me take you again back to the our main notes. Yes. Now, first thing, guys, you have to understand that a CA, a chartered accountant, can basically be in practice, or let's say he might join some job and be under employment. And globally, you have to understand that a chartered accountant who is in practice globally is called as, internationally it is called as practitioner. Okay. Now, what is this assurance engagement? Okay, let me just again make you understand. So using this chart, this diagram, so there is something called as responsible party, guys. For the time being, understand responsible party to be the management. Now this responsible party is going to make something called as subject matter. Okay, and this subject matter is going to be there for the intended users. Okay, users of the financial statement. But then there is a problem. How will this intended users trust the subject matter? Because the subject matter has been made by responsible party, right? Imagine it in the form of a company. Responsible party take it as management. Subject matter understand it in the context of financial statements. Now, the management of the company runs the company, and then they are only making the financial statements. So how will the shareholders, intended users, have trust on the financial statements? There's a problem. So now what is going to happen? To resolve this problem, what is going to happen? This responsible party is going to appoint somebody called as a practitioner. That means a chartered accountant in practice. Okay, and this chartered accountant in practice, this practitioner, he is going to evaluate the subject matter against some criteria. He is going to see whether the financial statements are giving true and fair view or not, according to certain criteria. What could be the criteria? Of course, he is going to see whether the financial statements are made as per AS or not, whether they are in conformity with the accounting principles, whether all disclosures are made or not, etc. Right? So he's going to evaluate the subject matter against given criteria, and after he evaluates, he is going to give a conclusion. He is going to give a conclusion on the subject matter, and because of this conclusion, the confidence of the intended users on this subject matter is going to increase. So this diagram perhaps is going to give a good clarity as to, on the definition of assurance engagement. So if I take you back to the definition, let's read it from here only. What is assurance engagement? It means an engagement. It means a work in which practitioner expresses a conclusion. Are we expressing a conclusion? Yes, sir. So practitioner expresses a conclusion. Why? Which is designed to enhance the degree of confidence of intended users. So this conclusion is going to enhance the confidence of the intended user. Okay, so what are we going to conclude on? We are going to conclude about the outcome of evaluation or measurement of a subject matter. So we are just evaluating a subject matter against a given criteria. So this is the technical definition, guys, of assurance engagement, and all of you should be knowing this, that a chartered accountant basically can serve the society in two ways. Either you can be into practice, okay, or you can become a part of any organization by joining the entity as an employee. Okay, all right. So this was the definition, guys, of assurance engagement. I'm reading it again. Let me just go back to my charts, reading it from here. What is assurance engagement? It means an engagement in which a practitioner expresses a conclusion. Practitioner expresses a conclusion. This conclusion is given to enhance the confidence of intended users. So how will the practitioner give this conclusion? He is going to evaluate the subject matter against a given criteria. That's it. Okay, all right. Now, guys, there's one important question that might be asked in the exam from the concept of assurance engagement, and this is basically, what are the elements of assurance engagement? It's a new topic, was not there in the old course, but it's an important one, right? So what are the elements of a assurance engagement? Please remember, guys, we have 5 elements of an assurance engagement. Okay, number one, basically there has to be 3-party relationship. 3 parties. Now, if you see the diagram, if you again, if I take you back to the diagram here, how many parties do you see in the diagram, guys? We have responsible party, number 1. We have the practitioner, number 2, and we have the intended users also. So it's a 3-party relationships, guys. Always remember, assurance engagement, the first element basically is what? That it is a 3-party relationship. Who are the 3 parties I have mentioned? Practitioner. What does a practitioner do? Of course, sir, he is going to provide assurance. He is the provider of assurance. Second, responsible party. What is responsible party? What do the responsible party do? Basically, they are the preparer of the subject matter. They basically prepare, let's say, the financial statements. Okay, and who are the intended users? They are basically the decision makers, on the basis of which they are going to, on the basis of some subject matter, guys, they are going to take decisions. So intended users, guys, can be shareholders, it can be the bankers, it can be the government, etc. Okay, so number one element of assurance engagement is basically it's a three-party relationship. Okay, then we have to have something called as appropriate subject matter. Now, what is subject matter? Subject matter is the information which the practitioner is going to examine. Okay, so information which is examined by the practitioner. It could be a financial statement also, right? Okay. Third, suitable criteria. Guys, understand the practitioner is going to evaluate the subject matter against some criteria. So what are criteria? Criteria is nothing but a benchmark. It is a benchmark which is used to evaluate subject matter. It could be anything, guys. It can be the standards. I told you whether the financial statements are prepared in accordance with the accounting standards or not. It could be the laws. It could be regulations. Okay. So I will have to check all those things. So this is the meaning of the word criteria. Okay. Next, guys, sufficient and appropriate audit evidence. What does this mean? It simply means, guys, the practitioner will gather evidence to form conclusion and opinion. And what kind of evidence he is going to gather? All of you know this, that he has to gather sufficient and appropriate evidence. And when I say sufficient, sufficient means quantity, and appropriateness is, of course, there is a mistake in the spelling. Anyways, appropriateness means what? Quality. Okay. Anyways, and then finally what happens, guys, after gathering evidence, ultimately the practitioner is going to give an assurance report. So assurance report is nothing but outcome of the entire assurance engagement, and these are basically conclusions given by the auditor about the subject matter. So remember this very important question, guys. What are the elements of an assurance engagement? We have 5 elements, guys. What are the 5 elements? Again, I'm repeating. Number one, three-party relationships. Who are the three parties? Practitioner, uh, responsible party, intended users. Then there has to be something called a subject matter, then a criteria. After this, by applying criteria, the auditor is going to gather evidence. He has to gather sufficient and appropriate evidence, on the basis of which he is going to give his assurance report, written assurance report. That's it. Okay, so these are the elements of an assurance engagement. Now if you see with this, guys, the concept of assurance engagement is over. Okay, now the most important part, okay, and perhaps this is something which we are going to do in the entire subject of auditing. We have to do so many standards, right? So first let us understand the basics of these standards. We have a topic, if you can see, engagement standard basics. So I'm going to teach you here what would be the different engagement standards, and then towards the end of this chapter, guys, we are going to cover one standard, which is SA 200. Okay, so what is engagement standard? Let's go with the basics. First thing is, I would want you to understand the different types of engagement standards. But before this, again, let me take you back to the main notes, guys. And while I was taking my regular sessions, I remember, guys, I made this diagram, right? That a chartered accountant, just to make you revise, a chartered accountant can either serve the society as a practitioner, or he may be in some job. And if he is into practice, guys, okay, he may render two types of services. He may give two types of services. What are the two types of services? Either assurance engagement, the definition we just covered. Okay, assurance engagement is an engagement in which auditor gives some level of assurance, okay, to the users. And there can be other works also, guys, wherein we don't give any assurance. Okay, it is basically called as other related services. Here we don't give any assurance. Now, for example, if the company has asked us to compile the financial statements, if the company has asked us to represent their case with the income tax department, here we are not giving any assurance. Okay, we are just doing their work, let's say. So this will be called as other related services. Now, under assurance engagement, I hope this is clear to everyone. Okay, going back to the chart. Okay, yeah, so if I tell you what are the different engagement standards, okay, now you have to see, we'll discuss this with respect to the types of work that an auditor can do. So I told you that there are two types of services which a practitioner can render to the society. One is assurance service, and the second one is non-assurance services or related services. Okay, now under assurance service, now assurance service means a service wherein I'm giving some form of assurance. If the subject matter is historical financial statements, Historical financial statements means what? Things which have already happened. Okay, so if I am let's say auditing the financial statements of 31st March 2023, things which have already happened, it's a historical financial statement. Okay, so if my subject matter is historical financial statements, now I have to see, and when I verify the historical financial statements, if I'm giving reasonable assurance, if I'm giving reasonable assurance, it would be called as audit. If, however, I am giving only moderate or limited level of assurance, it would be called as review. Okay, I hope you understand this. Guys, what is reasonable level of assurance? Reasonable level of assurance means it's a high level of assurance, but it does not amount to absolute assurance. We don't give 100% guarantee even if we do the audit that the financial statements are giving true and fair view. We only give reasonable assurance. Let's say 70-80% we feel that the financial statements are giving true and fair view. Again, I'm repeating this. Reasonable assurance means high level of assurance, but it is not an absolute assurance, right? What does moderate level of assurance means? Moderate level, of course, limited assurance. It's also, guys, I can say a moderate level of assurance, but not a high assurance. Okay, as compared to audit, we don't give a very high assurance in review. Now the thing is, guys, so if you are doing the work of audit, if you are doing the audit, you have to follow. We are on the topic of engagement standard types. So you have to follow which standard? All of you know this. You have to follow standards on auditing. If, however, you are doing the work of review, in very layman's terms, I always see reviews like younger brother of audit. In review, we don't check things in as much detail as we do it in audit. Like in audit, we will assess the accounting and the internal control system in detail, and in review we don't do all such things. Okay, like for example, review might be just for the quarterly financial statements of a listed entity, so we would just check whether the financial statements are accurate, etc., right? So review is like checking less things. It's not done in as much detail as we do it in audit. It's like a younger brother of audit, right? So when you're doing the work of review, you have to follow standards, which is basically review engagement, standards on review engagement. Now in your intermediate level, guys, syllabus, we have standards on auditing in our course, standards on review engagement, and other standards are a part of CA final curriculum. Okay, now if the subject matter happens to be other than historical financial statement, let's say it could be a prospective financial statements, that means things which has not happened yet. Okay, so in that case, guys, anyways, we can't give reasonable assurance, we can't give absolute assurance. We are auditors, guys, we are not astrologers. We can't give reasonable assurance that this will happen. We can't give, of course, forget about the absolute assurance, we can't even give reasonable assurance that these things are going to happen in future. We can only give moderate assurance here. Okay, and remember, guys, when we are giving moderate level of assurance on a subject matter which is other than historical financial statements, so this type of work is called as assurance. Okay, institute perhaps couldn't find any other word, so they have given the word assurance only, right? And if you're doing such kind of work, you have to follow standards on assurance engagement. We call it as SAE. Okay, and finally, guys, I told you we as chartered accountants, we can also indulge in other things. I mean, wherein other activities, other services, wherein we don't have to give any assurance. For example, guys, it could be, let's say we are compiling the financial statements, we are doing some agreed upon procedures, etc. So remember this, that we have related services or non-assurance services wherein we don't give any services, no assurance, sorry, we don't give any assurance. So this type of work is called as related services, and the standard that we have to follow is basically standards on related services. So these are the 4 different types of standards, and collectively, guys, always remember, collectively these 4 standards are called as engagement standards. Okay, now I want you to write in the chat box or in the comment section, guys, do you know that apart from these 4 standards, apart from these 4 engagement standards, guys, do we have any other standard? Yes, I want an answer, guys, in the chat box, please. SQC, yes, right. So please remember, guys, engagement standards, when I say engagement standards, these 4 standards are collectively called as engagement standards. But you have to remember, guys, that if you're giving any of these services, you have to apply standards on quality control, SQC. SQCs are to be applied for all the services covered by the engagement standards. Okay, so generally what happens is engagement standards are these four, and whenever you're giving any of these four services, I mean, let's say whether you're doing audit or review, or you're giving assurance services or any other related services, you have to ensure quality when you're doing the work. So we have a separate standard on quality control that also has to be followed. Okay, all right. Now, again guys, very theoretical and very basic topics. Why do you think these standards are needed, guys? Number one thing, okay, I just want to ask you again, if I am an auditor, okay, I'm doing the audit of the financial statements. Number one, are standards on auditing mandatory to be followed? Yes or no? Do you think these standards are mandatory? Yes, these standards are mandatory. They have to be followed, right? Okay. So let's understand, guys, why standards are needed first. We have certain points, guys. See, it's very simple, guys. When you follow the standards while you're doing the audit, it ensures consistency with global practices. I mean, understand this, the standards that we have, right, the standards that we have in our course, they have been adopted by the international standards, guys. So when we follow the standards, we are actually following, we are actually I can say, which we are actually being consistent with the global practices, things which are followed globally. So the number one advantage, I mean, as to why standards are needed, is basically to ensure consistency with the global practices. Okay, next is basically, guys, if I follow standards and do the audit, it is going to enhance the quality of the financial reporting. Now please understand, okay, enhances quality of financial reporting, guys. The topic says why standards are needed. Okay, so standards can be auditing standards, standards can be accounting standards also. Okay, who is supposed to comply with the requirements of accounting standards? The management, right? Now if management follows AS or Ind AS properly, and then they make the financial statements, the reliability, the quality of the financial statements, financial reporting enhances. Okay, so enhances quality of financial reporting. Okay, and please understand, again, it ensures that promotion of uniformity. Again, all the auditors, if you follow standards on auditing, they can audit in a uniform manner. Like for example, if I am an auditor, there is one more auditor auditing a different company, so because of things mentioned in the standard, he is also going to verify inventory in the same manner. Let's say physical verification of the inventory in the same manner as I do, because we both are following, let's say, SA 501. So it ensures what? Uniformity. Okay, then I think this is not required, guys. Okay, let me, this is an old thing. Okay, we have 4 points. Okay, numbering you just corrected, 4 and 5. Okay, so again, standards provide professionals with knowledge and skills. Okay, so when you learn the standards, when you read the standards, guys, when you're taught the standards, of course it enhances your knowledge, it gives you the necessary skills to do the audit properly. And again, overall audit quality is going to increase, assurance of audit quality. Now please be very careful, guys, about point 2 and point number 5. I mean, there is a mistake. This should have been point number 5. Okay, anyways, so what is the difference between this and this? Point 2 says enhances quality of financial reporting. Okay, that means, okay, of course, when you do a better audit, guys, there would be better financial reporting, the users will be able to take better decisions. Okay, so anyways, the points are very simple: consistency with global practices, uniformity, enhances quality of financial reporting. Then we have assurance of audit quality, and it provides the professionals with the knowledge and the skills. Okay, all right. Now the last topic with respect to engagement standard basics, very theoretical, I know, nothing much to explain here. Okay, duties on in relation. Okay, again, duties in relation to standards. What are the duties of auditors with respect to standards? Okay, all of you know this, that we have to mandatory follow the established standards. Okay, and these standards, what happens, guys, in these standards, all of you have studied so many standards already, right? So you know that these standards will tell us procedures. There would be procedures mentioned to obtain sufficient appropriate audit evidence, right? So we have to follow these established standards. But sometimes, guys, what is mentioned in the standard might not be very much effective. Okay, we might, let's say, not be able to do it. So in that case, you have to perform alternative procedures, and when you perform alternative procedures, you have to document also what alternative procedures you perform. And whenever you are departing from any of the requirements of the standards, guys, you have to also document reasons for departure. Okay, anyways, not very important. So these are our duties with respect to standards. Okay, and if you see, guys, with this we have covered the basics, we have covered the preliminary part, the fundamentals, before actually we can start with a particular standard. We have covered the different types of engagement standards, we have covered as to why standards are needed, and also we have covered what are the duties of an auditor in relation to standards. Okay, now the time has come that yes, we are in a position, guys, to go ahead with this standard. And as a part of our chapter number 1, okay, I would be covering one standard, SA 200, so which happens to be a very important one from CA intermediates perspective. So let us now quickly understand SA 200. Okay, now if you see SA 200, what is the name of the standard, guys? Overall objectives of the independent auditor. I'm repeating the name, I'm reading it slowly. Overall objectives of the independent auditor and the conduct of audit in accordance with standards on auditing. Okay, so here, guys, in this topic we are going to primarily learn about three different things. We are first going to cover what are the objectives of an independent auditor, and then we are going to cover the different requirements of SA 200, and towards the end we'll conclude chapter number 1 by reading the topic as to what are the inherent limitations of audit. Okay, so let's understand, very simple, guys, what are the objectives of an independent auditor? All of you know this. Okay, number 1, to obtain reasonable assurance. We are only going to have reasonable assurance that financial statements are free from material misstatements. Okay, we are going to obtain reasonable assurance. Okay, that financial statements are free from material misstatement, so as to enable the auditor to express an opinion that financial statements are prepared as per applicable FRF. Okay, so guys, all of you know this, in audit we only obtain reasonable assurance. What kind of reasonable assurance? That financial statements are free from material misstatement. Why would be needing such assurance? So as to enable the auditor to express an opinion, so that ultimately we can give an opinion that financial statements are giving true and fair view. That means the financial statements are prepared in accordance with the applicable FRF. Okay, so this is first objective. But then our objective doesn't end here, guys. After doing this, you all know that we have to give written assurance reports, right? So we have a point to report on the financial statements. The report on the financial statements, we are going to give a report, and this report is going to serve as a communication, guys, and communicate as required by standards on auditing. Okay, so this is the objective of independent auditor. Again, guys, to obtain number 1, reasonable assurance that financial statements are free from material misstatements. Okay, and why would he obtain reasonable assurance? So that it enables the auditor to express an opinion on the financial statements, whether the financial statements have been prepared in accordance with the applicable FRF, and finally to report. Okay, now I hope, guys, all of you know this, that reasonable assurance is different from absolute assurance. Absolute assurance means 100% guarantee that financial statements are free from material misstatements. In audit, we never give 100% guarantee. We only give reasonable assurance. Repeating it again, reasonable assurance is not complete guarantee. It doesn't mean absolute assurance. Okay. Remember, reasonable assurance is a high level of assurance, but it does not amount to absolute assurance. Okay. Now, we have to give reasonable assurance that financial statements are free from material misstatements. Now, all of you must be very familiar with these words now, but still, just for your sake of revision, guys, misstatements could arise either because of fraud or error. Misstatements means anything which is, let's say, not in conformity with the accounting standards. Okay, so we have to see whether the financial statements are free from material misstatements. And finally, if you can see the second basically objective, the opinion that we have framed is basically required to be reported and communicated. We have to communicate in accordance with the standards on auditing. All of you know this, that the report has to be written audit report. Done. First part of the topic, objectives of independent auditor, is already over. Okay, now, if you remember, I told you I'm going back to the main master chart of chapter number 1. If you see that, in the introduction to auditing part, guys, we had this topic, objectives of audit. I told you you'll be able to understand it better when we, go through the topic of, let's say, essay 200. Okay, so we have covered objectives of audit in the chapter of in the topic of essay 200 already, but then here also I made you read through this concept that whenever we express our opinion, it should not be considered as an assurance to the future viability of the enterprise, nor the effectiveness or efficiency with which management has conducted the affairs of the enterprise. Okay, all right, let's go back to essay 200. Fine. So objective of independent auditor is done, guys. Let us now understand the requirements of essay 200. And all of you know this, that we have got 5 requirements of essay 200, guys. What are the 5 requirements? Let us first quickly go through the names. If you can see on the screen, we have got 5 requirements. Number 1, ethical requirements, then professional skepticism, then something called as professional judgment, sufficient and appropriate audit evidence, and finally the conduct of audit in accordance with standards on audit. Okay, now what is meant by ethical requirement, guys? All of you know this. Auditor shall comply with the relevant ethical requirements including independence, and he is required to comply with code of ethics issued by ICA. All of you know this, that we as auditors, we have to follow certain as chartered accountants, we have to follow certain code of ethics which is issued by ICI. Okay, and as a part of ethical requirements, I should also remain independent, guys. And independence, all of you know this again, that it comprises both independence of mind and independence of appearance. I should be independent from my mind, and I should appear also to be independent in the eyes of third parties. With respect to independence, we are going to cover more in another chapter. Okay, but then, guys, I told you that the auditor is required to comply with the code of ethics. Okay, so if you remember, guys, what are the 5 fundamental things that we have to comply with? Okay, so let's understand the fundamental principles that we have to apply, we have to comply basically. Okay, so if you can see, we have got 5 ethical requirements: integrity, objectivity, professional competence and due care, then we have confidentiality, and we have professional behavior. Okay, let us just quickly go through these words. If you are able to recall, what does integrity mean, guys? Integrity means that the auditor has to be honest, straightforward. When I say objectivity, objectivity means the auditor has to be impartial, he has to be unbiased. Okay, professional competence and due care means that you have to be professionally competent. If you are sending any of your staff members to do the audit, he must be competent, he must have the necessary knowledge and skill. We as auditors, we always need to keep ourselves updated with the latest changes and all. So this is what is meant by professional competence and due care. Okay, now, fourth ethical requirement is confidentiality, guys. Confidentiality means what? That during the course of our audit, we might come across a lot of information of our client. Okay, so we are not just going to go and disclose this information to any random person. We have to maintain confidentiality. Okay, however, there are certain exceptions. For example, if I am bound by some legal or professional responsibilities, then of course I'll have to disclose the information. Or it may be so that I take permission from the client, that client, Mr. Client, I like your internal controls, I have a seminar to speak about internal controls, can I quote your example there in the seminar? So I can take the permission, and if the client allows, I can basically use the information. So confidentiality, this is the ethical requirement. And next is, guys, professional behavior. Now when I say professional behavior simply means that we have to be we have to have a professional relationship with our clients. It can't be an emotional relationship. I mean, let's say, our client is asking us, sir, due to COVID, our sales has gone down, and this year we did not do much business. Sir, this year, please take 5,000 rupees as fees. We have been giving you 20,000. Please, sir, take 5,000. Now, if you agree to this, guys, probably it might impact the quality of your audit. So we shouldn't be, uh, you know, uh, much based on the emotional relationship, but yeah, our relationship with our client has to be a professional one. We should not indulge ourselves in any such things which is going to bring disrepute to our profession, to the institute. Okay, so guys, yes, when I talk about ethical requirements, always remember that the fundamental principles. What are the fundamental principles? Again, I'm repeating: integrity, objectivity, professional competence and due care, confidentiality, and finally we have professional behavior. Okay, all right. Now, so ethical requirements also we would discuss about independence also here. Again, I'm repeating, guys, independence has to be there, right? Of course, in audit, it is one of the basic requirement. And as an auditor, I have to be independent in from my perspective. I mean, as a state of my mind, and also I have to appear to be independent in the eyes of third parties. We are going to cover this later in the upcoming chapter, guys. Okay. All right. So first requirement of SA 200, ethical requirement, is over. Next again is professional skepticism. Now, what does this mean? Now, professional skepticism, what I've done is we are going to understand the meaning of professional skepticism, and we are going to understand few examples or circumstances where we should always be alert, or you should switch on your professional skepticism antenna or radar. Okay, so what is professional skepticism, guys? Professional skepticism basically is an attitude of the auditor due to which he remains alert. You have to be vigilant for possible misstatements in the financial statement. So it's basically, guys, it's a mindset of the auditor. Okay, and it's like, you can say that the auditor must be having a questioning mind, but that doesn't mean that you are going to doubt every time on your client. You are going to look into your client with the eyes of suspicion. No, it doesn't mean that. But yes, it simply means that you have to remain alert throughout the audit. Okay, so it is an attitude. Please remember the word. It is an attitude of the auditor due to which he remains alert for the possibility of misstatements in the financial statements. You have to have a questioning mind always. It shouldn't happen that the client comes and gives you anything and you just trust it. I'm not saying you are going to look at the document with suspicion, but then you have to be alert. It shouldn't happen that the client takes advantage of us. Okay, all right. So it is an attitude of the auditor due to which he has to remain alert. Okay, it's basically attitude which includes a questioning mind. Okay, for any possible misstatements in the financial statement. Now, there can be important question which can be asked from this part. As to, they will ask you what is professional skepticism, and then they'll ask you certain examples or situations where you have to be alert. Okay, you have to exercise more vigilance, let's say. So let's understand few examples. Very simple, guys. If you come across some contradictory audit evidence, let's say management has asked you, has given some other information, and through documents you got to know something else. There is a contradictory thing which has happened. So in this case, of course, you have to be more alert. Second, if you come across any conditions which indicate possibility of fraud, then of course you have to be more alert. Okay. Third, let's say you had asked management for something, they have given you a reply or they have answered to your question. So in that case, probably if you have doubts on the reliability of the documents which they have given, or if you have doubts on the responses which they have given to you, probably, of course, then you'll have to be more alert. And guys, sometimes I told you that it is not possible for us to, see, the standards on auditing mentions the audit procedures, right? But then there is a case, there is a situation wherein you have to perform some more procedures other than what is mentioned in the standards on auditing. If you feel you have to obtain, you have to get more evidences so that the evidence becomes sufficient and appropriate. If you have to do extra procedures other than what is mentioned in the standards on auditing, that means it's a critical area. You have to be alert. So the point says circumstances suggesting the need for audit procedures in addition to those required by standards on auditing. So always remember, guys, these four examples. Okay. All right. Next is professional judgment. What does professional judgment mean, guys? Again, we are going to understand the meaning and some situations wherein the auditor has to exercise professional judgment. So let's go with the meaning, guys. What is the meaning of professional judgment? It says during the course of audit, the auditor makes judgments in various situations. See, always remember, guys, we are not going to take or make decisions during the course of our audit on the basis of our intuition. It's not like let's toss a coin. If head comes, I'm going to apply this procedure. If tail comes, I'm not going to apply any procedure. We don't make decisions in this random way, right? Our decisions should always be backed by three things: E, K, and T: experience, knowledge, and training base. So the point says our decisions, our judgments should always be based on our experience, knowledge, and training. This is what is meant by professional judgment. Okay. And if you have covered audit, guys, you must have by now, you must be knowing that in so many different areas the auditor has to exercise professional judgment. So we are just going to understand few situations. When you plan and perform the audit, guys, you have to have, you have to exercise professional judgment. When you're determining materiality, Maternity, when you're determining the maternity amounts, etc., then it's a matter of professional judgment. Again, what audit risk is acceptable to you, it's a matter of professional judgment. How much procedures are you going to apply? What kind of procedures are you going to apply? So the nature, timing, extent of audit procedures to be applied, again, it's a matter of professional judgment. Upon applying the audit procedures, have you obtained sufficient and appropriate audit evidence or not? Again, it's a matter of professional judgment. So guys, there's so much, I mean, everywhere, every decision, of course, so many decisions we have to take during audit, so it requires the application of professional judgment. The conclusions that we draw, again, it is a matter of professional judgment on the basis of evidence that we have obtained. So you already know so many different situations or examples wherein professional judgment is required. Okay, all right. Now the next is, guys, as a fourth requirement of SA 200, you have to obtain sufficient and appropriate audit evidence. What does it mean, guys? All of you know this. Sufficiency means quantity, and when I say appropriate, it means quality. You have to obtain both, I mean, sufficient and appropriate audit evidence. And finally, guys, I've been telling you this, that standards on auditing are mandatory, right? So conducting of an audit, it has to be done in accordance with standards on auditing. What does it mean, guys? Auditor shall comply. See the word, auditor shall comply with all essays which are relevant to audit. Okay, so I have to comply, mandatory, all the standards which are relevant to the audit. Now, guys, it might so happen that sometimes the entire standard is not relevant. Now, a good example which comes into my mind is, let's say, SA 501. 501 talks about three things: inventory, the existence and condition of inventory, litigation and claims, and third is segment reporting. Now, for example, the client doesn't have inventory, so 501 is applicable. Let's say they have litigation, or let's say any one part. So it doesn't mean that 501 is going to be applicable in entirety. Only relevant portion will be applicable. So please remember first 2 points. First point says auditor shall comply with all essays relevant to the audit and follow only relevant portion of standard if the entire standard is not applicable. Okay, and I told you this already, guys. If you are, if sometimes what happens, the procedures mentioned in the standard might not be effective, you might wish to deviate, so in that case you will have to perform alternative audit procedures. And if there is any deviation, guys, you will also have to document the reasons for deviation, right? So this is conduct of an audit in accordance with standards on auditing, right? So yes, we have quickly covered the different requirements of SA 200. What are the 5 requirements, guys? Again, ethical requirements, professional skepticism, professional judgment, sufficient and appropriate audit evidence, and conduct of audit in accordance with standards on auditing. Okay, now we are going to conclude the first chapter, with the topic of inherent limitations of audit. Inherent limitations of audit. Now, what is inherent limitation? First, understand this. Inherent means something which is there with the subject since the inception of the subject. I mean, since the inception of the profession of auditing, these limitations are there. This is something which is inherent, which is ingrained. It can't be separated. The limitations will always be there. So these are called as inherent limitations of audit. Okay, now remember this, guys, that due to these inherent limitations of audit that we are going to cover, auditor is only able to give reasonable assurance. He can't give absolute assurance. Because of these inherent limitations of audit, auditor is only, let's say, he can't bring down the audit risk to zero. He can only bring it down to an acceptably low level. Okay, so what are those inherent limitations of audit? Let's just quickly go through it. Now, if you can see, we have got primarily 4, or rather 3 only, I should be saying. We have got 3 primarily prime limitations of audit. Okay, what are those? Number 1, nature of financial reporting. Nature of financial reporting, not in our hands, I mean the auditor's hand, but the financial statements which the management makes has some limitations, because of which we can't give 100% assurance. What are those limitations of the financial reporting? Nature of financial reporting, it says preparation of financial statements involves judgment by management. So management only is using judgments. Okay, they use a lot of accounting estimates, and in accounting estimates a lot of subjectivity is involved. It's not an objective assessment, it's a subjective thing. Management feels that this must be the amount of bad debt, and accordingly they have made it. So there is always, remember, guys, our financial statements also, whatever transactions, whatever items you see as a part of your P&L balance sheet, some of them are merely based on estimates and judgments of the management. Okay, there is no there is no proper amount, okay, that can be determined through some underlying document and all. If I ask management, hey, why did you make provision for doubtful debts as this much? We feel that this debtor is not going to pay. I mean, of course, they have some reasons, but it's totally based on estimates, judgments. What if in the next year he pays, right? So please remember the nature of financial reporting. Remember three words. Financial statements preparation would involve management's judgment. It would include estimates, and all these things are very much subjective in nature. Okay, all right. Next is nature of audit procedure. Now, in this part, we are going to discuss about limitations from our end. Okay, things which is there from our end. So, nature of audit procedure, if you see, it says, guys, number one, most of the audit evidence that we gather is persuasive in nature rather than conclusive. Now, what does it mean, guys? Conclusive, as in we don't have a concrete proof. The evidences that we obtain is more of persuasive in nature. Okay. Now, for this, if you are able to recall in my regular classes, also I give this example, right? Let's say there's one sale transaction which I've picked up. Okay, that sale transaction happened, let's say, towards the end of the financial year, around 25th, 26th of March. It's a big amount. Let's say 50 lakh sale transaction. One sale transaction amounting to 50 lakh rupees. Now, when I saw the transaction, the details of the transaction, I saw that the transaction has been made to the subsidiary company. The holding company has made the sales transaction to the subsidiary company. Now, immediately, my professional skepticism antenna, I mean, I was super alert. I felt that this must be a bogus transaction. Maybe the holding company has done this transaction just to show inflated sales, just to show that they have, have grown from the previous year. 50 lakhs is a big amount. So I asked management about with respect to the documents. I told management, I feel it's a bogus transaction. Management was like, sir, what are you saying? We have all the proofs and documents. So the number one thing that they gave me was, let's say, they showed me the invoice. See, we have the valid invoice. So I was like, hey, invoice, you have only made it, right? How will I believe? So then they told me, okay, sir, invoice is an internal document. So we'll give you a purchase order. We'll give you the copy of purchase order, which we received from the subsidiary company. So it's an external document, right? Yeah, it's an external document. But then the subsidiary company belongs to you only, right? They are going to do anything what you say. So purchase order also, I'm not very much happy with the purchase order. Then the management of holding company, they give me 10 more evidences. They show me the transporter's challan. They show me, let's say, that the security guards register that goods actually went out of their factory. The goods have actually gone out from the holding company's premises to the subsidiary company's premises. All these documents they show me. Okay, and then again, guys, I feel that it is a bogus transaction, and maybe in the next year they are going to do a sales return transaction. But then what is going to happen? Even if I know it that it's a, I mean, they have given all the proofs and the proofs are genuine. I mean, I can't just say that it is because of my intuition. I feel that the sales transaction will be reversed next year. It has been merely done to inflate the sales. I can't do this. I can't give a qualified opinion in this case. So what has happened? Despite my audit procedures, I am only getting persuasive evidence. I mean, most of the evidences that I obtain is persuasive rather than conclusive. Okay, in the next year when I went to the audit for the audit again, probably the management told me, yeah sir, the subsidiary company did not like the quality of the goods that we had sent, and hence it's a sales return now. So I knew it from the beginning, but then I can't qualify my opinion right here because they have given all the necessary evidences. They have shown me the invoice. They have asked me to see the GST returns. They have given me the copy of purchase order. They have, gave me the bank statement also that they have actually got the payment from the subsidiary company. They have shown me the transporter's challan. They have shown me the security register. So many documents they have already shown. And of course, I can't just give a qualified opinion here, right? Anyways, number one is that we are talking about the nature of audit procedure. So number one is most of the audit evidence that we obtain is persuasive, guys, rather than conclusive. And management TCWG might not provide us complete information. What if some transactions are omitted? We won't even get to know about it. Okay. And if, let's say, management has indulged in some fraud, we might not be able to detect that also, guys. See, our work is to see whether the financial statements are giving true and fair view. We don't have the investigatory powers and all. Okay. All right. Next is, guys, limitation with respect to time and cost. All of you know this. that we just can't do one particular audit of a financial year for 3 years, right? We have to complete the audit, we have to give the audited financial statements to the management. Thereafter, the management is going to share the audited financial statements with the shareholders at least 21 clear days before the AGM, and then it will be presented, adopted in the AGM, right? So we have a timeline, guys, before which we have to complete the audit, and hence, because of this limitation with respect to time and cost, we resort to something called as test checking. We can't do 100% checking, guys, and we would want to focus on those areas wherein which is more risky in terms of misstatements. Okay, so we don't resort to 100% checking, we do something called as test checking, we go for sampling. Okay, this is one limitation and of audit. Okay, and with respect to others, we have, guys, we can't comment about the future things which might happen. Okay, maybe the company is doing really well now, but next year, because of, let's say, COVID lockdown, the company has shut down its operation, so we could have not anticipated this, right? So another limitation of inherent limitation of audit is that we can't predict the future events, etc. And again, let me tell you this, guys, in the nature of audit procedure, you can write one more point also, that we don't have investigatory powers, hence we can't, I mean, even if we do the audit, we there might be cases wherein we are not able to uncover the fraud which management has basically perpetrated. So this is one more limitation of our audit procedures, right? Okay, so with this, guys, the inherent limitations of audit is complete. Again, let me just repeat, what are the four inherent limitations that you have to keep in mind? Number one is nature of financial reporting. Second is nature of audit procedures. Third is limitation with respect to time and cost. And the fourth is basically others. In others, you can write about future events, you can write about the going concern aspect, you can write that, of course, audit is not an investigation also. Okay, all right, now if you see, guys, with this, I'm going back to the master chart. We have completed the entire revision of chapter number 1. Okay, fine. Now we shall be starting with chapter number 11, which is ethics and terms of audit engagement. Ethics and terms of audit engagement. And here also, if you can see, guys, I have divided the chapter into 4 parts. Primarily, we shall be learning about the basics of the word ethics. We shall be learning about independence. We shall be learning about professional skepticism, though we have already covered professional skepticism as a part of SA 200. Okay, and then we have 3 different standards to cover. SA 210, we shall be covering SQC 1 and also SA 220. So this is the agenda for chapter number 11. Okay, so let's start quickly, guys, with the basics. And under the basics portion, what all things do we have to cover? Let's check. So yeah, we are going to cover, I told you, 3 topics primarily. One is about ethics, and then we are going to learn about the concept of independence and professional skepticism. Okay, so what all things do we have to cover in the concept of ethics? Number one is the meaning, then why is ethics required, what is the need, what are the 2 approaches of ethics, and what are the fundamental principles. Again something which we have covered in SA 200. Okay, so what does ethics means, guys? Ethics, simply, if I put it, is basically the moral principles which, govern a person's behavior. Okay, should be governed. Okay, the spelling is mistake. Is a mistake. So moral principles which govern a person's behavior, and it's a state of mind to act and perform in accordance with the moral principles. Okay, so basically, ethics is what, guys? Ethics is a science of morals in human conduct. It basically, these moral principles and rules of conduct are something which, impose obligations upon the individual. Okay, so in very simple terms, guys, it's a branch of knowledge, I can say, that deals with moral principles. Okay, so what is ethics? Remember the word moral principles. And ethics, guys, is something which comes from an individual intrinsically. Okay, from within. It has to be inculcated in his habit, as a part of his temperament, etc. Okay, so this is what ethics is meant. Okay, now very simply, if I put, ethics means, guys, we have to keep the decisions, we have to take decisions keeping the public in mind, okay, rather than looking in only for some personal gains. Okay, so this is basically what ethics means. All right, now why do we need ethics? Remember guys, it's not just the auditor who needs ethics. If you are unethical, I mean, of course the shareholders will not be able to have confidence in our audit report. And it's not just the auditors who need ethics. Ethics is something which is required to be followed by different professionals. Like lawyers also have to follow ethics. The experts from the medicine field also have to be ethical. Okay, so the point is, in very layman's terms again guys, ethics means, it is something which is rooted to morality, emphasizing that, we have to prioritize the good of the public rather than focusing on our self basically profits or good. Okay, so what is the need of ethics? It says again guys, ethics emphasizes need for individuals to prioritize public good over personal gains. So please understand this. If you follow ethics, okay, you have to basically, it emphasizes what? It emphasizes on public benefits more over your personal gains. And it is very much crucial. Ethics is needed. It is very much crucial in increasing, in boosting the confidence of stakeholders. And it's not just restricted to the field of auditing guys. Ethics is required in the field of auditing, in the field of law, medicine, etc. Okay, all right. Now when I talk about ethics, guys, first I'll tell you about again the fundamental principles. I told you, as chartered accountant also we have to follow certain ethics. Okay, whether we are in practice or in service, we have to follow some ethical behavior which is outlined in the code of conduct given by ICA. And as per that code of conduct guys, I mean, if we don't follow those ethical requirements, we might be subject to some disciplinary actions. Okay, and in my regular lectures also I've told you that, you might even be removed from the list of members. Okay, so we'll learn about the different different basically requirements of ethics, different violations that can happen when you are in the CA final level. But for the timing guys, you have to remember that what could be the fundamental principles again of the ethics. You have to remember the 5 points which we already covered as a part of SA 200. In our ICA material it is given here, but I made you cover it as a part of SA 200. So what are the fundamental principles of professional ethics? Again guys, integrity, objectivity, professional competence and due care, confidentiality and professional behavior. Let us just quickly go through the words again. When I say integrity means what guys? You have to understand integrity means two things: straightforward and honest. When I say objectivity, please understand that you have to be unbiased. You can't be basically partial. You have to have an impartial consideration towards everything. When I say professional competence and due care, what does it mean? Professional competence and due care means you have to maintain basically professional knowledge and skill. You have to keep yourself updated. Okay, the staff members that you send for the audit, they have to be competent as well. When I say confidentiality, it simply means guys that during the course of your audit, you will acquire a lot of information about your client. So you should not be disclosing those information to any third party. However, such confidential information may be disclosed when it is required by law, or if your client expressly permits you that, okay, yeah, you can use this as an example, or you can disclose this information. Okay, and when I say professional behavior guys, it requires that we as chartered accountants, we comply with the relevant laws and regulations. We should avoid basically any conduct, doing of anything which brings disrepute to our profession. That's it. So these are the 5 ethical requirements that we have to comply with. It's mandatory. It's a part of our code of conduct. Okay, now there's one topic guys you have to understand. When I talk about again the basics of ethics, there are 2 different approaches of ethics. Okay, what are the 2 different approaches? One is principle based approach and the second one is rule based approach. What are the 2 different approaches? Principle based and rule based approach. Now principle based approach, if I say, is basically it focuses on the spirit of ethics. I mean, it's a broader concept. It requires professional judgment, it requires knowledge, it requires expertise to make ethical decisions in different situations. Okay, there are no fixed rules, regulations written here, but on the basis of the circumstances, on the basis of your knowledge, your expertise and your professional judgment, you are going to make or take decisions. Okay, and of course it encourages professionals to be flexible, and have a thoughtful approach, and considering the unique aspects, unique things that might happen in each circumstances, you have to take decisions. So please remember, principle based is approach of ethics is based on our experience, on the basis of our knowledge, on the basis of, let's say, our judgment, professional judgment. There are no set rules and regulations here. So depending on the circumstances, you are going to take decisions. This is principle based approach of ethics, and it's a broader concept, guys. On the other hand, we have rules based approach. What is rules based approach? There will be strict rules and regulations, and in order to be ethical, you have to see whether compliance with those rules are done or not. So rule based approach of ethics basically is based on what, strict, or let's say established rules, and there is clear guidelines. If you do this, it's ethical. If you don't do this, it's unethical. Okay, so it provides clear guidelines, and it might lack flexibility because you just have to follow the rules. Okay, now for example, there is a rule. Let's say, I'm just giving you a hypothetical example. As per some uh, let's say, as per the rules of some society, I'm talking about some ancient rules. Let's say lying is unethical. To tell lies, let's say, it's unethical. But then let's say I lied that for someone's good. Okay, sometimes we have to lie, let's say, but it's not going to harm anyone, it's for the good of something, good of someone. So but then if I follow the rules, as per the rules, whether you're lying, whether it is going to harm someone or benefit someone, it doesn't matter, lying is unethical. So here we are not flexible. It simply says lying is unethical. That means if you lie, whether it is for someone's good or not, it's going to be considered as unethical. Okay, so rule based approach basically is totally based on established rules, and the perspective is somewhat narrow, guys. Okay, remember, guys, it may lead to a narrow perspective, and potentially it would overlook the broader spirit of ethics. We don't consider the spirit of ethics here, but yes, we are just based on what, rules here. So principle based approach and both rules based approach, in essence, basically both of them are required to be followed. Okay, all right, so these are two approaches to ethics. Okay, now fundamental principles, guys, we have already covered. This was there in essay 200 as well. All right, so basics of ethics is over. Now let's understand again a very important topic, which is concept of independence. Though this is something which should have been there in chapter number 1 itself, because this is something so vital. I mean, it's a fundamental requirement of any audit, but then in our ICA mental, it is given as a part of chapter number 11. Anyways, let's read this, guys. In the concept of independence, we have to cover a lot of things. Okay, what are the things primarily that we have to cover? We have to cover three things primarily. We are going to learn about the meaning of the independence concept. Then we are going to learn as to what could be the different threats to independence, and finally, how can we protect from these threats. Basically, we are going to learn about the safeguards to independence. Okay, so what is the meaning of independence? It's very simple, guys. Independence means that auditors shall not act basically under any influence. My judgments, my decisions should not be based on some others. It should not be subordinate to the decision of others. I should basically take my own decisions. Okay, and I should not act under any other person's influence. This is basically what is meant by independence. Now, if I tell you very casually, in very simple manner, guys, I can't become the auditor of a company in which my father is a director. Why? Because even if there is some issues in the financial statement, I might not be able to express an adverse opinion or qualified opinion. Why? Because my father is going to influence me. Okay, so in that case, I might not be independent, right? So independence means what? It means that auditor should not act under any influence. Now, there are two interlinked perspective of independence. Very important concept. There are two things about independence that we always have to keep in mind. Number one is independence of mind and independence of appearance. There are two interlinked perspectives of independence. You have to be independent, number one, from your mind, from within. And secondly, you also have to appear to be independent in the eyes of third parties. So what is independence of mind, guys? It says it's a state of mind. It's a state of my mind, the auditor's mind, which allows him to act with integrity, objectivity, and professional skepticism without being influenced. So you have to be first determined that no, you would not be influenced. Okay, this is basically independence of mind. And you have to be appear, to be independent in the eyes of third party. What does it mean, guys? Let's say, I accept the audit of a company wherein my friend is a director, and as per companies act, it's not there's no restriction in this, because friend doesn't come under the definition of relative. So I accept the audit. I felt, yeah, I will act very independent when I do the audit. But then what happens is, I'm going to give you two scenarios. Let's say, so he happens to be my friend. When I go and do the audit, so before I start the work, I go to his cabin, and we talk a lot, and the employees are also able to see that we are chit chatting, we order pizza also, and we are watching IPL matches also together, and a lot of fun and all we are doing. And then, probably, if this is the thing, what are the employees of my friend going to think? Hey, this auditor, he happens to be such a good friend of our sir, of our boss. What opinion? I mean, even if there is some fraud, he will not give a qualified opinion or adverse opinion. He is a friend of our boss, right? So he's only going to give unqualified opinion. This might come into the minds of the employees. On the other hand, let's say, guys, if I act in this manner, let's say, even if the director of the company happens to be my friend, but the moment I enter the office, I don't even meet him. I just say hi, and then I straight away go and discuss things with the accounts department, finance department. I am only working as an auditor there. Then the employees might feel, hey, even though this chartered accountant happens to be a friend of our boss, but he is so professional when he comes to the office. So you should always resort to option number two. I mean, you should appear to be independent also in the eyes of third party. I mean, you know that, yeah, you are independent. That's independence of mind. But then you have to appear also. You have to show that you are independent to others. Else others might end up thinking something else about you. So independence of appearance means what? You should avoid circumstances that compromise auditors' integrity, objectivity, and professional skepticism in the eyes of third parties. So you shouldn't indulge in any activities which would make a third party believe that you are not independent. Simple. Okay. So yes, we have covered two interlinked perspectives of independence. Now, guys, auditor always has to be independent, but then there could be different threats to independence, different threats to his independence. So we are going to learn about 5 different threats of independence. A very important, simple topic. This is there in CA final also, one of the very basic topic. What could be the different threats to independence? Okay, so let's understand this. We have 5 different threats. If you can see on the screen, we have self-interest threat, we have self-review threat, advocacy threat, familiarity threat, and intimidation threat. Okay, so let's go to these threats one by one. What is self-interest threat, guys? Let's say auditor has some financial or other interest in the organization. So if I have some financial or other interest in the organization, it would mean as self-interest threat. Let's say I have given or I have taken loan from a client. If I have taken a loan from the client, now let's say I've taken a loan of 5 lakh rupees from the client, or let's say 1 lakh rupee from the client. Okay, and they have given loan to me at a very low rate of interest. Now I am doing the audit of their company, and I find some issues, and I decide to give qualified opinion or adverse opinion. So the moment I will give qualified or adverse, probably they would ask me to repay the loan. Hey, you repay the loan first, will not give you the loan further. I mean, we want the principal, we want the installment, and you just repay the entire loan. I would think, hey, I've got the 1 lakh rupee loan at such a low rate of interest, it would be a loss to me. So let's give unqualified opinion only. So my interest was involved here. Okay. Now, or let's say if I am too much dependent on this client for my fees, let's say my total fees that I earn, guys, from my practice is 6 lakh rupees, but this one client only is giving me 4 lakh rupees. It's a big client, and he only is contributing to, let's say, more than 50% of my revenue. So if I give adverse or qualified, what if they change the auditors? I might lose out on this money. So again, this is what? A self-interest threat, and because of which I would not express the opinion that I should have given. Okay. All right. Next is self-review threat. Self-review threat means what? Checking things which you have made. Okay. So when auditor is auditing his own work, that means, let's say you have made the financial statements for the company and you are only auditing it. It's not possible. It's not allowed. Even section 144 of the Companies Act will prohibit it, right? You can't make the accounts and then check it. Okay, you only think, guys, will you ever say that the financial statements which you have made is not giving true and fair view? It is not going to happen, right? So checking things which you have already done is not a great thing. So this would amount to self-review threat. Third is advocacy threat. When you are involved too much in promoting the client. Okay, now let's say you are asking everyone to buy the shares of this company. You are let's say or my client is on the verge of liquidation and all. You are helping the client with the liquidation aspect, selling of the assets of the company, etc. So this might, I mean, if you're promoting too much of your client, probably it would lead to advocacy threat. People might think, hey, he's just always promoting his client. Okay, all right. Next is familiarity threat. What does familiarity threat means? Familiarity threat means when you become too close or personal, let's say, with the directors, officers, or employees of the company. So let's say, uh, the auditor and the director of the company both are very good friends. They party together. They play golf in the morning together before the working hours. So in that case, of course, they will develop a bond, familiarity threat. Okay, and then we have intimidation threat. What is intimidation threat, guys? It occurs basically, when the auditor is intimidated by the management or directors and it's deterred from acting objectively. They don't let us work properly. They are intimidated. I mean, they intimidate they threaten the auditor basically. If you give qualified opinion, we are going to remove you. We are going to do this, etc. Something like this. Okay. So what are the five threats that might basically compromise the independence of an auditor? Self-interest threat, self-review threat, then we have advocacy threat, familiarity threat, and finally we have intimidation threat. Okay, now after having read these threats, guys, we have to understand the different safeguards also to these threats. Okay, now what are the safeguards? Number one is, guys, you have to be independent in your mind. So auditor should always be, and you have to appear also to be independent in the eyes of third parties. Okay, and if you actually want to safeguard yourself from these threats, guys, you always have to have the the key fundamental principles of integrity, objectivity, professional skepticism. You always have to follow them. If I can say, guys, these are two interlinked concepts. If you are independent, that means you're maintaining your integrity, objectivity, professional skepticism. Conversely, I can put it in this way, that if you don't compromise on your integrity, objectivity, and professional skepticism, you are independent. So you have to keep these three things in mind. Okay, and guys, generally, I mean, when will you check your independence? So the point is, before taking any work, auditors should consider the threats to independence. You should consider the threats to independence before you take up any work. And it says, if threat exists, either you should desist from accepting the task, or you should try and eliminate that threat. Okay, now when I say you have to try and eliminate that threat, let's say I went to a client's place to do the audit with an article. Now the article had newly joined, and this article, now upon reaching the client's place, I got to know that the director is a relative of this article. So in that case, what I can do is I can ask this article to go to some other client, I mean to some other site or some other audit work, and I would request another article to join in with me. So this is basically what, taking corrective actions, eliminating such threats. And if I feel I can't basically eliminate the threat at all, guys, I should not accept the work. That's it. So these are certain safeguards to basically independence. Okay, now for example, if you feel that I'll just give you one example. Let's say for the familiarity threat, what safeguards do we have in place? I mean, the Companies Act 2013 has got in the concept of rotation of auditors, right? So if it is a partnership you can be appointed in a company for a term of two consecutive terms of 5 years. After that, you have to have change the auditors. The concept of rotation of auditors, right? So the concept of rotation of auditors in Companies Act 2013 was introduced to reduce the familiarity threat. Else, before Companies Act 2013, in one particular company, the auditors were continuing to be the auditors for, let's say, 20 years, 25 years. Of course, you can't have independence. You can't exercise, you can't be very much independent if you are associated with a client for 20, 25 years, right? So we have to have certain safeguards. All right. So yes, with this, guys, the concept of independence is over. We covered three aspects, the meaning. This concept is really very important, that there are two interlinked perspectives of independence. And then we have covered threats to independence and safeguards to independence. In our chapter number 11, professional skepticism has been given in chapter 11. Okay, we have already covered professional skepticism as a part of SA 200. Let me tell you again, professional skepticism, you have to remember two things. You have to cover the meaning, what is meant by professional skepticism, and what are the circumstances or situations wherein you have to exercise professional skepticism. So, meaning is basically what? It is an attitude of the auditor, which basically he has to have the questioning mind. It doesn't mean that you're going to look into the client with the eyes of suspicion, but then you have to be vigilant, you have to be alert throughout the audit. This is basically what professional skepticism means. And situations, circumstances wherein you have to be alert basically is basically when you get some contradictory evidence, guys, when you have doubts or questions on the reliability of the responses or the documents given to you by the management, when you come across certain conditions which indicate fraud. Okay, and there are certain circumstances that basically suggest that you need to perform audit procedures, uh, some extra audit procedures apart from what is given in the standards, then probably you'll have to exercise professional skepticism. That means you have to be more alert. So always remember, guys, in professional skepticism, two things we have to cover. What are the two things? Meaning and the examples. Okay, now with this the basics is already over. So very simple. We have covered ethics, we have covered concept of independence, and we have also covered professional skepticism. Okay, now as a part of this chapter number 11, guys, we have to cover three standards also, right? What are the three standards? SA 200, then SQC 1, and then we have SA 220. Okay, so let us quickly now start with the standard. We shall first be taking SA 210, and SA 210 is very simple: agreeing the terms of audit engagement. So again, guys, whenever you start with any standard, I keep on saying this in my regular sessions also, that you have to think practically as to why this standard is there, why chartered accountants in practice have to follow this standard, or let's say why as a student you are being taught this standard. Okay, so agreeing the terms of audit engagement, in very layman's terms, if I tell you guys that you are my client, let's say and let's say I would be your auditor. Okay, you want me to be the auditor of your company. So later on when I accept the audit, there should not be any dispute. So everything should be, the terms and conditions should be very clear. It should be made it in writing, etc. So this is what we are going to cover in this particular standard: agreeing the terms of audit engagement. Okay, so what is the objective? The objective is basically the auditor, before accepting or conducting an audit engagement, should ensure that. So before you accept any particular audit work, you have to ensure that the preconditions for an audit are present. Preconditions for an audit are present, and there is a common understanding. A common understanding is developed between the auditor and the auditee on the terms of audit engagement, right? So two things we have to consider, guys. Again, the auditor, before accepting or conducting an audit engagement, he should consider two things: that there is something called as preconditions to an audit, and you have to develop common understanding. In simple words, guys, you as an auditor is only going to accept this audit when these two things are present. What are the two things? That there has to be something called as preconditions, and there has to be common understanding. Common understanding between whom? The common understanding between the auditor and the auditee, or let's say auditor and the client. Okay, now we'll have to understand what does this preconditions to an audit mean, and then we are going to see what is common understanding. So what are the preconditions to an audit, guys? Preconditions to an audit, you have to check two things. There are only two preconditions. Number one, you have to see whether management, when they make the financial statements, whether they have used acceptable financial reporting framework. What does it mean, guys? So let's say you happen to be one of my clients, and not my clients, you come to my office. I'm a chartered accountant in practice, and then you say, sir, will you do our audit? And then I ask you for the financial statements. I ask you how you have made the financial statements. Who are you? How you have made the financial statements? Sir, we are a company. And I asked how you have made the financial statement. Sir, we have actually made the financial statements, in Excel format. We don't know about AS and all, though we know that for companies AS is mandatory, but it is very difficult, sir. We don't know. So we are going to give you only Excel data, and you have to audit. So if a client like this comes to you, you say bye bye to them. I mean, because they have not made financial statements using acceptable FRF. If it is a company, they have to make the financial statements as per schedule. They have to comply with the requirements of AS, right? So if this type of client comes to you, you are not going to accept the work. So number one thing that you have to see is, guys, whether management is using acceptable financial reporting framework, number one. And second, let's say if they are using acceptable financial reporting framework, let's say I'm giving you a case again. So you are one of the prospective clients and you come and I ask you, who are you? So you say, sir, I'm a company. And then I ask you, how do you make your financials? Sir, what are you even asking? We are a company. We can't even deviate from schedule 3. We have to comply with AS also. We have paid so much to our accountant because we don't have much knowledge about AS, but then we have hired an accountant who has knowledge of AS and all. So we have to comply with AS and schedule 3 while making financials. So if such client comes to you, then you should be happy. Oh, they know about what is acceptable FRM. Now the next question you are going to ask them is, management, you have to acknowledge your responsibilities with respect to three things. You have to acknowledge your responsibilities. Whether management acknowledges its responsibilities with respect to three things. What are the three things? Number one, that preparation of financial statements is your responsibility. Later on, once I accept the appointment of as auditor, you are going to say, sir, you only prepare the financial statements. No, preparation of financial statements is your responsibility. Implementation and maintenance of internal controls with respect to the financial statements is your responsibility. And you shall also provide us with three things. You shall provide the auditor with three things. What are the three things? That you are going to give us access to all information which is necessary for the preparation and presentation of financial statements. You are going to give us additional information that we may need. First was basically you are going to give us all the financial data which is required for preparation and presentation of financial statement. You are going to give us any additional information that we may ask for, and you shall also give us unrestricted access to all your employees. That means you are going to give us free access, to all your employees. Okay, unrestricted access to all your employees. And when I say all your employees, it doesn't mean that you're only going to let us talk to the employees from accounting or finance department, but rather I can go and talk to your marketing person, I can go and talk to your information technology team, I can go and talk to any employee basically. Okay, so these preconditions must be present. Again, guys, what are the preconditions? Always remember two preconditions. What are the two preconditions? Number one, whether management uses acceptable FRF, and secondly, whether they acknowledge their responsibilities with respect to three things. What are the three things? Number one, that they are responsible for the preparation of financial statements, they are responsible for the implementation and maintenance of internal controls, and they are going to give us access to three things. What are the three things? Access to all information relevant to the preparation of financial statements. Second, additional information which the auditor may request, and they are going to give us unrestricted access to employees. Now, if these preconditions are present, you may think of accepting the audit. Will you accept the audit only when these preconditions of audit are present? No, because if the preconditions are present, it's a good sign. But then, guys, you also have to agree. You have to arrive at a common understanding. Only when both the things are there, then only you're going to accept the audit. Okay, so common understanding means what? Of course, guys, you and I, we have to come down to a common terms and conditions that, okay, this would be my fees. Are you okay with that? These are the things that I would be checking. You can't say no later on, etc. So we have to develop that common understanding, right? So with respect to the next requirement of the standard, okay, if you see that common understanding is there, but however, please understand, guys, I told you if the preconditions are not present, okay, I have mentioned here, should not accept the audit. Auditor should not accept the audit if preconditions are not present. Or let's say management imposes some restriction, some limitation. They say that, sir, we shall let you do the audit. We have all these things, but we are not going to let you check our inventory. We are not going to let you do a physical verification of our fixed assets. So they are imposing limitations on the scope of our audit. If that is the case, guys, you should not accept the audit. So remember, you are not going to accept the audit if preconditions are not present and if they impose any limitation on the scope of your audit prior to the acceptance. You are not going to accept them. However, I told you acceptance is only going to happen when both the things are present, right? Preconditions as well as common understanding. So how are you going to develop the common understanding? Let's do it quickly. Now, I have told you this earlier also, guys, in regular sessions, that common understanding can be developed through an agreement or a document which is called as audit engagement letter. Okay, generally, commonly, AEL is more popular. It is followed. Okay, rather than going in for a formal agreement, we make a document which is called as audit engagement letter. Okay, so audit agreed terms to be recorded in AEL. So AL, the common understanding can be developed through an AL, but what will be the contents of AL? Very important question. Let's read it, guys. So contents of AL, if you can see, a lot of points I have mentioned. Objective and scope of audit. The AL should clearly mention what is the objective and scope of audit. Okay, it should clearly mention auditor's responsibilities and management's responsibilities. There should not be any confusion. Mention very clearly that these are my responsibilities. My work is only to express opinion on the financial statements, whether it is giving true and fair view. I would only be giving reasonable assurance. Explain everything in the AL. Then what will be the management's responsibility? Let's write it down so that later on there is no element of confusion. There shouldn't be any dispute arising. So let's make all the things very clear. So what are the three things that we have covered? Objective and scope of audit. Next is auditor's responsibility. Third one is what? Management's responsibility. Then it's better to write it in AEL, guys, which FRF is applicable on the company, on the entity. So identification of applicable FRF, and I can, if I want, I can even give a reference to the audit report format. For the reference of the management, I can attach the audit report format also. Okay, so these 5 things are mandatory. They will be there always in AEL. I'm repeating it again. Objective and scope of audit. Next is auditor's responsibility. Third is management's responsibility. Then FRF, and also reference to the audit report format. Other than this, guys, we can also mention in our AEL few more things. The fact that because of inherent limitations of audit, some material misstatements may not be detected. That because of the inherent limitations of audit, some misstatements may not be detected. So don't shout on me later on. There shouldn't be any element of dispute here that we have paid you the fees and still you were not able to detect some misstatements. So guys, let's make it very clear. The subject of auditing suffers from certain inherent limitations, because of which it might be possible that I am not able to detect all misstatements. Anyways, I'll give reasonable assurance. We may also share our tentative audit plan. In the AEL, we can mention our tentative audit plan. Now, why not a detailed one? Because it's always better to have some element of surprise. Let's not disclose everything. Okay. Then what arrangements are required at the management end? So let's say, we can mention it in the AEL that okay, we are going to come from this date, and we would be needing a system basically to access the data and all. So you have to keep a password, user ID and password. Create a auditor user ID password so that we can access the data. We would be needing one system or 2 systems. Will be a team of 5 members who are going to come, etc. So we can ask them to make the necessary arrangements. Okay. And the most important thing, the basis of calculation of fees, that has to be mentioned in the AEL. And finally, after all these terms and conditions, we can request the management. Generally, what we do is we prepare 2 copies of AEL. We ask the management to go through it and acknowledge by putting the seal and sign. So they'll retain 1 copy with themselves and they'll give 1 copy to us. So this is basically asking them to acknowledge the receipt of AEL. All right. So these are the things, guys, which is going to be there in audit engagement letter. I'm repeating it again, guys. Objective and scope of audit, auditor's responsibility, management's responsibility, identification of applicable FRF, and reference to audit report format. These 5 things have to be there. Other than this, you can give that because of inherent limitations of audit, some misstatements might not be detected. You may share the tentative audit plan, what arrangements are needed at the management's end, basically basis on which the fees is calculated. You may also write that audit may be subject to peer review. Okay. And then you will request towards the end, you'll ask management to give a copy of the AEL as an acknowledgement. Okay. So now, guys, if both the things are done, if let's say management signs to the terms and conditions, if preconditions were there and common understanding is there, then you are going to accept the audit. Okay. So done. Let's say you have accepted the audit. Now the question is, are you required to make or prepare this audit engagement letter for all the recurring audits? Let's say you are doing the audit next year also, and again in the 2nd year, 3rd year. So are you required to make AEL every time? So in simple words, the answer is no. You are not required to make AEL every time. But guys, it's going to be merely a copy paste, right? So if you make a fresh AEL every year also, it's a healthy practice, but it's not a compulsion, right? However, in case of recurring audits, guys, we are going to learn about certain circumstances. We are going to learn about circumstances wherein it becomes mandatory to come up with a fresh AEL. So let's read the point of recurring audits. So you have to assess whether circumstances require revision in terms of audit engagement, and whether there is a need to remind the entity of its existing terms of audit engagement. If you feel that management is kind of very forgetful in nature, so things I tell them one day, I mean, they are not able to recall. If you feel that the management is of this nature, has got this attitude, it is better to give AEL every year, right? So it is upon us. I mean, the auditor will have to assess whether circumstances require revision in audit engagement. And auditor may decide, as I told you, he may decide not to send new AEL every year. It's up to him. However, fresh AEL may be needed in the following cases. If there is a change in these 7 things, guys. If there is a change in law or a legal requirement, if there is a change in FRF, if there is a change in reporting requirements, then new AEL is required to be sent. Let's say if there is a change in management or TCWG, if there is a significant change in the nature or size of the business, if there is a change in the fee structure, if there is a change in my tentative plan, the audit procedures that I perform. So in these cases, it is better to send a fresh AEL. That's it. Okay, so we have these circumstances wherein a fresh AEL may be required. So this is all about, guys, recurring audits. And finally, guys, let's say management has signed AEL. Okay, all the terms and conditions are done. We have accepted the appointment. Now they are asking us to make certain changes in the terms of our audit engagement. Now they are asking us to make changes. Okay, you have already signed the AEL. Now you are asking us to make changes. So what is it that you have to understand here? Now, before completing the audit, you have accepted the audit. Let's say you are doing the audit. You have not yet completed the audit. Before completing the audit, if the management, if the client requests the auditor to change the terms that conveys lower assurance, that means you were hired, you were, the audit engagement letter of course was for the work of audit, but now they're asking you to change the terms of engagement which conveys a lower level of assurance. What does it mean? Let's say you know, they are asking you, no sir, we did not we don't want an audit done, it's okay, we just want a review done. So in that case, okay, please understand that in that case what is going to happen, consider whether there is reasonable justification of change. Okay, you have to see whether there is a reasonable justification of change, and if there is yes, you can agree to the new terms. Okay, but if there is, you have to see whether there is reasonable justification or not. If you feel that there is no reasonable justification, then, and management does not permit original engagement, and then they are not letting you continue, then in that case, what is it that you are going to do? Number one is basically you have to withdraw. And you also have, you might have to communicate with the regulators, with the TCWG, with the regulators, with the owners. Now, if let's say you are resigning, then you might have to communicate to ROC also in the form of ADT 3. Okay, yes. So this is what you have to understand, guys. So number one thing is this. Now you have to see whether there is reasonable justification. If you feel that there is reasonable justification for the change, you might go ahead with it. Now, for example, if they ask you, sir, in our audit engagement letter, you had planned to start the audit from, let's say, 20th of April, right? But then, due to this, let's say we are doing a renovation in our office and it is only going to be complete by 25th of April. So can we start the audit from 25th of April? Else it is going to be very dusty and it's going to be a problem to do the audit. So it seems very justifiable. So you might accept that this change, but then they are wanting to change the terms of audit engagement, and because of the change, it is going to convey a lower level of assurance. From audit engagement, it becomes, let's say, review engagement. So in that case, probably you will see whether there is reasonable justification in doing so. And if you feel that there is reasonable justification, you might agree to new terms. If you feel that there is no reasonable justification, then, and management is not letting you continue, then probably you are going to withdraw. You might have to communicate also with TCWG, the regulators and the owners. Okay, all right. So this is basically, guys, change in the terms of audit engagement. And with this, if you can see, we are done with essay 210. Okay, very simple, very small standard. Okay, all right. Going back to the master chart, guys, we are on the chapter number 11. Chapter number 11 is about ethics and terms of audit engagement, right? And if you see, again, the next concept that we have to cover is SQC1. Okay, now Guys, SQC1 and SA220, we always do it together, right? Why? Because you have to understand both of them are with respect to quality, right? I hope you remember the names. What is SQC1, guys? SQC1 is basically quality control. It's a quality control standard for firms that perform audit and review of historical financial information or other assurance and related service engagement. So SQC1 is a quality control standard. Whether you are doing audit or you are doing a review engagement or assurance engagement or related services, you always have to implement some quality controls, guys. And SQC1 is going to tell us about it. So again, reading the name, quality control for firms that perform audit or reviews of historical financial statements or assurance or and related service engagement. So this is SQC1. And guys, please understand, in SQC1 we are going to learn about firm level policies which a firm should be having with respect to quality, irrespective of the services that you're giving. Whether you're doing audit or review or assurance, you have to have some policies for quality. Okay, this is what we are going to learn in SQC1. We are going to learn about the different policies a CA firm must be having. Okay, however, when I make you go through SA 220, what is the name of SA 220? SA 220 is basically quality control for audit of financial statements. So what is the difference? Please remember, SQC1 are firm level controls of quality, of course, for all types of services that the firm is rendering. I mean, you know, whether it is audit or review or assurance, etc., SQC1 is going to be applicable. But those firm level controls that we have determined, that we have fixed as a part of SQC1, they have to be actually implemented when you are doing an audit. Now, when you are doing a particular audit, the controls with respect to quality has to be implemented. So we are going to learn about implementation of those firm level controls as a part of SA 220. Perhaps again, guys, to make things very clear, I share this, I mean, in my regular lecture also, that SQC1 is what? They are firm level controls, firm level, at the firm level, right? And they are for all types of engagements, whether you are doing audit, review, assurance, or related service. However, what is SA 220? The firm level controls that you formulate, you know, as a part of SQC1, you have to implement the same when you are actually doing the audit. So SA 220 is what? Implementation of those firm level controls to individual audits, to individual engagements and audit only, because it is SA, standard on auditing. So when you're doing an audit, you have to implement those firm level controls to a particular audit. So please understand, because now, why did I say that SQC1 and 220 we are going to take it together? Because what happens is, because 220 is merely an implementation of firm level controls, guys. Okay, most of the points in SQC1 and 220 would be same. Okay, all right. Again, I'm telling you, SQC1 is a bigger standard. It emphasizes on quality control at the firm level for all types of services. But SA 220 basically is only for audit. When you are doing the audit, you have to implement those controls for this particular audit. This is SA 220, and the points are more or less going to be same. Okay, I hope you're clear on this. And with this, let us quickly start first with SQC1. SQC1 now in the new syllabus is very much extended. Okay, so let's understand SQC1 properly first, and then we shall quickly go through the points of SA 220. Okay, so let's first understand the introduction part of this standard. Okay, now SQC1 requires that firms should establish a system of quality control. So SQC1 tells that all CA firms, you should have a system of quality control. Okay, why? Because so that it provides reasonable assurance that the firm, that the entire CA firm and all its employees, partners, personnel, they comply with the professional standards. They comply with the legal and regulatory requirements and report that the issue is appropriate. So what is guys SQC1? The basic, you have to understand, SQC1 requires that the CA firms should establish a system of quality control. Sir, how are they going to establish? Hey, they will make a lot of policies and procedures. In simple layman's language, a CA firm should have policies and procedures to ensure quality, in whatever work they are doing. I mean, you know, basically, if you are doing audit or review or assurance or related services, you have to ensure quality. So you have to come up with quality control policies and procedures, okay, so that the report that you give is appropriate. It's not a bad report, it's not a wrong report. If you follow quality, the report that you're going to come up with is going to be appropriate, okay. And remember guys, so what is meant by quality control? I mean, I told you that there should be a system of quality control. So what does it mean? So firm system of quality control means it should consist of policies basically, and it applies to all firms irrespective of their constitution. That means whether you are a sole proprietorship CA firm or whether you are a partnership firm, you have to follow SQC 1. Okay, again guys, see, many students might get confused. Just remember this thing in your heads and it is going to be very clear that SQC1 is going to tell us that the different policies with respect to quality control a CA firm should be having. Okay, so if you see elements, now the next topic is elements of system of quality control. These elements, if you see, are nothing by guys, but these are the different policies which a CA firm should be having. Policies regarding leadership, policies regarding compliance with ethical requirements. The CA firm should have policies with respect to acceptance of a client. They shouldn't be accepting any random client. They should see the integrity of the management. They should see, let's say, I know this person has been behind the bars for a lot of money laundering activities, for murder also. Perhaps I should not accept the audit of such client. So here we are going to learn about policies. We have to have policies for our human resource. I mean, when we accept an audit, we should have competent team members. We should be, be able to finish the audit or any work within the timeline, etc. Okay, then we have some policies with respect to how you are going to do the engagement. Okay, and then whatever policies you make from point, let's say 1 to 6, you also have to monitor those policies whether they are actually effective or not. So we have to have guys policies with respect to so many different things. Again, I'm repeating, before we start with SQC1 guys, it's a very simple standard. Just remember, this standard tells that CA firms, you need to have policies to ensure quality. And it doesn't matter whether you're doing audit or review or assurance, you have to have policies. So policies for what? Policies, number one, for leadership responsibilities. So let's read now each of these elements, each of these policies. Okay, number one, SQC1 necessitates that firms to create policies. Now every line you'll see that you have to create policies and procedure. SQC1 requires CA firms to create policies and procedures to instill an internal culture recognizing the significance of quality in engagement. So number one is there should be policy to promote the culture of quality. Everyone should consider that quality is important. See the last point, everyone in the organization should consider that quality is paramount and non-negotiable across all the aspects of the firm's operations. So we have to have policies so that we build a culture of importance of quality. Everyone understands sorry sorry so everyone should understand how important maintaining quality is. Okay, and they should take this as really important, and it is something which is non-negotiable. So we have to have such culture. How can we come up with such culture? Build policies and procedures. Okay, and guys, it says the policy should maintain the firm's CEO, the topmost person of the firm, or the managing partner to be ultimately responsible for quality control. So the responsibility for quality control in a firm, actually, the policy should mandate that the responsibility should be of CEO and the managing partner. Because what happens, guys, if these persons are actually responsible for ensuring quality, they are the topmost people in the firm. So everyone probably now in the firm is going to follow it. Okay, so the responsibility for ensuring quality control should lie with whom? The top leaders, the CEO, the managing partner. Okay, and you should always keep quality in mind. You should not say, hey, let's accept this audit. No, we'll only get fees, right? We need profits also. So please understand, there's a point. The firm's business strategy is subordinate to the primary requirement of achieving quality in all engagements. So quality is first thing that you have to see, and then of course your business strategy. You can't just accept the audit for the sake of profits. Okay, so what is the first thing, guys? It talks about leadership responsibilities. So remember, Okay, number one, we have to develop a culture in the organization that promotes quality, number one. And everyone should consider quality to be paramount, very important. It is something which is non-negotiable. The responsibility of ensuring quality should be, the policy should mandate the responsibility to be of the top management, to be of the let's say CEO of the CEO firm or the managing partner. That's it. So done, guys. We are done with the policies with respect to leadership responsibilities. Very simple. Okay. Now let's talk about the second uh, policy with respect to ethical requirements. Okay, let's read this point, guys. Now, firm must establish policies. Again, see the language. Every requirement that we are going to cover, guys, it is going to start with this, that the CA firm must have policy for leadership. They must have policies for ethical requirements. So firm must establish policies ensuring compliance with ethical requirements outlined in ICI's code of ethics. So our CA firm should have policies so that we are able to comply with the ethical requirements outlined in ICI's code of ethics. Again, what are the 5 ethical requirements, guys, outlined in the ICI's code of ethics? Please write it in the chat box. The one watching it on YouTube, please comment down. What are the 5 requirements? 5 principles, ethical principles. Yes, integrity. Then we have objectivity. Yes, next. Third one, professional competence and due care. Then confidentiality and yes, professional behavior, right? So our CA firm should have policies so that all the people, all the person comply with the ethical requirements. Okay, but guys, ethical requirements, if you read the language of SA 200, also ethical requirements along with the 5 principles, it also is about independence. Okay, including independence. So with respect to independence, we have certain points. Okay, again, see the language. Policies and procedures should assure independence maintenance for the firm. So we have to have policies and procedures so that, you know, the CA firm, the employees, the personals, the partners, they are always independent. We have to have policies and procedures to maintain independence. And then again, it says procedures should communicate independence requirements. So we have to have policies in our organization that we are able to communicate to everyone that yeah, we have to be independent. There is a need to be, independent. If there is any law with respect to independence, it has to be communicated. And then we also have to have procedures to identify and evaluate circumstances creating threats to independence and take action to mitigate them. So there are 2 things in this point, guys. There should be policy. Policy for what? 2 things. Policy with respect to communication of independence requirements to everyone in the organization, and also we have to have policies so that we are able to identify and evaluate the various threats to independence, and accordingly we can take measures, actions to mitigate them. Do you remember the 5 threats to independence that we had covered? Self interest threat, that we have covered self review threat, advocacy threat, familiarity threat, and intimidation threat. Okay, again, we should have policies, guys, that annual written confirmation of compliance with independence policies is required from all relevant persons. Also, whatever policies we have for independence, it's important that the firm, should take a compliance confirmation, basically a written compliance confirmation. It says annual written confirmation of compliance with independence policies is required from all relevant persons. So maybe from the partners and all, a signature should be taken that they have complied with their own policies of independence. And just one example, guys. Let's say, do you remember familiarity threat? I told you, if let's say I keep on going to a particular audit for 20 years, of course it will lead to familiarity threat, right? So we have a point, continual use of same senior personnel on assurance engagements may create familiarity threats. Hence, firm must establish criteria for safeguards. Now, one such criteria can be what? Can you tell me this? What should be a criteria for this? Can you give me an example? What can be a control for this? Continuing the same partner in a particular insurance, yes. Jawar, yes, you are absolutely correct. So I have mentioned here, see, examples of safeguard would include what? Rotating senior person or requiring engagement quality control reviews. What is engagement quality control review? I'll come to it later on. Okay. But then, yes, we have to have some controls. All right. So guys, under ethical requirements, just remember, guys, the CA firm should have policies and procedures to ensure compliance with the ethical requirements of ethical requirements. What are the 5 ethical requirements? Integrity, objectivity, professional competence, and due care. And then we have confidentiality, professional behavior, right? We have to have policies to ensure compliance with these things. Apart from this, we have to have policies and procedures to ensure independence. At least, we have to have policies so that we communicate the need of independence, and then we have to have policies so that we identify the threats to independence and take actions to mitigate them. There should be a system, there should be a policy of taking written annual confirmation from the concerned personnel that they have complied with their own independence policies. And there's one example that we should not be sending one senior partner to one particular audit for a lot number of years, because it would lead to familiarity threats. Now this SQC one, you know the rotation concept was made applicable mandatory only in Companies Act 2013. Prior to that, we did not have the concept of rotation. But then in SQC1, it is mentioned that we have to take safeguards. We shouldn't be sending same partner to an assurance engagement for a very long period of time, because it would lead to familiarity threat. Okay, done. All right. So we have already covered, guys, 2 policies. Very, very simple. Okay. Now, a lot of times what happens when people see, oh, SQC1, it's a 5-page standard, and then they have this tendency to leave it and all. But it's a very simple standard if you understand. It's only about, guys, policies and procedures. Okay. All right. Let's understand the third point, guys. Acceptance and continuance of client relationships and specific engagements. Okay. Now, guys, you are not, in simple words, you are not just randomly going to accept any particular client's audit or work or review. Okay, so what are the things that you have to see before acceptance of any engagement? You have to basically gather vital client information. Okay, you have to have good information, good important information about the client. Sir, what information do we have to obtain about the client? You have to obtain information about these 3 things about the client. Then only think about accepting the audit. What are the 3 things, guys? You have to know about the integrity of the client, the promoters, and the key personals. You have to see, okay, this is about the management of the company. You have to see the integrity of the client, the promoters, the key personals, etc. Then you have to see that whether you have the team members, you have the competent team members to do the audit. Let's say the client says we use a system of SAP, we are using ERP. Now my team members, including me, we don't have knowledge of SAP, how to do the audit in SAP, how to operate SAP. So I shouldn't be accepting it. So you have to see whether you are competent to perform engagements, whether you have the required members, human resources to do the audit. And thirdly, whether you are whether you will be able to comply with the ethical requirements. Okay. Now again, there can be 2 very important questions from this area, guys. Please be attentive. How will you evaluate? What are the considerations for evaluating the integrity of the client, promoters, and key person? What are the considerations? Okay, so see the points. What are the considerations? Very important point, guys. Number 1, in order to know about integrity of the client, you need to know the identity and the business reputation of the clients. Let's say principal owners. You need to know about the identity and the reputation of the management, the related parties, the TCWG, etc. You need to know what kind of business, what is the nature of their operations, what kind of business they are doing before you accept. This is again something which you have to consider before acceptance. Okay, then you also have to consider the attitude of the management again towards accounting standards, towards the internal control environment, how serious they are with respect to AS, whether they take internal control seriously or not. Of course, again, you are going to be considerate about the fees also. Let's say your client, okay, they are aggressively concerned with maintaining firm's fee as low as possible. They don't want to increase the fees. They are very adamant, no, we are only going to give you 10,000 rupees. They are very adamant on this. So maybe, and keeping the scope of audit in mind, you feel it's not possible to do the audit in 10,000, then probably, and they are not willing to increase the fees. So again, this is an issue. So fee concerns, if they impose any limitation on the scope of audit, if they have been involved in some illegal activities, okay, and then why did they all of a sudden appoint me? Why did they remove the previous auditor? Why did they not reappoint the previous auditor? He was eligible, but he did. Why was he not reappointed? So you need to know the reasons, and then only you will think of accepting the audit. So guys, Very simple, and I feel it's a very important question. Please mark it as important, right? So what are the considerations basically with regard to the integrity of the client? What are the considerations which you should be basically considering, right? So for ensuring, for checking upon the integrity of the client, I'm repeating it again, guys. Number one, you have to see the identity and business reputation of the owners, the key managerial persons, the TCWG, etc. You need to know the nature of operations, including the business practices. You need to know the attitude of the management towards accounting standards, internal controls. You have to see whether the client is aggressively concerned with maintaining a very low audit firm's fees, whether they have imposed any limitation on the scope of work, whether they have been involved in any money laundering or other criminal activities, illegal activities, and why did they not continue with the previous auditor? What was the reason for appointing me and non-appointment of the previous firm, etc. You need to know this. Then you might think of accepting. Okay, and apart from this, guys, you also have to see whether you are going to be competent to perform the engagement. And when I talk about competence, how are you going to see whether you are competent or not, whether your firm is competent or not? So number one is, guys, you have to have the CA firms, the personnel, they have to have knowledge of the industry. Let's say if the client belongs to the pharmaceutical industry, aviation industry, we have to have knowledge of that industry so that we can do the audit properly. I need to have experience with relevant regulatory and reporting requirements. Let's say it's a bank, so banking reporting requirement is totally different from a normal company, right? So I have to have experience in that. Do I have sufficient team members or not? Then again, sometimes it may, let's say my client is into jewelry business. I don't know how to do the valuation of the diamonds they have, so I might need the help of an expert. So availability of expertise and engagement, quality control reviewers, if there is availability of expert or not. And engagement quality control review. What is engagement quality control review? I'm going to come to it later, wherever applicable. Why? Because it is mandatory for listed companies. For listed companies, there is a concept of quality control review. Just give me some time, we'll come to it. Okay, and then whether I'll be able to do the assignment, do the engagement within time or not. So all these things I have to see, and then only I'll think of accepting. Okay, so guys, we have completed this first part, acceptance and continuance of client relationship. So before acceptance, you have to gather vital information about three things: integrity of the client, whether you are going to be competent, and whether you will be able to comply with the ethical requirements. And these 2 points, guys, considerations here and these considerations are important. Please mark it as important. Okay, now after this also, it is acceptance and continuance of client relationships. So it may so happen that, guys, there is a conflict now. There's a conflict between the firm and the client. There's a conflict between the CA firm and the client. In this case, what has to be done? So guys, very simple. We have to resolve the conflict of interest before engagement acceptance. So let's say there's some conflict of interest. You are saying something else. So I am not going to accept the appointment unless the conflict is resolved, right? So we have to have policies to resolve conflict of interest before engagement acceptance. Okay. However, you accepted the engagement, but there is some new information now. There is new information that would have led to declining the engagement earlier. If you would have known this information before, you would have not even accepted the engagement. You have come across some new information now. Again, I'm repeating, guys, you have come across new information. This information was not available to you previously. If this information was available previously, you would have not accepted the audit. Now, in this case, what are you going to do? So in this case, guys, what has to be done? Consider professional and legal responsibilities. You have to see whether you can basically what is your legal responsibility here, and then you also have to see whether you have to report about such things to any legal regulatory authorities. And you might even think of withdrawing. I mean, evaluate the possibility of withdrawing from the engagement or client relationship. Withdrawing from the engagement or client relationships. You might think of withdrawing, if it is possible, from the withdraw from the engagement. Withdraw from the engagement means what? Let's say uh, XYZ Private Limited is my client. XYZ Private Limited is my client. So I might just resign from the audit work. I might keep on doing their other assignments. Or I can totally withdraw from all the work with XYZ Private Limited. So I might withdraw from all the client relationships. So there's a difference. I hope you have understood it. Okay. All right. So conflict of interest between the firm and the client is also over. What is it that I taught you guys? The number one thing is you have to resolve all the conflicts before acceptance. If, however, after you have accepted, you have come across some information which you would have known earlier, you would have not accepted the engagement. Then in that case, what is it that you have to do? You have to consider your professional legal responsibilities. You might even have to report to the regulatory authorities if it is required, and then you might even think of withdrawing from the engagement or from the client relationships in total. Done. Okay. All right. So acceptance and continuance of client relationships, I feel guys, these two considerations, I'm repeating it again, the considerations might be an important question. Okay. All right. Next is human resource. Very simple guys. We have to have policies. Guys, in my CA firm, I would not just randomly hire anyone, right? So we have to have policies for human resource also. So see the point. Establish policies ensuring, number one, I have sufficient people with me to do the work. So I have sufficient number of staff members, and it's not just about quantity. They must be having capabilities, competence, and they must have ethical commitment to perform engagement in compliance with the professional standards. So they must be committed that yes, we have to do the work in compliance with the standards, in compliance with the regulatory requirements. So what is the first point? First point says, guys, our CA firm should have policies to have sufficient number of human resource, and with good qualities, capabilities, competence, and commitment that they are going to work, in compliance with the standards or regulatory requirements. Second, we have to have policies for proper recruitment, compensation, for giving training to our staff members, for their growth aspects, career development, etc. And guys, it shouldn't happen that okay, we hire the employee and he's just doing the work. We should focus on continual development of our firm's personnel. We should keep on training them. If let's say new standard comes, there is a new section, something was introduced in the budget, we should have discussions, we should have presentations about it, we should organize seminars so that our employees, our personnel are updated. So continuing professional development should be there. So these are things which with respect to human resource, very simple. Okay. All right. Now comes an important part, guys. Policies with respect to the performance of the engagement, whether you are doing audit or review or assurance or other related services, guys, we have to have some policies with respect to the way we do the work. So engagement performance, what does it mean now? Now we have few points here. Okay. So let's say while you were performing the engagement, you came across a difficult or a contentious matter. In that case, what is it that we should be doing? Sir, we should discuss. We should discuss with our senior partners, senior members. We should have a discussion as to how to resolve or tackle this particular aspect. If let's say we are not able to do it within our firms, we might even consult, we might even engage in a discussion with some outsider also, so that we have a clarity on the concept. Okay. So if there is some difficult or contentious matters, guys, there has to be consultation, right? Now consultation, see the point, discussion with specialized experts to resolve difficult matters. So let's say, guys, if I'm doing the audit and there is some aspect with respect to taxation which I was not very confident about. My father is an expert in taxation aspect, so I'm going to go and discuss with him. So there has to be consultation, discussion with whom? Specialized experts to resolve the difficult matters, and consultation with those having appropriate knowledge or seniority and experience within the firm. So, or I would go and do a discussion with someone who is senior, who has an experience, who has got a lot of experience, and this may be within the firm and outside the firm. If somebody is not available within the firm, we may do a discussion with someone outside the firm as well. And the most important part, guys, whatever consultation and discussion happens, it has to be documented. So complete documentation of issues and consultation results. What was the issue, and after consultation, how was it resolved? It has to be documented. Done. Okay. So consultation in difficult or contentious matters, it is covered. Now comes the engagement quality control review, which I was asking you to be patient with. Okay. Engagement quality control review. Now what does this mean? In very simple terms, guys. Okay. I'll just, let me just open this and explain it to you. Okay. Now let's say we are doing the audit of X Limited. Our CA firm is ABC and company, and partner A happens to be the engagement partner for this assurance engagement, for this audit engagement. Now partner A, before signing the audit report, this, let's say it's a listed company. Now partner A, before signing the audit report, somebody from the same firm, let's say partner B, would want to check whether partner A has performed the audit properly or not. He would see whether he has obtained sufficient appropriate audit evidence or not, the judgments that A used is okay or not. And then once B gives a go ahead, A will sign the audit report. This is called as engagement quality control review. Review is done by whom? Some other partner in the firm. Now, always remember that B should not have been indulged in the audit of X Limited. I mean, B should be kind of independent. He should have not been indulged in the audit of X Limited. X Limited audit was totally headed by, let's say, A, partner A. Okay, I hope you have got the concept. So this is engagement quality control review. Now, let's read the points with respect to engagement quality control review. Yeah, so policies for engagement quality control review should be established, and review is required. Please remember, guys, it is mandatory for listed entities, and it depends on the CA firm. Let's say it is not a listed company, but it's a public company, and we feel that yeah, it is better if a review is to be done. A review is done before the partner A signs the audit report. Then we may have our own criteria also. It says review is required for audits of listed entities and other engagements meeting the criteria. We can have other criteria also. We can set it. It depends upon our CFM. And guys, when should the review be done? All of you must agree to this, that completion of review must be before report issuance, before partner A gives the audit report. Of course, B should be able to complete the review before partner A gives the audit report. Okay, guys, again, so yeah, we are done with engagement quality control review. I think all of you should be clear on this. Can quality review, engagement quality control review, be done for entities other than listed entities? Yes. Sir, CA firm may set up their own criteria for doing EQCR, engagement quality control review. Done. Okay. Now, guys, in audit, what happens is me, my team members, some other chartered accountants, we all will go as a team and do the audit. There might be some difference of opinion. So in that case, what has to be done? So again, we have to have policies. All these are basically what? We have to have policies for consultation. We have to have policies for engagement quality control review. We have to have policies for difference of opinion. So it says resolution of differences within the engagement team or with consulted parties required before report issuance. So the difference should be resolved before the audit report is or before the engagement report is issued. And guys, it says unresolved differences, if some differences remain unresolved between engagement partner and the reviewer. So there may be a difference between engagement partner A and partner B. B is a reviewer. Okay, so if there is unresolved difference between engagement partner and reviewer, to be resolved following firms established procedures. So firm must comply with the procedures and try and resolve it. That's it. So not very important, but yeah, difference of opinion is okay. Done. Finally, we have engagement documentation. Yeah, so in engagement performance we have engagement documentation. Guys, very simple. Again, with respect to engagement documentation, we have certain points. Okay, now you all know this. Completion of assembly of final engagement files. Though we have not yet covered SA 230, this is a part of 230. We read it in, we have done in 230 that once the you have to maintain documentation, and then you have to compile, you have to assemble all the documentation into one file. We call it as audit file. Can anyone tell me when should it be done? Yes, please write it in the chat box. When is this assembling of audit file to be done? In how many days? Okay, so first thing, guys, you have to remember is it has to be done on a timely basis. The compilation of the audit documents from different, let's say 3 articles where they have maintained their own audit documentation. So we have to bring it to one file. Let's say we call it as audit file. So the standard says that it has to be done on timely basis after engagement reports have been finalized. But this standard also gives a timeline. It should be completed at not more than 60 days after the date of report, after the date of the report. Okay, done. Now, guys, again, point 2 says with respect to documentation that the CA firm should have policies for maintaining confidentiality, safe custody, integrity, accessibility of documents. So whatever files and all we keep in our office, we have to have policies so that we are able to maintain confidentiality. It shouldn't happen that any person comes and gains access to the files, and also we have to have policies with respect to accessibility. It shouldn't happen that any person can randomly make changes in the files. We have to have policies with respect to integrity also. Okay, now these documents, guys, we have to retain it for a certain period of time. Can anyone tell me about retention? For how many years do we need to retain our audit documentation, or let's say engagement documentation? Okay, Pavi says 7, right? So retention of documents for monitoring compliance and legal requirements, typically it is 7 years for audit engagements, right? Okay, and who is the owner of these documents, guys? Sir, you are teaching us 230 only, right? In regular classes, that is why, if you recall, I taught you 230 first. Okay, we covered 210, then I went to 230 first. But now, since we are revising, we are just doing it chapter wise. Okay, all right. So who is the owner, guys, of the documents? Ownership of engagement document rests with the firm. The CA firm will be the owners, and they have the discretion, guys. It's up to them. Can they make some portions available to their clients? Yes, it says with discretion for limited client disclosure. However, it should not undermine the validity or independence. But it should not happen that you give the entire audit documentation. There would be no element of surprise. Next year, when you go and do the audit, they would be knowing everything about you. So remember, guys, that ownership of the engagement document, it rests with the firm and with the discretion. I mean, it's our discretion whether we want to make some extracts or portions available to the client. Okay, all right. So engagement performance, we have covered, guys, 4 different things. Very easy. Again, what are the things? Consultation in difficult or contentious matters, engagement quality control review, difference of opinion, and then we have engagement documentation. Okay, and the last part, guys, again I'm telling you, see, we have covered how many policies, how many basic elements. We have covered leadership, we have covered policies with respect to ethical requirements, we have covered policies with respect to acceptance and continuance of client relationship, we have covered policy with respect to human resource and engagement performance also. Last one is also a policy. The last policy says that whatever policy you have made above, you have to monitor that so that they are effective. See, a CA firm, if they only make policies and keep it, it is not going to be of any help to them. They have to see whether the policies are followed. They have to see whether the policies are still effective, etc. So we have a concept of monitoring. So the last point says, ensure policies and procedures that you have framed, the above policies and procedures, are relevant, they are adequate, and they are effective. And there has to be a continuous evaluation, guys, and consideration of the quality control system. So the entire quality control system you have to evaluate. Okay, and it's a part of your monitoring process. So this is all about monitoring. Not very important, but I hope you have understood the concept. Okay, SQC1 is now over, and again I'm telling you, just don't go by the length of the standard, guys. See how easy it is. Be smart while you are studying, and things would be very easy. Now, if you remember, I told you, guys, the points of SQC1 and SA 220 are more or less same. Why? Because in SQC1 we make those policies, and the same policies are implemented actually when we do the audit. So SA 220 is merely implementation of the policies that is formed as a part of SQC1. Hence, the points would be same, right? But let us quickly go through it once again. I don't want to say that, okay, SQC1 is done, SA 220 is also done. A bit of some small changes are there. Concept wise, overall, there is no change. However, again, before I start, guys, I hope all of you are clear with this, that 220 is only for audit. It's a standard on auditing, right? So it's only for audit. And please remember, guys, 220 is implementation of the firm level controls, which is formulated in SQC1. Hence, majority of the concepts in the 2 standards are same. I hope you're clear on this. And with this, let us quickly start, guys. I'm going back to the master chart of chapter number 11. Basics done, 210 done, SQC1 is also done. Now let us quickly revise SA 220. Okay, now what is the name of the standard, guys? Quality control for an audit of financial statement. It is very clearly mentioned, audit of financial statements. So which assurance engagement we are discussing here? Audit. And because, sir, it is standard on auditing, what are you even telling us this, sir? It is of course going to be audit, right? Okay, so what is the objective of this particular standard, guys? Objective is just for your understanding. Okay, so it says this standard will ensure that when we are doing the audit, our audit complies, guys, with all the professional standards, laws, and regulations. And if we are able to comply with the professional standards, laws, and regulations, the audit report that we give has to be appropriate. So it says provide reasonable assurance that auditor's report is appropriate for the circumstance. That's it. Okay. So what are the objectives, guys? Ensure that we do the audit in compliance with the laws, regulations, standards, and the report that we issue is appropriate in the for the circumstance. That's it. Okay. And we have certain responsibilities, guys. If you see, most of the points will almost be same. See, number one is leadership quality. Then we have ethical requirement. In SQC1, we covered independence in ethical requirement only. We have a separate point here. Then acceptance and continuance of client relationship. There we covered specific engagements. Here the word is audit engagement. Okay. There we covered HR. Here we have assignment of engagement teams. Engagement performance we had covered. EQCR also we had covered. Monitoring also, and documentation also. So the points and the concept is very much same. Okay. But then yeah, the focus here is what we are now understanding those policies in terms of audit. So it's going to be super easy. Let's quickly understand. Leadership responsibility for quality in audits, guys. What does it mean? So engagement partner, now instead of writing the word CEO of the firm, managing partner of the firm, who is going to be responsible for ensuring quality of a particular audit? Now, if I go back by this example, guys, that, okay, X Limited, we were doing the audit of X Limited, and this is the CA firm who did it. Let's say A, B, C and company did it. A is the engagement partner. So A only will be responsible for ensuring quality, right? So who is responsible for ensuring quality? Engagement partner. Okay, then he should emphasize on importance of this engagement partner, basically, should emphasize on what? See the point, compliance with same thing, professional standards, laws and regulations. He should ensure adherence to the firm's quality control policies and procedures. That means which was set in SQC1. Then he should issue audit report which is appropriate, and he should encourage the engagement team to raise concerns without fear or reprisal. So any issues they have, the engagement partner should encourage that you can easily raise concerns without any fear. Okay. All right. Now, this engagement partner should should emphasize that quality is essential in audit engagement. If you are able to recall, guys, I'm just taking you back to SQC1. Here, what did we cover? That quality is paramount and non-negotiable across all aspects of the firm's operation, right? If you read the fourth point, and similar point we have in 220, that the engagement partner should emphasize that quality is actually essential in the audit of engagement. That's it. So ultimately here leadership responsibility is on whom? Engagement partner, for ensuring quality in audits. Okay. Now let's quickly go through the relevant ethical requirements. Engagement partner remains vigilant for evidence of non-compliance with ethical requirements. So engagement partner remains vigilant for evidence of non-compliance with ethical requirements. Okay. So if there is any non-compliance, again, engagement partner has to remain vigilant. Again, what are the ethical requirements, guys? 5 things: integrity, objectivity, professional competence, due care. We have confidentiality, professional behavior. So if engagement partner, he has to remain vigilant if there is any case of non-compliance. Okay. And if he observes, guys, if any non-compliance is observed or reported, then what has to be done? Engagement partner, in consultation with the firm, determines appropriate action. So of course he will have to take appropriate action if any non-compliance is observed. We have a point on independence also, guys. See the point, engagement partner. So in SA 220 you'll always see the word engagement partner. Engagement partner assesses compliance with independence requirements. So you'll see whether independence compliance has been done. And how will he see this, guys? What steps will he do? Check. Basically, he's going to obtain relevant information from his firm and network firms. Then he will evaluate if there were any breaches to of independence policies, basically, and determine if they create any threat. Okay, so if any of the policies of independence which is formed as per SQC1, whether they have been violated, if there is any breach, and then if there is any breach, if there is any threat to independence, whether appropriate action has been taken to eliminate or reduce threats. Okay, so what is the concept that I've taught you, guys? Who is responsible for ensuring independence? Engagement partner. He has to take necessary steps to ensure that compliance with independence is done. Compliance with independence requirements is done. So what steps will he take? Sir, he is going to first obtain necessary information. Sir, what information? Okay, who is the client? Who are the partners who are going to do the, do the audit? Am I or my team members related to any of the clients? Let's say. So we are going to take information, number one. Then we are going to see if we have committed any violation or breaches of our own independent policies, and then we are going to see if it has created any threat. How can we take action to remove those threats or eliminate those threats? So don't you remember I told you the example that, okay, I saw later on, I realized that this article of mine happens to be a relative of my client, so I'll take action. I'll ask the article to go to some other assignment or engagement and probably get in another article here. Okay, so this is what we have to talk about. We have to learn in case of independence. Okay, all right. Next, guys, with respect to the next concept is acceptance and continuance of client relationship. Do you remember in SQC 1, what did I tell you? That before acceptance, you have to get vital information about three things: integrity of your client, whether you have the competence, and whether you'll be able to comply with the ethical requirements. Here also, see the point. Engagement partner ensures appropriate procedures are followed for client acceptance and continuance. So you have to follow appropriate procedure. What are the procedures? Consider information such as, same thing, guys. Same thing, integrity of principal owners, key management and governance, competence and capabilities of your engagement team, compliance with relevant ethical requirements, and significant matters. This is a new point from the perspective of audit. Significant matters from current or previous engagements and their implication for continuing the relationship. Let's say last year also you were doing the audit and you found something. Maybe because of that you would not want to continue further. So this is basically significant matter from current or previous engagements. Okay, so you'll have to consider all this. Finish. Okay, is it not same as SQC1? Yes, sir. Only one new point what we have covered is, if you were doing the audit earlier and you came across some significant matter, probably that might make you feel that no, it's better not to accept the audit of the current year. Okay, you might think of resigning. Okay, all right. Now, guys, let's say we have accepted. Now you have to have proper team members, right? So engagement partner ensures engagement team and any external experts, they collectively possess. So my engagement team member, or if I have to take the help of an external expert, so they must have what? They must have these things. They must have competence and capabilities. They must have the ability to perform the audit in accordance with the standards and legal requirements. That means my team members, they should understand the standards and the legal requirements, and they must be competent enough to issue reports which is appropriate in the circumstance. So very easy. Okay, so I would basically assign the audit to team members who have right capabilities and competence, who understand the standards, who understand the legal requirements, and who have the capacity to issue appropriate auditor's report. Okay, done. Now let's talk about engagement performance. Okay, so all right, now guys, are you all with me? I mean, are you able to follow? This is merely implementation of SQC1, everyone. Yes, okay. Hemna says yes, Deepika says yes. All right, great. Okay, all right. No, sometimes it's better to confirm, right? Maybe it shouldn't happen that I'm revising for my own benefit. I mean, you should benefit from the revision, right? Okay, all right. So let's talk about engagement performance now. Again, here with respect to engagement performance, guys, we have three things to cover. DSR, direction, supervision and performance, or review basically. Second is review, and then we have consultation. Direction, supervision and performance, then review, and then consultation. Okay, very simple points. You only tell me, guys, who is going to give direction to the team members, who is going to supervise the work? Please write again in the chat box. EP. Okay, engagement partner. Yes, all right. So it says engagement partner takes responsibility for directing, supervising, and performing the audit engagement. He ensures compliance with professional standards and legal requirements, and he ensures, again, appropriateness of the auditor's report, right? Okay, so then with respect to review, now once, let's say I have asked my articles and all to do the work, so it says engagement partner ensures reviews are conducted according to the firm's policies and procedures, and guys, review is done, and then before we finally give our audit report, confirm that before issuing the audit report, sufficient appropriate audit evidence has been gathered. That sufficient appropriate audit evidence supports your conclusion. You just can't give your conclusion in a haywire random manner. Whatever conclusions you are giving, it has to be backed, it has to be supported by sufficient appropriate audit evidence. Again guys, if you feel that there's a need for consultation, if there is a difficult matter, then engagement partner ensures appropriate consultation on difficult or contentious matters. So you may discuss within the team members, confirms engagement team members have undertaken necessary consultation. Engagement partner should basically confirm that have you done the proper discussion or not on matters which were difficult, on which they had some issues. Okay, and guys, understand this, that whatever conclusions, whatever consultation they had done, whatever discussions, whatever conclusion they arrived at, whether they have implemented the same, confirm implementation of conclusion from consultations. Same point again, let me just quickly take you to SQC1. Okay, if you see this consultation in difficult or contentious matters, do you see this point? Yeah, see, discussion with specialized, consultation with those having appropriate, and complete documentation of issues and consultation results. So almost same is what we are covering here. If you can see, confirm compliance of conclusions from the consultation. So engagement partner should ensure adequate discussion consultation takes place. He should confirm from his engagement team members whether consultation has taken place, and whatever discussions, whatever conclusions they have come up to from those discussions and consultation, whether it has been implemented or not. Again guys, we have engagement quality control review. Do you all remember this, that it is mandatory? EQCR, engagement quality control review, is it not mandatory for audits of listed entities? And did I also tell you that it is up to the CA firm? Can they make it mandatory for other audit engagements also? Yes, it is up to them. So engagement partner ensures EQCR for audits of financial statements of listed entities and other determined audit engagements. They may set a criteria that, okay, apart from listed companies, for all entities wherein public is interested, for all public companies also we are going to have EQCR. So it's up to the firm, they may set this criteria. Okay, so in this case, what needs to be checked is ensure, engagement partner has to ensure that an engagement quality control reviewer is appointed. I mean, at least inform me that you are going to be engagement quality control reviewer for this audit. Okay, then discussion will happen between A and B. If you remember the example, okay, let me take you back to the example. A and B. A is the engagement partner, B happens to be the engagement quality control reviewer. He is the reviewer. Okay, so his appointment needs to be done first, and then there will be discussion between A and B, right? Discussion about what? Sorry. Discussion about what? Discuss significant matters including those identified during EQCR with the reviewer. So engagement partners would have a discussion with EQCR, and engagement partner will only give the audit report, guys, after the engagement quality control review is completed. So not date the auditor's report until completion of EQCR. Same that what we have covered in SQC1. Done. Guys, if engagement partner and the quality control reviewer have some difference of opinion, see, engagement team follows firm's policies and procedures for resolving difference of opinion. So if there is any difference of opinion, you have to follow whatever policies your firm has for it. Okay, and it says, the dispute may be within the team with the parties, experts you have consulted, or it may be between the engagement partner and EQCR also. So how do you resolve the differences, guys? You have to follow the firm's policies and procedures, whatever policies and procedures you have formed. It may be different for different firms, guys. Let's say in our firm we have this policy, if there is any dispute, so we'll first go to the senior most partner. In some cases it may be, let's say if there is a dispute, we may consult another CA firm, okay, with respect to their viewpoint. So it depends on what kind of policies and procedures we have. Then we have, guys, monitoring. Whatever policies with respect to quality control of audit that you have made, I mean, in all these points, it has to be monitored. Why? System of quality control includes monitoring process. It is aimed at providing assurance that your policies is still adequate, it is effective and relevant. I told you guys, merely by formulating policies nothing is going to happen. You have to implement them, and at the same time you have to monitor whether those policies are effective or not. Done. And documentation, guys, what is it that the auditor has to document? He has to document all issues regarding compliance and ethical requirements, all issues and how will they resolve. He has to document, document compliance with independence requirements. Okay, then conclusions, why did he accept this particular client, he may document that also. And nature, scope and conclusions of consultations, if there is any contentious matter, we have discussed some matter, so this also has to be documented. Okay, and what are the documentation requirements by the EQCR? Okay, the partner B, if he is doing the engagement quality control review, so he will document basically procedures, performance of procedures required by firms policies on engagement quality control review. He will document the policy procedures which he performed. Then he has to complete the review work before, of course, the date of audit report. And if there is absence of unresolved matters that would question the appropriateness of significant judgments and conclusions reached by the engagement team, so whether the partner A, whatever judgment he used in doing the audit of X Limited, whatever conclusions he have reached, is it okay or not, it's okay, but basically he is going to document that as well. Okay, so these are the documentation aspects from the perspective of auditor, and EQC are not very important. So always remember, guys, when you do SQC1, do SA 220 also simultaneously, immediately or concurrently, so that things are very clear. Again, before I wind up, let me just tell you this for the last time, guys. SQC1 and SA 220, why are the points same? Because in SQC1 we formulate those policies and procedures for quality, and when we are doing the audit, we have to implement those policies, so that is why the points are same. And with this, if you see, guys, we have completed the chapter number 11, which is with respect to the ethics and terms of audit engagement. We have covered all these topics. All right, guys. So now let us start with the revision of chapter number 6. And the good part about chapter number 6 is it is going to be the favorite of most of the students. Why? Because we only have one standard to cover in this particular chapter. The name of the chapter is Audit Documentation, and the entire chapter will revolve around essay 230, which again is on audit documentation. Okay, so what all things do we have to cover? We have a lot of small topics, as you can see on the screen, and towards the end we also have some other explanatory material and all, which is given in your ICI material, that also have included as a part of this standard towards the end. Okay, all right, so all of you already know this, guys, that keeping the documentation, keeping the working papers is very important for an auditor. And when I say keeping the documentation, what is meant by keeping the documentation? See, guys, it's very simple. When you go for an audit, you apply audit procedures. So what procedures have you applied, and on the basis of those procedures, what conclusions have you drawn, and ultimately what procedures you applied, what evidences you have got, and what conclusions you have drawn. All the three aspects you have to document. Okay, you have to keep it as a part of your audit documentation. So what is the meaning of the word audit documentation? Audit documentation refers to recording of three things: procedures performed, evidences obtained, and the conclusions the auditor has reached. So you have to basically keep a record of these three things: audit procedures performed, audit evidence obtained, and conclusions the auditor has reached. Okay, now, guys, what is the nature of this audit documentation? Let us understand this. Now, it says audit documentation provides evidence of auditor's basis for audit report. Now, very important aspect you have to understand, guys. Why are we supposed to maintain this audit documentation? So in very layman's terms, if I tell you, guys, let's say we have done the audit, and later on, if somebody points a finger on us that the audit was not done properly, there is something wrong in the audit and all, we have at least our documentation to prove that, see, this is the procedures that we had applied, these are the evidences that we had gathered, and these are the conclusions which we have basically made therefrom. So please understand the nature. When I say audit documentation, the nature of audit documentation, it provides evidence of auditor's basis for audit report. It gives an evidence for the, it acts as a basis as to why you gave a qualified opinion or an unqualified opinion. So it serves as a basis. And number two, it also gives an evidence that audit was planned and performed in accordance with the standards on auditing and the other regulatory requirements. Guys, if you remember, in essay 200, we had covered the inherent limitations of audit, right? And because of the inherent limitations, of course, we cannot give 100% assurance. We can't give absolute assurance. We can't bring our audit risk to zero, right? And even if we do the audit, there would be certain misstatements in the financial statement. There might be some misstatements in the financial statement, but then whether you did the audit properly or not, whether you followed the regulatory requirements or not, if somebody later on again points a finger upon us, we will be in a position to show, see that we have applied all the procedures, we have complied with all the standards on auditing. So understand, audit documentation, guys, it will serve as an evidence for two things: the basis of your audit report, and secondly, whether you did the audit in accordance with, you complied with the standards on auditing or not, whether you have followed all the legal requirements or not. Okay, all right. Then guys, perhaps if you are able to prove that you did the audit in accordance with standards on auditing, you have complied with all the legal regulatory requirements, and thereafter despite that some fraud has happened in the company, then it's not your responsibility, guys, because the inherent limitations of audit would save you. They would save you only when you are able to prove that you did the audit properly, you were not negligent in doing the audit, and these documentation that we maintain is are going to be the only proof to probably show this, right? Hence audit documentation is very, very important. Okay, now one thing that I would want to discuss here, along, I should have discussed this along with the concept of the, the meaning. You have to understand this, guys, that audit documentation has to be maintained on a timely basis. As and when we progress with the audit, we have to maintain the audit documentation. Why? Because if you think that, okay, once I am done with audit and then I am going to jot down everything in as a part of my documentation, you might miss out on a lot of things. Okay, you might forget some things. So it is better that as and when you proceed with the audit, you should be documenting. Okay, all right. Now, apart from the nature of audit documentation, guys, we also have a topic to cover with respect to what are the different purpose of uh, having the audit documentation. Okay, and we have got 6 purposes basically why do we maintain audit documentation. What are the reasons, guys? Number one, guys, what happens is, when you have a proper audit documentation, when you have a proper audit plan, basically it will help you in planning and performing the audit, better planning and performance of the audit. So when you note down things, okay, it will help basically in proper planning and then also in performance of audit. Now, I always tell this in my regular lectures that, guys, if let's say you happen to be an article, you have recently joined the CA firm, and then I call you in my cabin and I want you to go to an audit, and then I give all the instructions to you verbally for, let's say, 40-45 minutes, that for fixed assets you have to check this, for land and building you have to do this, for inventory you have to do this, like this, and I'm just discussing, or let's say giving you lectures on for 45 minutes as to these are the things which you have to do in audit. But then probably once you reach the audit site, you might forget more than 50% of the things, you might miss out on important things. Hence it is always better that our program, our audit plan, everything is documented, and this documentation is going to help you to do the audit better, in better way. So planning and performance of audit, so documentation helps in planning and performance of audit. Second, supervision and review of audit. Let's say you have started the audit, everything, what all things we have to do in the audit, it is given to you as a part of audit plan, it is documented. Now when you're doing the audit, if you come across certain issues, you might take a note of the issues, and when your engagement partner again goes to the site, or you can discuss with the engagement partner, whatever resolution, whatever solution he gives to the issue, you may even take a note of the same. So what happens is, with audit documentation, the engagement partner is also in a position to do better supervision and review of audit. Also, what happens, guys, when audit documentation is maintained, let's say there are 2 articles, okay, Ram and Shyam. So I had asked Shyam to check all the asset side and Ram to check on the liabilities portion. Let's say, just a hypothetical example, okay. And then what is going to happen now? Like Shyam will be checking the items of the asset side, right? So as and when he checks the items of asset side, he will be having the working papers. So he'll put his initials on the working papers. So later on, it is going to act as a proof that, okay, the asset side was handled by Sham, the liabilities portion was handled by, let's say, Ram. So, these audit documentation also establishes accountability. It fixes the accountability of staff. Later on, Sham cannot say, no, no, sir, the fixed asset portion Ram only handled, because your signature is there, right? So it establishes what? Accountability. All right. Now, when we keep all the audit documentation, guys, let's say, put in a lot of efforts to calculate the depreciation and all, in a very logical, proper manner. We did a recalculation, and next year again, when I do the audit, I might use this worksheet. I mean, I might use this format, or I might use this as a basis to calculate depreciation next year also. Oh, let me check, how did we do it last time. Last time, I remember I had put in a lot of efforts. We calculated the proper depreciation. So let's check. So of course, what happens, if things are documented, you can use it for future audit reference also. All right. Next two things are with respect to quality reviews and investigation, guys. Okay. Now, if let's say, we have to see whether the audit quality is maintained or not. If there is some, let's say, peer review and all also, then probably how will you be able to show or prove that you did the audit, maintaining the quality and all, you performed everything in accordance with the standards. These documents are going to be of help. And if there is some external investigation also, let's say by there is a fraud in the company that we had audited, so everyone is going to, of course, point fingers on the management of the company, but then they would also blame the auditors, that what were the auditors doing, why were they not able to find the issues and the frauds. So the investigating department like CBI and all, they might even come to the auditors, you show that how did you do the audit. So in that case also, our documentation is going to be of help. Okay, so there are 6 points, guys, that you have to remember with respect to purpose of audit documentation. What are the points again? Number one is planning and performance of audit. Second is supervision and review of audit. Third is accountability of staff. Fourth is future audit reference. Fifth is quality reviews, and sixth one is external investigations. Done. Okay, so very simple, 3 basic points of audit documentation, guys, we have already covered: meaning, nature, and purpose. All right, now let's go to the next part of the topic, guys. Next part, basically, again, it's a very simple concept: form, content, and extent of documentation. Remember, guys, there are 3 words: form, content, and extent of audit documentation. So let's first understand what is the meaning of these 3 words. When I say form of audit documentation, guys, in very simple words, form means whether the documentation will be as a hard copy, or it is going to be soft copy. When I say what will be the content of the audit documentation, so you already know what are the things that we are going to document, guys. Sir, we are going to document audit procedures, then audit evidences, and audit conclusions, right? So when I say content of the audit documentation, see the things: nature, timing, and extent of audit procedures performed. So what are the procedures we have performed? Then results of audit procedures performed. Results means what? The evidence, the conclusions, and if there is any significant matter which has arising during the audit, so you are going to document this as well. So what are the 3 things, guys, which we are going to document? What are significant matters? I'll tell about this later on, but for the timing, just understand that what are the basic things that we document. What are the contents of audit documentation? Sir, the audit procedures we have performed. Upon applying procedures, the conclusions, the results that we get, that means the evidences, the conclusions that we draw. And also, if during the audit we come across anything which is significant, we are going to take a note of the same. So this is basically content of the audit documentation. And when I say, guys, extent, to what extent are you going to keep the documents? I mean, maintain the documentation. Are you going to check all the sales, all the purchases? Are you going to keep photocopies of all the invoices, vouchers, etc.? So extent basically means the quantity of working papers. Okay, so generally, just general discussion I'm doing, guys, generally the bigger the company is, the quantity of working papers is going to be high. Okay, so these are the 3 words. I hope it is clear to you: form, content, and extent. Now the main topic that we have to cover from this part of the chapter is basically what are the factors affecting the form, content, and extent of audit documentation. 3 words we have to cover, guys. What are the factors affecting the form, content, and extent of audit documentation? Okay, so this, please mark it as a important question. Okay, now on what basis will you know, what are the factors basically which will affect the form, content, extent of audit documentation? In simple words, number one, guys, very important question: size and complexity of the entity. I mean, I told you this, the bigger the entity is, the more complex the function of the enterprise is, the chances that the quantity of document would be high. I mean, the extent of documentation will be a lot more. So number one factor which is going to impact your form, content, and extent of working papers or audit documentation is size and complexity of the entity. Okay, then next is identified risk of material misstatements. Identified risk of material misstatements, the, let's say, you know, the more misstatements we identify, then probably identified risk of material misstatement. If the risk of material misstatement is more, you will have to do more procedures, right, to bring down the overall audit risk. So you have to perform more audit procedures, and when you perform more audit procedures, of course your documentation is going to increase, because all of you know this, that what all things are, guys, included in as a part of our documentation: procedures, evidences, conclusions. So in case, let's say, we have identified that there is a risk of material misstatement, high risk of material misstatement, you will have to extend the nature, timing, and extent of your further audit procedures, and hence, of course, your documentation is also going to increase. Okay, so after ROMMS, I told you nature of audit procedures. Now, also what kind of audit procedures you apply or use, of course, then this also is going to have an impact on the form, content, and extent of the working papers. Now, when I say nature of audit procedures, okay, guys, let me put it in this way. Now, let's say we are vouching, okay, we are checking the purchases, and there are 5,000 purchase transactions. There are 5,000 purchase transactions, and I have done sampling and I have chosen, let's say, 100 purchase transactions. Okay, so I'm checking all the documents with respect to the purchases. So it may be the invoices, we might be checking with the GST returns, etc., a lot of other things. Okay, now, so for each transaction that you check, it would be okay, guys, maybe if you just keep a note of the voucher numbers that you have checked. You don't have to keep a photocopy of all the vouchers, all the documents that you have actually checked. Okay, so it depends on the type of procedures that you apply. However, let's say, guys, sometimes what happens, uh, let's say there is some uh, order by the court, okay, against the company. There is an order by the court against the company, let's say. An order which is, let's say, not very much in favor of the company, and it's a very big order. The order is around 250 pages, and it is very significant. So in that case, perhaps you would want to keep a photocopy of the order, copy of the order from the court, okay, even though it is 250 pages. So it depends, I mean, you know, what type of audit procedures you have applied and what is the significance of this evidence. That also is very important in deciding whether you would be just noting the voucher numbers or keeping the photocopies of the voucher number. You know, in this example that I told you, you would be wanting to keep the entire copy of the court's order, even though it is 250 pages. So it depends on the significance. So we have this point: significance of audit evidence. Okay, then audit methodology and tools used. Again, guys, what methodologies and tools you are using? Like, for example, I told you that when I say form of working papers, it could be hard copy or soft copy. Right now, if you are using computers to do the audit, let's say if you are using Excel, if you are using various CAAT tools, we are using softwares like ACL, you are using softwares like IDEA to do sampling. That these are audit softwares, guys, don't get confused. Okay, so when you are using these softwares to do sampling and all, so you know, you might want to keep the documentation as a part of soft copy only. I mean, you'll maintain the documentation in the software only. Okay, however, let's say you have not been given any laptops and all, probably your principal just gave you a notebook, diary, so you might want to keep note of every possible thing during the audit in that diary also. So that is also your audit documentation, right? So what methodology and tools we are using? Are you using some CAAT, computer assisted auditing techniques? Are you using Excel for sampling or other softwares, etc.? So this will also be one of the factors which would impact, which would affect your nature, timing, your form, content, and extent of audit documentation. And finally, guys, nature and extent of exceptions. Exceptions means if you find any deviations, right, things which are not proper, you will have to keep a note of the same, right? And the more exceptions you get, the more notings you'll have to do, and then you'll also have to recheck, you'll have to apply procedures to see whether the exceptions have been corrected or not. So again, the more exceptions you get during the audit, the maybe the more will be the documentation. Okay, all right, so please mark this as important, guys. This is factors which is going to affect the form, content and extent of audit documentation. Okay, now let's talk about the next topic. The next topic again is a very simple one, which is about assembly of audit file. Now, what is assembly of audit file? To make you understand this, let me just again quickly discuss the concept. Guys, what happens? Let's say I have sent two articles, A and B, to do the audit. Okay, so A will be checking, let's say, the asset sides, and B is doing the liabilities part. Okay, A will be maintaining his own set of working papers. Okay, A will be having a lot of, let's say, working papers with respect to all the asset things that he checks. Okay, and B will also be having his working papers, lot of working papers. Now, so they have maintained the respective working papers, and they would put their initials also, so that accountability is established. Later on also I'll get to know that okay, fixed assets were checked upon by Mr. A, or this liability has been checked by Mr. B. So I'll be able to basically check this aspect, right? Now what happens is they have maintained their respective documentation. They have done the documentation on timely basis. That means as and when A was doing a particular audit procedure, he obtained the evidences, he drew conclusions, and he has taken a note of the same. That means he has maintained the documentation. But what happens is, guys, let's say when the audit is completed, they were doing the audit of, let's say, X Limited. When the audit is completed, what is going to happen? Now, there is a very important concept which needs to be followed, is basically all the working papers. Let's say there was one more client, article C. He also has some papers, working papers. Okay. Now, what happens is all these working papers need to be properly maintained, right? So what we will do is all these working papers, they are going to bring it together. Okay. And they are going to put it in a file, and they'll probably file it like this. Okay, so it will contain working papers from A, B, C, etc., and they will put all the working papers now together in a file. We call this as audit file. Okay, and this process of bringing together all the working papers and then putting them into one file, it is called as assembling of audit documentation. Okay, so we have to learn about the concept of, if you see the chart, we have assembly of audit file. So let us quickly go through the concept of assembly of audit file. Okay, now what all things you have to cover here? First thing, you have to understand that audit documentation, or let's say working papers, should be assembled on a timely basis. So it says, yeah, you have to do the assembling also on a timely basis. Remember, guys, the creation of documentation, the maintenance of audit working papers is also has to be done on timely basis. And they say that okay, once you're done with your documentation, you put it in one single file also on a timely basis. And then SQC1 states that assembling should be done not more than 60 days after the date of audit report. So this standard only says it has to be done on timely basis, but then SQC1 has given a specific timeline that assembling of working paper should be completed not more than 60 days after the date of audit report. So after signing the date of audit report, we have a time that within 60 days we have to complete the assembly process. Okay, now one very important point which I feel may be asked in the exam is, you have to remember, guys, that this assembling of working papers, it's an administrative work. It's an administrative work, can be done by the office persons, etc. also. And because it's an administrative work, please understand, guys, that this would not mean that you can make changes in the working papers. I mean, when you're collecting all the working papers and putting them into one file, okay, which is audit file, you can't make changes in your working papers. Only changes which are, let's say, administrative in nature can be made. So we have a point here that assembly of audit file, guys, it's an administrative process. Let's understand this. It says completion of the final audit file post your auditor's report. It's an administrative process, it's an admin process. Okay, and it does not involve, so SQC1 has given us a timeline that it needs to be done within, let's say, within 60 days of the issuance of auditor's report, right? Not later than 60 days, right? So after I have given the audit report, it would not, I'm let's say compiling all the working papers and putting them into one file. So this does not include procedures, new procedures. I don't have to perform any new procedures. It's merely an admin task. It says it does not involve new audit procedures or conclusions. Okay. And yes, however, you can make certain changes in the audit documentation, but they must be administrative in nature. I mean, let's say you have calculated depreciation. You can't just remove that page and recalculate depreciation and come up with some different values altogether, right? We can't do that because we have already issued our audit report on the basis of the previous working paper. So sir, what kind of changes can be made? So it's very simple. Only administrative changes could be made. Sir, please give us examples of administrative changes. Yes, very important topic. What could be the examples of the administrative changes that can be made? So guys, let's say if there are superseding documents, if let's say there are uh, documents, let's say I calculated depreciation and there are 3 pages of calculation of depreciation. First two are rough. After properly arriving at the depreciation value, I finally made a third sheet with all the values properly written, no cuts, nothing. Okay, so first 2 pages I can discard because it has already superseded with a fresh document. So we can discard, we can delete the old and outdated documentation, superseded documentation. Okay, then guys, we can organize and give cross referencing also on the working papers. We can put page numbers. Okay, we can make an index and give reference to the page numbers. Cross referencing can be done. Third is basically we can make a checklist, guys, that whether the assembling work is proper or not. So whether papers have been collected from article A, yes, done. Article B, yes, done. Article C, yes, done. So when all the papers are collected, so whether it has been arranged in proper sequence or not. Let's say for example, working papers with respect to assets first, then working papers with respect to liability. So this is admin work. Okay, so this can be done. You can even put an index in the first initial pages of your audit file. So signing off on a completion checklist related to file assembly. And next is documenting audit evidence obtained before the auditor's report date. Now guys, let's say you applied a procedure and then you saw uh, uh, let's say a particular ledger balance. Okay, and you saw it in the system and it was okay, and then you asked them to give a printout of the ledger, and then somehow the printer was not working, but then you saw the figure in the system and you were okay with it, and then you gave your audit report also. But now because you had considered that ledger, you had checked the value of that ledger, you might take a printout later, you might ask the client to give a printout later and put it as a part of your audit documentation. Why? Because you had considered this evidence already while issuing your audit report, right? So you can add that evidence as a part of your in your audit file. You had already considered it. Okay, so documenting audit evidence obtained before the auditors reported. If you come across something after the date of your auditor's report, it should not be a part of your audit documentation. So I feel guys, this can be a really important question, that what all changes, what kind of changes can be made after the assembling of audit documentation is done or during the assembling process. So remember, only admin changes, administrative changes can be made, and these are the examples. Fine. Okay. All right. So guys, with this, assembly of audit file is also over. Okay. So yes, we have covered meaning, we have covered nature of audit documentation, we have covered purpose, we have covered form, content and extent. Assembly also of audit file is done. Now again, a very simple concept with respect to retention. All of you already know this, that once guys we make our working papers, we have to retain it for a period of not shorter than 7 years from the date of audit report. So auditor shall not delete or discard the assembled documents before the end of its retention period. And what is the retention period? It should not be shorter than 7 years from the date of audit report. Okay. All right, next guys, again a simple one, all of you know this, we did cover this in SQC 1 also, right? So the next is ownership. You all know who are the owners of the working papers, guys. The auditor himself will be the owner. So audit documentation is the property of the auditor. Audit documentation is the property of the auditor. And however guys, we have a point. Can he, you have to answer with this, can he share the working papers with his client? Everyone write in the chat box. Yes. Can he share his working papers with his clients? What do you think, guys? Padma says no. Pavi says yes, but not entirely absolutely right. Right, yes. So, guys, it is up to me. It's my discretion. I can make some portions of my from my working papers. I can make it available to the client. Let's say client comes and tells me, sir, can you give your audit working paper to us? Why do you need it? Sir, actually, the depreciation calculation that you did, no, it is in a very good format. So we want to take it so that later on next year we will prepare our depreciation calculation on the basis of that format. So kindly give that depreciation calculation format. So yes, if it is up to me, I mean, I can give one or two documents from it, because it doesn't make sense, guys. We shouldn't be giving the entire documentation, because documentation ultimately are the evidences, the procedures we have applied on this client only. So the evidence I have obtained from you only, right? So why do you even need this working paper, the entire working paper? So, it's not a good thing that we give the entire working paper, but yes, sharing with the client we can do it, but it says make portions of working paper available to the client, and it is up to the auditor's discretion. If he wants, he can make portions available to the client. Okay, now let's say some government authority has asked for the working papers. Okay, let's say the CBI comes and they want to check the working papers. What do you think, guys? Can I make it available to them? Or or will I have to say no, if I give it to you, I will basically violate the confidentiality principle that we had covered in essay 200. What should I do, guys? Do you remember? Yes, Jawahar, you are correct, unless it's a legal obligation. So if it is by a government authority, only if there is a legal obligation to do so, then we can share with the government authority. Okay, and what about, guys, sharing with third party? Can I got to know so much about your company while I was doing the audit. Can I go and share everything with a third party? The answer is no. Okay, but then let's say I have been given this example from since so many number of batches. Probably, let's say if I like your internal controls, and if I have a seminar to speak on internal controls, and with your permission, if you allow me, probably I want to quote your example of internal control in the seminar. If the client allows me, can I use? Of course, yes. Okay, client, sometimes the client will be, yes sir, why not? You can use our example. It is good for us only, right? You are actually marketing us, you are actually doing our publicity, so they might feel like this, right? So they might allow. So the point is, can the audit documentation be shared with a third party? So only if the client permits. So let's say I have a flow chart of the stock control of a particular client, so I might show it as a part of my PPT and all, only with the permission of the client. Okay, all right. So ownership part is also over, and if you can see, guys, we are done with the standard. Okay, it's a very small topic, and we have covered this. Okay, yes. Okay, now towards the end, if you see, I mean, in your guys main study material also, towards the end of the chapter you would be seeing some application and other explanatory material, right? So let's quickly just go through them as well. Okay, and what is it that we have to cover? Number one, timely preparation of audit documentation. So I have been telling you this, guys, that audit documentation should be prepared on a timely basis. Okay, when I say timely basis, that means what? Let's read it, guys. It says the auditor must prepare audit documentation promptly. Timely preparation of sufficient and appropriate documentation, it enhances the quality, because if you postpone it to a later time, that okay, once the audit is complete, then only I am going to take up the notes, or maintain documentation of everything. So then what is going to happen? You might miss out on certain things. So we have a point here: documentation prepared after audit work is less likely to be accurate as compared to documentation at the time of such work is performed. So you might miss out on certain things, right? So it is always better that you prepare the documentation as and when you progress with the audit. So a mere concept we have already discussed, guys. Now this can be an important question. So we have been discussing the word audit documentation, right? So and I told you that audit documentation means keeping records of procedures performed, the evidences obtained, and the conclusions drawn, right? But then let's now discuss in practical life, what could be the different examples of audit documentation? What are the types of documentation that we can maintain? Okay, so if you can see, we have a list, guys. One is audit program. Audit programs are nothing, I mean, we are going to cover it in chapter number 2, audit strategy, planning and program. So but audit programs are what? Series of verification steps, okay, which we apply item wise. So for example, for land and building, what is it that we have to do? There is an audit program. Okay, first you have to do physical verification, then you have to check the valuation, and then you have to let's say check upon the ownership status, ownership aspect. So what all things we are going to do for one particular item of the financial statement. This is audit program. So audit program is also an example of audit documentation. Then all the analysis that we do, whatever issues that we come across during the audit, we'll take a note of it. So it can be called as issues memoranda. Okay, any significant matter that we come across during the audit, significant matters, what could be significant matters, I'll tell you with this aspect. Just wait for some time. But yes, we can just prepare a summary of all the critical significant matters that we come across during the audit. Okay, then letters of confirmation, sometimes we go for external confirmation, or WR, written representations, also can be a part of your documentation. Some checklists that you have made can be a part of your documentation. And the correspondences that we do, which includes email also, concerning these significant matters, then also it will be a part of the audit documentation. Okay, now we have covered this word significant matters so many number of times, right? So what is actually significant matters? Let's understand this. So there is a topic, guys, documentation of significant matters and any significant professional judgment that we make. So what could be the significant matters? I have just given certain examples of significant matters. Let's understand this, guys. Let's say matters relating to significant risk as defined in SA 315. Now 315 is basically identifying and assessing the risk of material misstatement through understanding the entity. Okay, so in 315 we have this concept of significant risk. Significant risk is a risk which requires special auditor's attention. Okay, so we'll cover it later on when we cover 315. Don't worry about it. But then if you have attended my regular sessions, perhaps we cover 315. You already have the knowledge of these standards. I mean, okay. So we don't follow the ICI material sequence, and I did not go chapter wise when I was teaching you in my regular session. So I took some topics of chapter 1 first, then chapter 11, then 6, so that you develop the concepts, and then we proceeded with the entire subject. So anyways, so what are significant matters? Number one, matters leading to significant risk as defined in 315. So number one is any matter which leads to significant risk is a significant matter. Okay, next, these are only examples, guys. Let's say you came across certain things. Okay, I'll put it in this way, guys. How do we assess the risk of material misstatement? Okay, what is it that we consider, guys? We will consider the entity and its environment, including its internal controls. We basically check the inherent risk, we check the control risk, and accordingly we assess the risk of material misstatement. And upon assessment of risk of material misstatement, let's say we had assessed that the risk of material misstatement is this much, and accordingly we had planned for the further audit procedures, right? But now when you actually go and do the audit, you check the controls, you do a test of controls, and then you find that whatever controls you are testing, they are not at all good. And the earlier ROMS that you had assessed was at this level. Now you feel no, ROMS is at this level. Now what has happened? This is a significant thing, guys. You will have to change your entire ROMS and then accordingly again make changes in your entire audit plan. So see the point. Results of audit procedures indicating potential misstatement or necessitating revision of risk assessments. So whatever risk of material misstatement you have done, it's a risk assessment, right? So you have to now revise it. It's a very crucial thing, guys. I mean, if you have to actually revise your risk of material misstatement, all your further audit procedures plans are going to be revised. Okay. Next, circumstances causing significant difficulty in applying a necessary audit procedure. So you are not able to apply an audit procedure. Okay. And then let's say you came across some findings potentially leading to modification of audit opinion. So because of this finding, you are giving a adverse opinion, you're giving a qualified opinion, or you are including an EOM paragraph. So of course, if anything is there which would lead you to modify the audit report or give a EOM paragraph, etc., it's a significant matter, right? Anyways, guys, what will amount to significant is a matter of professional judgment. So I just went through, I mean, we just went through certain examples of significant matters. Again, I'm repeating, guys, let's say matters which might give rise to significant risk, matters which might necessitate the change or revision in your risk assessment. Okay, circumstances which would pose difficulty in applying an audit particular audit procedure, or let's say some circumstances or some audit findings which led you to give modified audit opinion, or maybe if not a modified audit opinion, you expressed it in the EOM paragraph. So these are some examples of significant matters. Okay, all right, now the last part, if you see, guys, it is basically about completion memorandum. A small topic, completion memorandum. Now please understand, if at all you get this word in the exam, completion memorandum, the word seems very high-fi, but it is nothing but, guys, a summary of your audit documentation. It's a summary, okay, that you make. Now sir, why would we make summary? Again, in case of big companies, guys, the documentation might be huge, and the senior partners and all might not be in a position to go through the entire documentation. So it's important that in large and complex audits we prepare a summary. Sir, I only do an audit of small company, only 4 transactions are there, do I still need to prepare memorandum? Completion not required. So what is completion memorandum? Let's read the meaning. It says the auditor may find it beneficial to create a summary. So completion memorandum is nothing, guys, but summary. The auditor may find it beneficial to create a summary, also known as completion memorandum, as a part of audit documentation. So always remember, this completion memorandum will be a part of your audit documentation. It's not a separate thing. It's a part of your main audit documentation. Sir, what all things will be included in this completion memorandum? You will include description of significant matters. See, we have to give summary, right? So summary should include all important things. So number one is description of significant matters which you have identified during audit. Sir, what is significant matter? We just covered. No, what are the examples of significant matters? We have just covered, right? Okay, then explanation on how these matters were addressed. So how did you tackle, or how did you resolve that significant matter, and cross references to other relevant supporting audit documentation providing detailed information. So these are the things which might be there in your summary or your completion memorandum. Okay, now why are we supposed to maintain this completion memorandum? Sir, it will facilitate effective and efficient review and inspection. Sir, I told you, in case of big companies, what is going to happen? The partner might not have time to go through, let's say, a lot of pages in the audit working files or working papers. So he would, it would be much more effective and efficient review if there is a completion memorandum, a summary. And of course, guys, it is particularly helpful for large and complex audits where there are numerous significant matters are involved. So just remember, guys, this concept of completion memorandum will be more useful in case of large and complex audits where there are a lot of significant matters or things in which require a lot of significant judgments as well. Okay, done. So if you see, guys, with this we have completed the entire chapter, including the application and other explanatory material. We have covered all the aspects of SA 230. That means chapter number 6 is now over. All right, guys, so we shall now be starting with the revision of chapter number 2. And chapter number 2 is basically audit strategy, audit planning, and audit program. You can see 3 words here. We have audit strategy, audit planning, and audit program. So what all things do we have to cover in this part of the chapter? If you can see in my chart, what we have done is we are going to take up the basics of audit planning and audit strategy first. Then we shall be covering one very important standard with respect to planning, which is basically SA 300. And towards the end, we shall also be covering one more word, which is audit program. Okay. Now, before I start with this chapter, guys, let me just tell you this in brief, that when I say audit strategy is a broader term. Okay, let me put it in this way. Yeah, audit strategy is going to be a broader term. Okay, based on the audit strategy, the audit plans are made. Okay, and when we make plans for, let's say, individual items of the financial statement, when we make when we list down the procedures that we have to do for each item of the financial statement, let's say for what we have to do specifically for land and building, what is it that we are going to do specifically for, let's say, checking one of the liabilities, then this can be called as programs. Okay, so please remember, strategy word, audit strategy is a broader concept. Okay, and based on this strategy, audit plans are made. Okay, in audit plan, we determine the nature, timing, and extent of audit procedures to be performed. FAP, RAP, all these are part of audit plan. And then when we go into more detailed level, of audit procedures that we have to perform, the audit procedures that we have to perform item wise, it is called as audit program. Okay, so I just wanted to give you a summary first, and now let us start, guys, with the concept. Okay, now if you can see, we have audit planning and audit strategy first. So let's read this, guys. Yeah, so we are going to first understand the meaning of the word audit strategy. Okay, and then I'm going to come back to the word audit plan. So first I'm going to take up the meaning of the word audit strategy. Okay, as I told you, it's a broader concept, right? So audit strategy is what? It sets out in general terms as to how the audit will be conducted and sets the scope, timing, and direction of audit. When I talk about audit strategy, guys, always remember the three words: scope, timing, and direction of the audit. So it's in set in very general terms. Okay, and of course this audit strategy will help in the development of audit plan. Okay, so strategy comes first, and based on the strategy you're going to make your audit plans. Okay, now if I put it in very layman's terms, guys, let's say audit strategies, like if I compare it with your exams, it's like deciding whether you want to go with group 1 and group 2, or both the groups, let's say, for that matter. Okay, and then once you have decided, okay, yeah, we are going to go ahead with both the groups, and these are the number of days we are left with, then you make detailed plan, let's say group wise, etc. And then when you make the more further plans, subject wise, and thereafter also, in each subject which chapter you have to focus more, and all this will be a part of the program, audit program, right? So it was just an analogy to make you understand that audit strategy is set out in very general terms, that and it will focus on the three words: scope, timing, and direction of audit. Please remember, guys, when you make an audit strategy, when we have the strategy in hand, it will guide us in the development of audit planning. Okay, audit plan. Now, again, I'm going back to the concept of audit planning, guys. What is audit plan? Now, let us first understand this. Okay, so audit planning means we have to plan the audit in advance so that the auditor is able to complete his audit in an effective and efficient manner, in a timely manner. See, in my regular lectures also, if you have attended, we discuss the entire audit process, right? And all of you know this, that we have to plan the audit, right? And only why do we plan the audit? So that when we start the audit, we are actually, we know what we have to do, and we are able to work effectively, efficiently, and we are able to complete our audit on time. So that is why planning has to be done in advance. Okay, and for your understanding, for the theoretical purpose, guys, if you, again, let me take you back to the regular notes. If you remember in the fundamentals part, I mean, just for the sake of understanding, okay, I made you, go through the steps of auditing. And if you can see, we have certain points here. Only in the fifth point we came across this, that yeah, audit has to be planned. Okay, first was, let's say, the appointment of auditor. Then the auditor, upon his appointment, he will determine the scope and objective of the work, and then he is going to understand the client, its environment, including internal controls, assess the risk of material misstatement, and then he is going to sit down and plan the audit based on the kind of misstatements, risk which the organization faces. Now, this planning, if you see this audit process, it might seem to you as a discrete phase. It might seem to you that yeah, it has to be done only when the ROMS is assessed, and it has to be done prior to you, performing audit procedures, right? It might make you feel this, right? However, this is only for the purpose of making you understand the subject, right? It is very theoretical in nature. In practical life, if I tell you, guys, you have to understand that planning is not a discrete phase of an audit. It's not one specific phase of audit that yeah, all the planning you have to do it here, and then the concept of planning ends. No, it's not a discrete phase of audit, rather it's a continuous and iterative process. I mean, even though you do majority of the planning prior to starting of the audit, but then during the audit also, and when you apply procedures thereafter also, you might have to do some planning. So always remember, guys, that planning is not a discrete phase of auditing, rather it's a continual and iterative process. Okay, now what are the benefits of planning, guys? When we plan things, what is going to happen? So there are 6 benefits of planning that you have to remember, guys. What are the benefits of planning? Number 1, so when I plan things in advance, guys, let's say I have a bank audit to do, and when I plan things in advance, I would know, I mean, that okay, these are the areas where I have to focus more, these are the areas where my team members have to pay more attention. So it helps you to devote attention to important areas. Okay, number 1. Second, when I have a full audit plan with me, and let's say what happens now, I give the audit plan to my juniors, to my articles, so they will follow the plan, and they'll do the audit, and then when they find any issues during the audit, they may simply take a note of it, simply take a note of the same along with the procedures that has been mentioned in the plan. And then what is going to happen, if I am the engagement partner, let's say in the evening I visit them, I visit the client's place where my team members are already working, so it will be better for us to identify, understand the issue and resolve it. So identify and resolve problems also on a timely basis. Okay, third is basically organize and manage the audit engagement. Now when I have the entire audit plan, guys, of course it is going to help to better manage the entire audit. I mean, if you remember in essay 230 also, I told you guys, if I give instructions to my juniors, to my articles, the entire instruction is verbally given, they might perhaps not be able to recall more than half of the things when they actually do the audit, right? So when things are written, when we have a concrete plan, when we have a definite plan, what happens is it helps you to organize and manage your audit properly. Okay, and then guys, when we know that yeah, these are the things we have to do, for example, I started this concept with saying that okay, let's say I have a bank audit to do. So when I know that yeah, these are the things that has to be done in this audit, so accordingly this will help me to select the right team members also. Now let's say a bank audit, we have got a very bank audit of a big branch, and it comprises of majority of the business loans, CC account, etc. So in that case, I might feel, oh, I need some expert person. I need a senior article, or my chartered accountant to go with me. I mean, let's say a chartered accountant who is in employment. Okay, so I want him to go with me in the audit, employment in my firm. Okay, so no, don't get confused. So we might have a lot of people in our office, right? So if I have the plan written, it will also help me to select the right team members for the audit. Okay, then again, guys, point 2 and point 5 somehow related. When the plan is mentioned, when the plan is well written, when my articles are following the plan, if they find any difficulty, they will write the issues. And also I can also put it in this way, that if we have a proper audit plan, guys, it will help us in facilitating, let's say, direction and supervision of the engagement team members. I'll be able to direct them, I'll be able to supervise their work. And also, if we have a proper plan, when we do the planning in advance, it will help in ensuring better coordination, guys. Coordination between whom? Sometimes what happens, we might need an expert in the audit. So it's not that, it shouldn't happen that okay, you go to the audit and then you feel, oh, we need an expert, and then you are looking for an expert. It shouldn't happen like this. So when you are trying to understand the entity and its environment, you should be in a position to understand, oh, that yeah, we might need an expert. So coordinate with them in advance. So when you have a proper plan, when you do a good planning for your audit, you will be able to coordinate with the experts also. If let's say it's a big company and they have a lot of components, they have a lot of branches, and the component also has a lot of auditors, so you might have to coordinate with them also. So when you plan things in advance, it helps in better coordination with component auditors as well as experts. Okay, so remember this, guys, this is a very theoretical simple question, but it has been asked a lot of times in the exam. What are the benefits of audit planning? Okay, all right. Now I started the concept with the topic of audit strategy. I told you audit strategy, guys, is going to be set out in general terms. So audit strategy is very generic in nature. I mean, it's set out in general terms, and then we become a bit specific, and audit programs are further more specific. Okay, so now all right, so audit planning, we have completed the meaning, we have completed benefits also. Now let's understand a new topic. What are the elements of audit planning? Okay, and I would want all of you to mark this as important also. What are the elements of planning? Okay, so let's understand this. It's a very simple thing again, guys. When I say elements of planning, we have it can be categorized into two points. Basically, it can be categorized as under, we have preliminary engagement activities, and then we have the main planning activities. Okay, so there are two things. Okay, please understand. When I say audit, what are the elements of audit planning? We have two things. Number one is preliminary engagement activities, and the second one is, now you're actually going to plan the audit planning activities. Okay, now guys, if you remember, have you heard of this word before, preliminary engagement activities? Yes, everyone in the chat box, please write if you have heard about preliminary engagement activities. Yes, what is preliminary engagement activities, guys? Preliminary engagement activities is something, guys, perhaps which we must have covered. If you remember, we covered this as a part of 200 and SA 220 also. Do you remember that I told you that you just won't randomly accept any client as your any person as your client, right? We have to check upon their integrity, we have to see, we have to understand their business operations. All these points we had covered. So if you see, when I say elements of planning, we have two things. Preliminary engagement activities, that means things which you have to do before, let's say, even accepting the audit and all. And then once you accept the audit, what are the things we have to do, which will be a part of planning activities, right? So what are preliminary engagement activities? Now mark, preliminary engagement activities specifically is important. Okay, so let's say it says perform procedures to assess the continuance of a client relationship as per SA 220. So whether you would want to accept the client or whether you would want to continue the client, you have to decide on this as per SA 220. And very quickly, if you are able to recall, let me just try and open again the chart with respect to, yes, this one. If you see 220, the requirements, if you can see acceptance and continuance of client relationship, I told you what are the things that you are going to see. If you can see now on the notes, we have these points, guys. Number one is integrity of the principal owners. You are going to see whether your team has competence and capabilities or not. Then compliance with relevant ethical requirements, and also if you know, if in the previous audit you came across any significant matter, all these things, right? So yes, coming back to the chapter now. So when I say planning activities, the number one thing is preliminary engagement activities, and here you have to understand this part: perform procedures to assess continuance of client relationship as per 220. So I've just made you, you know, go through the points of 220 also. Again, evaluate compliance with ethical requirements, specifically with respect to independence, again as per 220, whether you'll be able to whether will you be independent or not, whether you know you'll be able to follow all the requirements of the code of ethics, etc. And then establish an understanding. Do you remember in asset 210, what did I tell you? That you are only going to accept an audit when the preconditions to an audit are present, as well as we have the common understanding. So only when the preconditions and common understanding is there, you are going to accept the audit. So as a part of preliminary engagement activities, you even have to check this aspect: establish an understanding of the terms of engagement as mandated by 210. So this is basically, guys, part of preliminary engagement activities, right? And the most important thing now, sir, we are learning audit plan, right? So what is it actually that we do in audit planning? What are the planning activities, guys? So when I say planning activities, we have to do two things. Number one, guys, we have to formulate the overall audit strategy. I mean, audit strategy is going to come first, and then we are going to develop a detailed audit plan. So we are going to learn more about this in essay 300. 300 is about planning, right? So in essay 300 we shall learn that yes, we are going to make the audit strategy first, and then we are going to make a detailed overall audit plan. Okay, so remember guys, I feel this can be an important topic. What are the elements of planning? So remember two elements: preliminary engagement activities and planning activities. In fact, they may separately ask you what are the preliminary engagement activities. So please remember, client continuation, you have to decide acceptance and client continuation as per 220. Then whether you will be independent, you will be able to comply with the ethical requirements again as per SA 220. Then acceptance of the assigned engagement as per SA 210, agreeing the terms of audit engagement, right? So yes, preliminary engagement activities done. Now coming back to the topic of audit strategy, guys. So we have covered, see, we have covered the benefits of audit planning, right? Similarly, we have a topic on what are the benefits of audit strategy. So now we shall be covering the topic of benefits of audit strategy. Okay, now if you can see in your module also, guys, the benefits of audit strategy basically are given from the perspective of resources. Okay, so it says audit strategy will assist the auditor in determining four things. Audit strategy will help the auditor in determining four things. What are the four things? Number one, resources to deploy for specific audit areas. That means what type of people, what kind of people would be needing for the audit. I mean, do we need a lot of skilled people here, or I need to have experienced team member, or is it an easy thing a beginner would also be able to do? I need to decide on that. So when I have the overall audit strategy, it helps me to basically know about the kind of people I would be needing in this particular audit engagement. Number one. Then how many of them we would be needing. So second is amount of resources that we have to have. So amount of resources to allocate to specific audit areas. That means how many number of team members we would be needing, etc. How many number of hours should we be spending on the this particular audit. So this is basically amount of resources. Third, when do we need them? Third is when the resources are to be deployed. So if it is a interim audit, guys, we would be needing somewhere in the middle of the year. If it is at the cutoffs at the financial year end, so we might be needing them towards the end of the year. So when you have the audit strategy in place, it gives you a clarity. It helps the auditor to determine all these things. What are the things? Three things we have just covered, guys. Number one, what type of resources do we need? Number one. Second, how many of them do we need? That means amount of resources. Third is when do we actually need them? And finally, the fourth one is if we have all these resources, how are we going to manage those resources? So the fourth one says how such resources are managed, directed, supervised. That means, either through team meetings, or there will be certain reviews, quality control reviews, etc. All right. So remember, guys, this question has also been asked in the exam. You have to be very careful with respect to both benefits. I mean, whether they're asking you benefits of audit strategy or they are asking you benefits of audit plan, please read the question carefully and accordingly answer. Remember, when I say benefits of audit planning, there are 6 points, and when I say benefits of audit strategy, the points are more or less with respect to resources. It will help the auditor to determine the type of resources we need, when do we need them, how many of the resources do we need, I mean, how much of let's say quantity of the resources, and how do we manage those resources. All right, so it will give a clarity if you make an audit strategy, right? Okay, so the basics of audit planning and audit strategy is done, guys. We have covered. Now a very simple concept which I have already told you, and you must probably now understand this, that do you think there is a relationship between audit strategy and audit plan? Of course the answer is yes. And if I again go theoretically, guys, what is it that is going to come first? What do you think? Should we be making audit strategy first, right? And then when we make an audit strategy, it is going to help us in the development of audit plan. So this is basically what happens, right? So there is a relationship, of course, between audit strategy and audit plan. So let's read about this now. It says establishment of overall audit strategy. Establishment of overall audit strategy and detailed audit plan, they are not discrete or sequential phases. Now theoretically I can say that yeah, strategy is going to come first, and then thereafter you have to make the audit plan. But again, it's just for making you understand, guys. In practical life, the two things go hand in hand. I mean, it's not like that you have to first make strategy and then only you have to make a plan. They will be made together also. Okay, so it says they are very closely interrelated, and of course change in one would lead to consequential change in another. Like if my strategy changes, of course I'll have to make changes in the plan, right? Now imagine earlier you had a strategy of studying for both the groups. Now you have come down to just one group. So don't you think your level of planning, I mean the way you are going to approach and study each subject is going to change? Of course, yes. So remember, when there is a change in strategy, it would lead to a change in your plan also. Okay, now remember this line again, I'm reading, guys. Establishment of overall audit strategy and detailed audit plan are not discrete or sequential phases. In most cases, guys, in practical life, the two would go hand in hand. Okay, done. So if you see, we have covered the concepts of audit planning strategy, and we have also covered the relationship between audit strategy and audit plan. Done. First part of the chapter is already over. Okay, now we are going to further read about these two things, strategy and audit plan, and we are going to now take it up in the standard SA 300. SA 300 is basically planning and audit of financial statements. We are going to learn here as to how the planning of audit should be done. Okay, so here what is it that we have to cover? Let's quickly understand. Yeah, so in this standard, if you can see, we are going to learn two basic things. I mean, first is basic thing, why do we have to study this standard, the objective, and then as you can see on the screen, we have got five requirements to cover. Okay, it's a very easy standard but a very important one as well. Okay, so why do we need to study the standard of audit planning? I mean, planning and audit of financial statement. What is the objective? What is going to be taught to you in this particular standard? So it says, this standard, the objective is to plan the audit so that it will be performed in an effective manner. So this standard is basically going to tell us that, yeah, you have to plan the audit in advance so that you are able to do it or perform the audit effectively, right? We can complete the audit on a timely manner, right? Done. So the basic is done, and now let us, guys, start with the requirements of SA 300. Very, very simple standard. So we have got five requirements, guys. If you can see, involvement of key engagement team members, we learn about planning activities. Now this planning activities is the main topic of the entire standard. I mean, this standard is going to teach us how to plan the audit, right? So the planning activities is the core area of this standard, wherein we are going to learn that, yes, we have to make the audit strategy first, and then what is it that we are going to make in the audit plan. So all these things we are going to learn. Then we'll talk about if there is any change in your planning decision, about direction, supervision, and review, and finally about documentation. Okay, so let's start with the first requirement, guys. Involvement of key engagement team members. Now the first thing that should come into your mind, perhaps, I mean, you should be curious to know who is going to make the audit plan, who is going to overall plan the audit, who is going to make the entire planning for the audit. So you always have to remember that, guys, it will be the engagement partner and also other key members of the audit team. Why is it important to include the other key members? So that, guys, it should not be like a surprise to them that, okay, only engagement partner made the entire plan and then he's distributing the plan to the key members that you have to follow this plan. No, I mean, if the key members are involved in the planning stage itself, with the engagement partner, they would overall understand the audit better. They would have a better understanding of the entire things to be done in the audit. So it's important that along with engagement partner, we have other key members also who are involved in the planning part. Done. Okay, next, planning activities. Now please mark this as important because this is the heart, this is the core of the standard. Okay, now I have been telling you this. When I say planning activities, guys, we have two things to do. I mean, first we are going to make an audit strategy, and after the audit strategy is made, we'll learn about the audit plan. Okay, so if you can see, yes, there are two things that we have to understand. Yeah, it says auditor shall set the overall audit strategy that sets the scope, timing, and direction of audit. STD, scope, timing, and direction of audit, and that is actually going to guide in the development of audit plan. So there are, when I say planning activities, guys, we have two things. If you can see, one is audit strategy, and then we have description, we have the audit plan. So first audit strategy, and then we have audit plan. Okay, so let's learn first more about audit strategy. The basics I have already told you, right? We covered this here. What is audit strategy? Let me just make you go through the definition again. It sets out in general terms as to how the audit will be conducted. Okay, Yeah, it sets out in general terms as to how the audit will be conducted, and it sets the scope, timing, and direction of the audit. And then please remember, audit strategy, it's a very important line. Audit strategy guides the development of the audit plan, right? Keeping this in mind, let's understand about audit strategy, guys. There are a lot of things that we have to cover here, right? So yeah, we have already understood the meaning. Now we are going to learn as to how the auditor should establish overall audit strategy. So let's say, guys, you are the auditor of a company and you are making the overall audit strategy. What are the things that you should keep in mind? What are the considerations for making the overall audit strategy? Very, very important question. One of the favorites of ICI. Okay, so I have put a star mark also, if you can see. It says, in establishing the overall audit strategy, when you are establishing the overall audit strategy, what all things you should be considering, guys. So it says the auditor shall, there are 5 points, if you can see. I am just going to read the points first. Number one, the auditor shall identify the characteristics of the engagement. You have to know what kind of engagement it is. I mean, it's a tax audit, it's a statutory audit. You have to know the basics about the engagement. What is the accounting period that they are following, whether they are following from April to March, or whether they are following calendar year January to December. What is the reporting currency that they are using, whether they report in INR or they are using US dollars. So all these basic things you have to know about the engagement. So we'll learn more about it, but for the moment, just remember, number one is, when you are making an overall audit strategy, you have to know, you have to identify the characteristics of the engagement, number one. Second, you have to know the reporting objective. I mean, whether it's a statutory audit, so of course after the end of the year you have to prepare a report. If it is an interim audit, if you know, you'll have to give the report somewhere in between the year, right? So ascertain the reporting objectives. So you need to know the reporting objectives of the engagement, so that you can plan the timing of audit and nature of communications. So we'll learn more about reporting objectives. Then we have to understand some factors which are significant in directing the engagement team's efforts. So we need to know, okay, in this particular audit, what factors would be very much significant. I mean, those areas wherein I would want my team members to focus more. Okay, read the point again. Consider the factors that are significant in directing the engagement team's efforts, and also you'll have to consider the results of preliminary engagement activities. Again, see, we have this word preliminary engagement activities. And also, guys, when you are making an overall audit strategy for this particular audit, let's say, you would also use the knowledge that you have gained through other assignments, right? So when we are making an overall audit strategy for this particular audit, we are going to consider the results of the preliminary engagement activities, and at the same time, whatever knowledge we have obtained from other engagements. And then also, when I'm making an overall audit strategy, guys, I would want to know whether I have the right number of people to do the audit, whether I have the necessary skilled employees to do the audit, and whether I'll be able to manage my people time or not. So last point is ascertain the nature, timing, and extent of resources. It's not audit procedure. Generally, when we read NT, nature, timing, and extent, we generally use these three words in context of audit procedures, right? But here, ascertain the nature, timing, and extent of resources necessary to perform the engagement. So basically, you'll get to know, if you remember the benefits of audit strategy, I told you it is with respect to resources only, right? That how much resources, how many resources you need, and what type of resources you need, when do you need them, how will you manage them. So all these things you have to keep in mind. Okay, again, what are the 5 points? What is it that we just covered, guys? So when you are establishing the overall audit strategy of a company of a client, let's say, what are the things that you have to keep in mind? Sir, characteristics of the engagement. Then second, what are the reporting objectives? Third, what are the factors which is going to be significant in directing my engagement team's efforts? Fourth is basically the results of the preliminary engagement activities, and of course, if I have some knowledge from other engagements. And finally, the I'll have to ascertain the nature, timing, and extent of resources that would be required, that would be necessary to perform the engagement. Okay, now, so it's a very simple question, it's a very straightforward question, but then, guys, you have to understand the words in a detailed manner. So when I say identify the characteristics of engagement, what does this characteristics of engagement even mean? So it says, yeah, I have just given certain examples. These are examples, you don't have to learn them, but yeah, it is there as a part of your I say material also, it is there. And what, when I say identify characteristics of the engagement, what does it mean? It simply means, guys, you have to understand the financial reporting framework which is applicable on them. If there is any industry specific requirement, like, of course, this is a revision session, right? You must have covered the chapter of bank audit also. Did you cover there the concept of LFAR, long form audit report? Now, long form audit report is a report which is industry specific, which is peculiar to a bank, right? The banks are required to have that report, LFAR. I mean, the auditors of the bank are required to make that LFAR report. Auditor of a normal company who is into trading or manufacturing, we don't have to prepare LFAR, right? But then what I'm trying to tell you is, when you are making an overall strategy for the audit of an entity, you need to know, oh, what are your reporting requirements? Do you have any industry specific reporting to be done or not? So these are all what characteristics of engagement. You have to understand the audit coverage. I mean, when you are making a strategy for a company, guys, of course you would want to know how many branches does this company have, and from how many countries is this company operating. All these things you need to know, so that you can plan on the coverage of the audit. And if they have a lot of branches, if they have a lot of components, let's say, you might have to coordinate with their component auditors. So this is also a part, coordination with other auditors. Then what reporting currency are they using? Do they even have a department of internal audit? Because, if they have internal audit department, somehow you can be a bit happy. Why? Because ultimately, if they have an internal audit department, their internal controls, the chances of their internal controls to be good will be high. And if their internal controls are better, the chances of misstatements in the financial statements might be low. And ultimately, you all know this, that internal auditors ultimately contribute to the work of external auditors, right? Somehow. So we would be, of course, curious to know, as statutory auditors, whether this particular organization has got internal audit department or not. So these are some examples of characteristics of the engagement. You should be knowing about all these things, and then only, guys, you will be able to make the audit strategy. Yes or no? Right now, imagine a person doesn't know, a student doesn't know how many subjects are there in each group, and he's making a strategy that, yes, I have to clear both groups. Or you need to know first how many papers are there in each group, okay, and what is the extent of the coverage, and also then only probably you will be able to make a good strategy, right? That's how this is. You have to understand the characteristics of the engagement. Now, second is ascertain the reporting objectives. So what do you mean by reporting objectives? Again, let's understand the example. It simply means, let's say, the reporting timetable. When I say reporting timetable, what does it mean? When I say reporting timetable, it means, guys, when you are making your audit strategy, it should not happen that they want the audit report immediately. Let's say they are looking for a statutory audit, and you have made your plan for interim audit. No. So your planning should be in alignment with the timetable. I mean, aligned with the entity's reporting timetable. Then, guys, we have to make a lot of communication. It says, read the headings properly. It says, ascertain the reporting objectives of the engagement, and also nature of communications. So during the audit, guys, I mean, um, we have to do a lot of communications, right? So it says, the point says, communicate with the management regarding expected reports and audit work status. I mean, talk to the management. So what kind of reports are they expecting? Accordingly, you are going to make a strategy. You have to make a communication within your team members also. It says, determine the nature and timing of team communications and meetings. And then we might also have the need to communicate with third parties. Who could be third parties, guys? It could be, addressing any statutory or contractual reporting responsibilities. It could be anyone. In fact, communication with third parties, it could be with some experts also, right? We can, in fact, have a communication with the external legal counsel as well, right? So these are all the communication requirements. Okay, then after this, if you can see, what are the third and the fourth points, guys, to be kept in mind? Third and fourth, we are going to collectively study. If you can see, I have a bracket here, right? So we are going to now understand examples of what could be the factors which are very much significant in directing engagement teams efforts. Now, for example, materiality level. Of course, I need to tell all my team members that, yeah, this is the materiality level, and accordingly we are plan and we'll do the audit, right? So some examples we are going to cover, and also consider the results of preliminary engagement activities. Okay, and if you have gained any knowledge from the other engagements. Okay, so let's read these the examples of these 2 points. We have a lot of example. Let's say materiality level. Now it's a very significant thing, right? And when we come across materiality level, we have to, you know guide, we have to tell our entire team about the materiality level, and accordingly they are going to put in their efforts. So it says establish appropriate materiality levels. Then risk identification, identify areas of higher risk of material misstatement, risk of material misstatement. So on areas where the risk of material misstatement is high, of course it's a significant matter. Now for example, if I talk about bank audit, okay, so probably somebody who's experienced in bank audit, I would ask them to handle the loans and advances part. Somebody who's very much a beginner, I would ask them to check other things, maybe let's say check whether compliance of KYC has been done. I mean, KYC norms have been complied with the opening of these savings accounts. It's a very easy thing to check, right? So what I'm trying to tell you is read the point carefully. It says consider the factors that are significant in directing engagement teams efforts. Which area should they focus more on? So of course these factors are going to be important. We'll direct the engagement team's efforts based on materiality, based on the risk of material misstatement. Okay, I would also ask them to be to be alert throughout the audit. So emphasize the need for questioning mind and professional skepticism. Even I can even check the previous audit report, consider findings from the previous audit, especially regarding whether the internal controls were effective or not. Okay, now guys, when I say consider the results, if we have combined both the points 3 and 4 here. Okay, so guys, let's say uh, yes, you can mention here this aspect that when you're seeing the previous audit reports, or let's say how committed the management is uh, towards the internal controls, you can use all these aspects also. Let's say you were doing the audit of this company only previous year, you would have gain an understanding about all these aspects, right? So these are certain examples of point 3 and 4. And finally, when I see say point number 5, ascertain the nature, timing and extent of the resources necessary to perform the engagement. What does this mean? It means, guys, we have to have appropriate team members. We have to select the right team members for this particular audit engagement. So choose an appropriate member of the engagement team, and allocate audit tasks effectively among audit members. It should not happen that I have a team of 5 6 people, 2 of them are always free and 4 of them are overburdened. So we have to allocate also properly based on the experience, based on the knowledge they have. And uh, guys, we have to have a budget also. I can't just ask 20 employees of mine to just go in one audit, right? When we fix on the audit fees, of course everything would be budgeted. How many staff will be going to the audit, how many hours they would be putting in the audit. So all this has to be planned. See, we do the audit, it's not a charity work, right? Of course we have to do the audit effectively, efficiently. We have to maintain the quality of the audit, as well as we have to make decent profits also, right? So we have to make budgets, right? All right, so done. This was the most important topic, guys, of the entire essay 300. Okay, again I'm telling you what is it that we covered. We are studying the planning activities, and in the planning activities, guys, the number one thing that we have to do is we have to make audit strategy. Okay, what is audit strategy? You already know. Audit strategy is basically set out in general terms. It tells us basically about the STD, scope, timing and direction of the entire audit. Strategy helps in or guides in the development of audit plan. All these basics you already know, but this question super important. What is it? What are the considerations, or let's say what are the points to be kept in mind when you are making the overall audit strategy? So 5 factors you have to keep in mind. Okay, again repeating: characteristics of the engagement, reporting objectives and the nature of communication, factors that are significant in directing engagement teams efforts. Fourth is basically consideration of the results of preliminary engagement activities. And the last one is about the resources, the nature, timing and extent of resources. How many of the resources you need, ascertain the NTE of resources. Done. Great. Now once this audit strategy is made, guys, I have been telling you this. After the audit strategy, after the development of overall audit strategy, now it is going to help us, it is going to guide us in the development of overall audit plan. So when I say audit plan, what is audit plan? What will it include? Audit plan is basically, guys, 3 things. Sir, nature, timing and extent. We have to plan for the nature, timing and extent of RAP. RAP is something that we do in accordance with 315. RAP is what? Risk assessment procedures. And why do you even do RAP, guys? Because when we do an RAP, it will help us to identify, and assess the risk of material misstatement. Risk assessment procedures will help us to basically assess the risk of material misstatement. And on the basis of the risk of material misstatement that you have assessed, we are going to further plan our audit. We are going to, go with further audit procedures. So nature, timing, and extent of further audit procedures as per 330. What is included in further audit procedures, guys? We have the test of controls, we have the substantive procedures, right? Okay. And next is any other planned procedure. So when I say audit plan means, guys, this is the RAP we have to do. These are the FAPs we have to do for the entire audit. Okay. Now our standard only refers to the word strategy and audit plan. Okay. In our ICA material separately, the word audit program is given. And generally, I mean, internationally, the word audit program is not considered. Audit plan is only a more popular word. I mean, if you make a very detailed audit plan, it could be item wise, right? I can make an audit plan for land and building. But if I'm making an audit plan for only land and building, in our ICA material, we are calling it as audit program. Okay. So many times, guys, I mean, audit, the two words that is used globally, internationally, is audit strategy and audit plan. Okay. All right. Now, I have told you, okay, again, let me just discuss. All of you know this, that audit strategy and audit plan are related. And change in one would consequentially, I mean, would lead to some consequential changes in the other, right? Now, guys, it might sometimes happen that you have made an overall audit strategy, you have assessed the ROMS, and then when you start the audit, okay, you might have to make changes in your plan. Okay, so let's understand, there is a topic, changes to planning decisions. It says auditor shall update and change the overall audit strategy and the audit plan during the course of audit. Now, one common thing I'll just discuss, guys. Let's say we had assessed ROMS at this level, just hypothetical example, at this level, okay, and accordingly we made our plans for further audit procedures, that these are the test of control, substantive procedures. But then when I actually did the test of controls, I found that none of the controls are effective, none of the controls are operating properly. Now the earlier ROMS that you had assessed at this level, now actually it is at this level. Now because your ROMS has increased, okay, your planning, your further audit procedures would also change, right? So during the course of audit also, there might be changes in our planning decision. I did tell you this, guys, okay, if you remember in the basics part, that when I talk about audit planning, the majority of the planning would be done prior to you starting the audit. But then audit planning is, remember, it's a continuous process, it's an iterative process. It will go on almost till the end of the audit. Okay. All right. So next is about direction, supervision, and review. Direction, supervision, and review. Now, guys, it says auditor shall plan. We also have to plan as to how much, direction or supervision or review we have to do in a particular audit. Now, I'll just give you one example. Let's say, guys, in this particular audit, I am sending two of my most experienced team members. Now, when I'm sending two of my most experienced team members, you only tell me the extent of my direction, review, and supervision would be high or low when I'm sending very experienced persons. Yes, everyone in the chat box. Yes, it would be low. But then let's say they are very much, they are very new persons who have joined the CA firm. They have just, cleared group 1 and group 2, and they have just started their articleship. So maybe I won't be relying on their work much. I have to give them proper direction. There will be more supervision and review, right? Similarly, if let's say it's an easy audit, there are only two transactions that happen in the entire company, very simple, that two bank transaction and one expense. So maybe in that case, the extent of direction, review, supervision will not be very high. But then if it is a very complex audit, automatically the direction, review, supervision would be high. So we have a topic here, guys, that it says, yes, you have to plan, the nature, timing, extent of direction and supervision, right? However, what are the factors on the basis of which you would plan? So this can be an important question. Remember, very simple, four points we have to understand. Number one, how much direction, review, supervision we have to do depends on the size and complexity of the entity, and it also depends on what area of the audit they are doing. Now, for example, let's say it's a bank audit, and I have asked them to check loans and advances, and I've asked few of them to go through the KYC compliances part with respect to savings account. So my review, supervision would also be more in case of loans and advances, because that is a very important area in the entire audit. So what area of audit they are checking, again, it is a important factor whether I have to review and supervise their work. If one item has higher ROMS, if let's say the SS risk or material misstatement is high, automatically my extent of review supervision would be higher. And also, how much work should of my team members should I be reviewing, directing, supervising? It also depends, guys, on the competence of my team members. If they are quite experienced, the nature, timing, and extent of direction, supervision, review would be less. Okay, so remember these factors, very very important, but a easy topic. Okay, and guys, last is documentation, and with which we are going to complete our standard. What all things are you going to document? You only tell me. Are you going to document as a part of your documentation? Are you going to document your overall audit strategy? Yes, sir. Are we going to document our audit plan? Yes, sir. And if you make any changes in overall audit strategy or your audit plan, you're going to make changes of the same. You're going to make a record of the same along with the reasons as to why you changed your strategy, why you made changes in your plan. That's it. So with this, if you see a very simple standard, SA 300 is over. And again, what all things did we cover here? We have just covered, guys. I mean, my majority of the time, I mean, in the entire standard, I just, devoted on the planning activities, because this is the heart of the standard. Rest points are very, very simple. Okay. All right. Now, if you have understood audit planning and audit strategy, we have covered, guys, SA 300 also. Let's just cover the last part of the chapter. The last part of the chapter is basically audit program. Okay, so we are now going to learn about audit program. And what all topics do we have to cover about audit program? So we have, it's a theoretical topic, guys. So these are the things that we have to cover about audit program. First, we are going to understand the meaning of audit program. Then what are the points to be considered in constructing an audit program? So when we are making an audit program, what are the things we have to consider? What could be advantages and disadvantages of audit program? Remember, I mean, in audit planning and audit strategy, we read the benefits, right? But in case of audit program, in our ICA material, it is given advantages and disadvantages. And then there are few miscellaneous points also with respect to audit program. So it's very much theoretical, but very easy for your understanding. Okay. Now, what is audit program, guys? I told you it's a series of verification procedures to be applied to financial statements. Series of verification procedures, and you have to apply it on the financial statements, the accounts, to obtain sufficient appropriate audit evidence, ultimately which will enable the auditor to express a opinion. So these are basically, in very layman's terms, I can say they are basically item wise verification steps. Item wise verification steps that the auditor will apply to obtain sufficient and appropriate audit evidence, and on the basis of which he is going to form conclusions and thereby give his opinion. So just remember, item wise audit procedures, item wise series of verification steps that we do. Okay. All right. Now, guys, few points I have to discuss. I'll take up the miscellaneous portion first. Okay. Now remember this: when we make audit programs, guys, okay, it's not a universal thing that I make one audit program and it is going to be applicable for all the entities that I audit. No, each entity is quite unique. Each entity is different. Their ways of operation is different. The way, the kind of business they are into is different. So we can't come up with one audit program which is going to be applicable for all entities, right? So it says evolving one audit program. It's not practicable for all business. Why? Businesses are different, the management is different, the internal controls they have is different. So we can't just have one audit program which is going to be like, applicable to all the entities that we audit. We have to make audit programs specific to the entities that we audit. And guys, it's if you make once, it's not like that you make audit program once and it's going to help you lifetime. Okay, it's, of course, it's an asset for us when we do the audit, but then you have to ensure that the audit program that you had made is still relevant. Okay, so when you are doing the audit, guys, we have to ensure that our audit program that we have made is updated from time to time, incorporate all the recent changes and developments so that it is relevant to us. So just one thing you have to remember, that you have to periodically review your audit program. One audit program that you had made 10 years ago might not be very much relevant in this financial year. So you have to assess the relevance, and it would be relevant only when you keep on updating it. So this is again another point, that you have to review your audit program and incorporate the necessary changes so that it stays relevant. And basic things. Okay, now let's say, guys, you are making an audit program. Okay, when you are making an audit program, again, this is one of the favorite questions of ICA. Okay, so what all things do we have to consider? So it says constructing, it says the points, the question that we are discussing is what are the points to be considered in constructing audit program. So number one is stay within the scope of assignment. Guys, what happens? What is the meaning? What is the meaning of the word scope? Scope means the areas. I mean, when you're making an audit program, include only those areas which you have to check in the audit. Don't go beyond the scope of audit. I mean, don't include those things which is not required to be checked in the audit. Right now, let's say one of my companies, they don't have inventory. I mean, they are a totally service based company, they don't have any inventory, let's say. So will I include a checklist, a audit program with respect to inventory? No, it's not even in the scope of audit, right? I mean, the item is not there, so doesn't it's not a good thing to have it in our audit program. Why to unnecessary create more complications, right? So we have to stay within the scope of assignment and ensure, guys, when I say audit program, it did not be a verbal audit program, it has to be written. Okay, else again the same thing will happen. I say everything, all the verification steps to my article verbally, and then he's going to forget 50% of the things for sure, more than 50% of the things rather. Okay, then guys, we have to, when I say audit program, what is it? I mean, in very layman's terms, we are writing down what? We are writing down the steps to be performed, right? The series of verificatory steps, verification steps that the auditor will apply, right? So, guys, for one particular item of the financial statements, there can be n number of ways, there can be different ways of getting audit evidence. But then it says determine evidence easily available and identify the best evidence. So in your audit program, you should include those procedures which will help you to get the evidence easily, and which is, through which you can get the best evidence. So you have to keep this in mind. Then also, when we apply procedures, guys, when we are applying procedures, it's a human thing, right? It's a manual thing. There might be chances of errors. So include those procedures wherein the chances of errors is less. I mean, the chances of us doing the errors is less. So it says consider the possibility of errors also. Okay, next, coordinate the procedures to be applied to related items. Now when we are making our audit program, let's say we have an audit program for fixed assets, and then we have a separate program for depreciation. These two things are related, so we have to make, ensure that there is coordination. Coordinate the procedures to be applied to related items. And it says, guys, see, your audit program should basically be detailed enough that it gives instructions to the articles. It helps the assistants. They can read the audit program and they understand, okay, these are the steps that we have to do. It should not have information which is let's say very less, and which doesn't help the articles or assistants. It should not have information, in lot of details also, which unnecessarily will make it bulkier. But then we must make an audit program in such a manner that at least incorporate that basic information which is going to assist the article assistants to perform the audit properly. That's it. So these are some of the points, guys, that should be kept in mind while constructing the audit program. Okay, all right. Now, if you have the audit program, what are the advantages and what will be the disadvantages? Let us learn about the advantages and disadvantages. Okay, now what could be the advantages of audit program? Guys, again, there are 7-8 points here, 7 points. Okay, let me just tell you this again. Audit planning, we had 6 benefits. Audit strategy, we covered 4 benefits, and the 4 benefits all were with respect to resources. And this one, again, we have got 7 advantages, or let's say 7 benefits of audit program. So number 1 benefit is, if we have the audit program, guys, it serves as clear set of instructions. It provides clear set of instructions to article assistants. They would be comfortable to do the audit because all the instructions are written there. Land and building, this is what you have to do first, then second this, third this. So it gives a comfort level to the people doing the audit. Okay, then guys, did I not tell you, if I have a proper audit plan, audit program, I would know, okay, these are the things we have to do here. Oh, you are a new person, probably you might not be able to do it. You do it next year when you gain experience this year. So I would have to send somebody experienced to check this aspect. So when you have the audit program written, you know what are the things to be done. It will help you also to select the right team members for the assignment. So the point says helps in selection of assistants. Okay, now helps in establishing accountability of work. Probably if you are able to recall, we covered all these aspects in essay 230 also, documentation, right? So when you have your working papers, when you have the audit program, I told you somebody is verifying the inventory, the article is going to put his initials there, and this establishes what? Accountability. Later on, 3 months later also, if I have some issues with inventory, I can see, oh, this article has done the verification of inventory, so I would ask him the doubts, right? So it establishes accountability. And very important again, provides a total perspective of the work. Provides a total perspective of the work. What does it mean, guys? I mean, imagine it this way. Let's say this is the entire audit program, okay, which my boss has given to me. So I know, oh, these are the things which we have to cover. It gives a total perspective, right? If you have a book like, let's say, you have this index also. The index part gives you what? It gives you a total perspective that, okay, in audit we have 11 chapters. Sir has included chapter 0 also, fundamentals. I mean, it gives you a total perspective, right? So you see the number of pages that you have to study. So this audit program also, when it is given to some auditors, the team members, it gives them a total idea that, okay, these are the things they have to check. And it serves as a guide for audits in the succeeding year. The same plan, of course, you can use it in the next year also. Okay. Now, imagine, guys, if I would have told you, if I would have given you the instructions verbally to do the audit, you would have missed out on so many important things, right? But then what happens if I have a written audit program? It fifth advantage is basically what? The danger of overlooking and ignoring certain areas is less when we have written audit program. So you would not miss out on important things. You would not overlook or ignore certain areas. Okay. And then, guys, I told you this, right? It gives you a total perspective of the work. Let's say you have 11 chapters and you are already, you know that, yeah, you are done with 5 chapters. So you know your progress, right? So similarly in audit, if we have an audit program, it will be easy for the engagement partner and all to trace the progress, basically to what extent have we been able to complete the audit. So it helps to check the progress of audit. And then, guys, I have been telling you this, that the inherent limitations of audit is not going to save you. You have to prove that you did the audit properly. You have to maintain the documentation. And when I say you have to maintain the documentation, what things are you going to show to the authorities when they come and point finger at you that you did not do the audit properly? Sir, see our audit program. We have included everything. We check this aspect. We check this aspect. We have complied with the requirements of standards on auditing. We have even complied with the requirements of companies that. So audit program is going to help you. What it says, properly drawn up audit program serves as evidence if any charge of negligence is brought against the auditor. So you would be able to prove that no, we did the audit properly. Okay. So if any charge of negligence is brought up against the auditor, you can use this audit program as a evidence. Okay. So these are the 7 advantages, guys, of audit program. And there are certain disadvantages as well. What are the disadvantages, guys? Sometimes what happens is that I have seen this a lot of times. I ask my article to, let's say, do this procedure, and we have an audit program for that. So he will just merely follow the audit program. He would not understand the logic as to why sir had asked me to perform this procedure, and upon performing this procedure, what is going to happen. So what happens many a times, because of the audit program, the work becomes very mechanical. Okay. And then it makes you inflexible also. No, as per our audit program, we have to first check fixed assets, and then only we have to check this, and then only we have to do. So because instructions are written there, it might make you inflexible also. And then also what happens is, let's say, I'll give a very simple example. Okay. Let's say you did the audit and later on there was some issue, and then I asked, hey, you did not check this, it's been a month, you have not checked this. No, sir, this was not a part of our audit program. It was like, Hare, this is a basic thing, you have to check it. I know it is a basic thing, but was it given in your audit program? Whose fault is this, sir? You only tell me. I mean, what is going to happen? Some of the assistants, some of the inefficient assistants may take shelter behind the audit program. Okay, they'll say, sir, in your audit program only this was not mentioned. You should have told me that I have to check TDS, whether TDS was deducted on the payments or not. I did not check it. Okay. And sometimes what happens, let's say, guys, the articles, they understand things and all. Some articles might be very intelligent, might be very creative also, and they have better ways of doing the audit. Let's say they have a better procedure to do the audit, but then they will not be able to apply the same. Why? Because it is not mentioned in the audit program. So it kills the initiatives of the efficient assistants also. Okay. So we have these disadvantages, and with this, if you see, we have completed all the topics of audit program also, meaning points to be considered in constructing the audit program. We have covered advantages, disadvantages, and the miscellaneous part as well. And now with this, we have completed, guys, chapter number two's revision. We have completed in detail all the topics with respect to audit plan, audit strategy, SA 300, and also audit program. All right, guys. Now let us start with chapter number three. The name of the chapter is risk assessment and internal controls. Okay, and as you can see on the screen, guys, we have a lot of topics to cover here in this particular chapter. I'm just giving you an overview. First, we are going to discuss about the basics of audit risk. What is risk of material misstatement, some assertions. So all these are basic topics, and then we are going to study one standard, a very important one from the 300 series, which is SA 315. And again, a continuation, an extension, let's say, of this standard. We are going to learn a lot of topics with respect to internal controls. Okay, after that we have two more standards from 300 series, which is on materiality, and basically how the auditor is going to assess to the how the auditor is going to respond to the assessed risk, the risk which he has identified as a part of 315. And finally, a small topic on audit in automated environment. Now this automated environment used to be a separate chapter altogether in your old course, but now they have incorporated this as a part of chapter number 3 itself. Okay, so it's a big one, but yes, I'm sure that you will have a good understanding towards the end. Okay, so let's begin, guys. The name of the chapter is risk assessment and internal controls, right? So first thing is we have to understand risk, the word risk. Okay, risk assessment, we'll first understand the two risk. Basically, one is audit risk and the second one is risk of material misstatement. Okay, so what is audit risk, guys? You have to understand audit risk is basically the risk that auditor expresses an inappropriate audit opinion. Okay, he gives a inappropriate audit opinion when the financial statements are materially misstated. Okay, so when the financials are materially misstated, ideally, guys, okay, what kind of opinion should he have given? When the financial statements are materially misstated, he should have given what kind of opinion? Let's say if there is misstatement, he should have given either qualified or, let's say, adverse. Okay, but then he ended up giving unqualified opinion. Okay, let's say, then this is going to be called as audit risk. So again, I'm reading the definition, guys. Audit risk means what? Audit risk is the risk that uh, uh, that auditor expresses an inappropriate audit opinion when the financial statements are materially misstated. Now be careful about the entire definition, the last part also, when the financial statements are materially misstated. So sometimes what happens, students end up thinking that, okay, let's say there is no misstatement in the financial statement. Ideally, the chartered accountant, the auditor, must have given unqualified opinion. Yes, if there are no misstatements in the financial statement, he should have given unqualified opinion, but then somehow he ended up giving qualified opinion. Now, will this amount to audit risk? The answer is no. This is not audit risk. This is something probably which is very rare, and only person, an auditor who is perhaps of unsound mind, is going to do this. Okay, so remember, what is the definition of audit risk? Audit risk basically means that there were misstatements in the financial statement, but then we expressed an inappropriate opinion. So we did not qualify the opinion, or we did not give an adverse opinion. Rather, let's say we gave unqualified opinion. So this is what is the meaning of the word audit risk. Okay, now when I say audit risk, what are the components of audit risk? Very simple. We are not going to go into the detailed discussion, but yes, always remember, guys, that audit risk is it comprises of inherent risk, control risk, and detection risk. And inherent and control risk, they are collectively called as risk of material misstatement. In your standards also, we would not be referring to the words inherent risk, control risk separately, but we generally, the word uh, combined assessment is used, so we use the word risk of material misstatement. But just for your understanding, guys, what is inherent risk? In very layman's terms, guys, inherent risk means assuming that there is no system of internal controls. Okay, what it's basically the chances of misstatements that would be there in the financial statement, assuming that there is no system of internal controls. Okay, what could go wrong with the financial statements? Now, what is control risk? Control risk is, we are assuming that there are internal controls. Despite that, see, controls can never give us 100% assurance, right? So those misstatements which will not be, let's say, identified or detected or prevented by the system of internal controls. So risk remaining even after the internal controls have been implemented, risk which the internal controls will not be able to find, basically it's the control risk. Okay. And what is detection risk? Detection risk is the risk that our procedures, the procedures which auditor applies, okay, even after the application of his audit procedures, some misstatements might still be there in the financial statement. So this is called as detection risk. Okay. Now, guys, is inherent risk in the hands of auditor or management? Please tell me this. Answer this in the chat box, everyone. Is inherent risk? Inherent risk is something which is, Amrita is saying, in the hands of management. Inherent risk is something which is inherent to the business. It is there, it's a part and parcel of the business. Yeah, Jawahar, you're absolutely correct. So inherent risk, even management might not be able to control it. However, yes, the management would try to reduce it by implementing controls. So the amount of controls, the level of controls they implement, okay, so they might somehow impact control risk. So management has the, management can impact control risk. And when I say detection risk, okay, it's totally in the hands of the auditor. Okay. Now you only tell me, if I want to reduce my detection risk, okay, that means I don't want that there should be chances of misstatements in the financial statement. I want my detection risk to be very low. In that case, what has to be done? In that case, the nature, timing, and extent of our audit procedures has to be increased. Yes, Pavi, you are absolutely correct. So we have to increase the nature, timing, and extent of our audit procedures, right? Now you have to always understand this. Let me just take you, I mean, we are discussing very briefly here. Okay. In my regular lectures, I almost spend 1.5 hours only on the concept of audit risk. Okay. We discuss practically also. And let me just uh, open this particular concept. We discussed this not only in chapter number 3, but in my regular lectures. If you have attended, we also discuss this in as a part of our fundamentals, right? See, we have this topic of audit risk here, and we have discussed all this in our regular lectures. But yes, you all know this, guys, that audit risk is what? Risk of material misstatement into detection risk. We have this equation, right? Just remember always that audit risk would be set by the auditors. They would set it at a very low level. Audit risk is something which is set at a very low level. No one would want to give a inappropriate audit opinion when the financial statements are materially misstated, right? So we would want our audit risk to be always low. Then this risk of material misstatement is assessed. How do you assess risk of material misstatement? Through inherent risk and control risk, right? You all know this, that ROMMS is equal to what? ROMMS is inherent risk into control risk. Okay. And guys, this equation practically is used to understand how much procedures we have to do in the audit. I mean, if you feel that your, let's say, ROMMS is very high, okay, then probably you might have to bring your detection risk to a low level. That means you will have to perform more audit procedures. You'll have to, the nature, timing, and extent of your audit procedures would be very high here. Okay. Anyways, I'm not going into the details here. I hope this is clear to everyone. Always remember, we have covered this as a part of our chapter 1 also, that guys, in due to inherent limitations of audit, we can't bring down the audit risk to 0. Okay. All right. Just last thing, remember, detection risk is in the hands of auditor. If he wants to bring down the detection risk, he will have to increase the nature, timing, and extent of his audit procedure. That means he has to do more procedures. Okay. All right. Now, guys, when I say risk of material misstatement, okay, this is something which you cover in all the chapters, all the pages of your audit. And I mean, because this is just a revision series, right? I did not take this word earlier, but then in my, again, in my regular lectures, what we do is, in the, I have a chapter number 0, which is called as the fundamentals. And in this chapter, we discuss all the important terminologies of audit. If you can see, we have audit terminologies, right? And we have discussed all the important terminologies. And here we also discuss risk of material misstatement, right? So before even I started a chapter in my regular lectures, you are already thorough with these words, right? But then practically, I mean, we have to understand, right? So only in chapter number 3 we are going to learn now about risk of material misstatement. All of you know this in very layman's terms. What is risk of material misstatement? Risk of material misstatement means the chances of misstatements in the uh, financial statement, right? The probability that there would be misstatements in the financial statement. So let's read the meaning, guys. It says ROMS is the risk that financial statements are materially misstated. Now, very, very important point to understand, guys. When do you assess this risk of material misstatement? You have to understand this. It has to be assessed prior to the audit, because only when you assess the risk of material misstatement, then you sit down to plan the audit, and then you go to the client's place and do the further audit procedures. So a very basic thing, I mean, you have to be very clear on this, that risk of material misstatement is the risk that financial statements are materially misstated. And when do you determine this? Prior to audit. And if you again go to the stages of audit that we had learned in the fundamentals part, guys, that is why if you see here, assess the risk of material misstatement, it comes as a fourth stage, fourth step. Only after assessing, then you do the planning, and only after fifth stage or fifth step, guys, we actually start the audit, perform audit procedures. So always remember that assessing the risk of material misstatement is something which is done prior to the audit. Okay, now when you assess risk of material misstatement, guys, you have to understand that risk of material misstatements may exist at two levels. At two levels. What are the two levels? We have two levels. Number one is overall financial statement level, and it could be at the assertion level for particular class of transaction or account balance or disclosure. Okay, now we'll just understand some examples, okay, of risk of material misstatement at overall financial statement level. Now what does it mean? First, let's understand this. So when I say risk of material misstatement at the overall financial statement, this means that this is something that misstatements which relate pervasively to the financial statement as a whole, and it may affect many assertions. Now, for example, let's say there is a misstatement in the profit. So when there is a misstatement in the profit, it would impact a lot of other things, right? Maybe that they have inflated the sales, maybe they have cut down on their expenses, whatever it can be, right? Let's say they have shown less profit, so maybe they have booked some bogus expenses in their P&L. So a lot of things may happen. Let's say, guys, I feel that the management of the company or the accountant of the company is not competent. They are not competent. So when they are not competent, they might not be doing the accounts properly, and when they are not doing accounts properly, it might impact many assertions, right? So when I say risk of material misstatement at the overall FS level, what does it mean? This means that the misstatements would relate pervasively to the financial statement as a whole, and it may impact many assertions. Okay, next, guys, it can be individually, I mean, account wise, it can be for a particular transaction or an account balance or a particular disclosure. So assertion level for classes of transaction, account balance and disclosure, it means it is assessed in order. Now please understand, the ROMS at the assertion level, it is assessed to determine the nature, timing and extent of further audit procedures, to express an opinion on the financial statements, and to basically bring down the audit risk to an acceptably low level. Okay, now in very simple terms, if I tell you, guys, all of you know this now, that this risk of material misstatement, right, it is determined at two levels. One is what? FS level, and the second one is the ABCD level, or let's say the assertion level. Okay, now please remember, I'll teach you this soon, that ROMS is actually assessed as per SA 315. Now once you determine the ROMS at the FS level and at the assertion level, then for the ROMS which is there at the financial statement level, okay, you are going to have some overall responses, okay, in accordance with SA 330. And for those as misstatements which are there in one particular transaction or account balance or disclosure, then what is it that we do? We determine the nature, timing and extent of further audit procedures to be applied. That means, again, as per SA 330. So the equation that we have been using, that okay, ROMS is equal to inherent risk into control risk, this is actually for the assertion level. Okay, but because for those misstatements which is at the FS level, you are only going to make some overall responses. Okay, we are going to learn about the responses part as a part of SA 330. Where is it that we calculate risk of material misstatement? As a part of 315. Okay, all right, let's go back to the chart, guys. Very simple. Now, do you think is there any relationship between ROMMS and detection risk? We have already discussed this, guys. I discussed the equation that say audit risk is equal to what? ROMMS into detection risk. Let's say I feel that the ROMMS is high. In that case, what is it that I have to do? I mean, I would always want my audit risk to be low. So I would have to bring down my detection risk. Okay, so always remember, guys, that there is an inverse relationship. There is an inverse relationship between, I had a diagram also. Yeah, this one. See, there is an inverse relationship between ROMS and detection risk. The higher the ROMS, you have to bring down the detection risk. And how do you bring down the detection risk? Of course, by performing more audit procedures, right? Done. So what is the relationship between ROMS and detection risk? Just one word probably you'll have to understand. Yeah, there's an inverse relationship. Okay, so yes, guys, we are done with the concept of audit risk. We have covered ROMS as well. Okay, now let us quickly go through the concept of assertion. Again, a very important concept. Now, what is it that we have to cover here, guys? This is a word which you come across in almost all the chapters of audit. Again, what is the meaning of the word assertion? Assertion means the claims, the facts made by management regarding certain aspects of the business, the facts. So if you see the financial statements of a company, okay, and let's say there is land and building there. So land and building, let's say 3 lakh rupees or 3 crore rupees. Okay, so it is conveying to us a lot of information. It simply means first that the land and building exists. Okay, and then it also means that land and building belongs to the company. Okay, that the company is the owner. It also means that the land and building's value is 3 crore rupees. Okay, so, and it also means that the company has the right to use that asset, right? Because it's their asset, right? So when you see the financial statements of a company, probably you would just read it as land and building 3 crores, but then it is conveying a lot of facts. So these are the facts or the claims which is made by management, that is called as assertions. Okay, now as an auditor, it becomes important for us because in audit we are going to apply procedures to test each of those assertions. Okay, so like for example, when I say land and building, okay, we have in the balance sheet, let's say it's 30 lakhs. Okay, so it conveys a lot of information. I told you that it conveys an information that land and building exists, so we have existence. It conveys an information that land and building belongs to them, so we have ownership, rights and obligations. Okay, then it gives a information that the valuation of land and building, let's say, is 30 lakhs. So we as auditors, what we are going to do, we are going to apply procedures to test each of these assertions. Now for example, whether land and building exists or not, what procedure can we apply? We'll apply physical verification. Whether the land and building actually belongs to the company or not, we might check the title deeds, right? And whether the valuation of is 30 lakhs or not, we might see some documents, we might ask for the certificate from the valuation office or something like this, right? So we have to, this is the reason, guys, why the word assertion becomes so very important in our audit. As an auditor, we are going to test each of these assertions by applying the necessary procedures, right? Now for your understanding, you have to remember that assertions, guys, we have to learn the assertions at 3 levels. Okay, so yeah, we have 3 levels of assertion. One is transaction level, then we have account balance. That means the account balance is what? The balance sheet. Transaction level is the P&L assertions, account balance, and then finally something with respect to presentation and disclosure. So we have assertions for at different levels. Okay, now for account balance, I'm going to start with the balance sheet first. So what are the assertions? Number one, see, again, consider that example, land and building. What does it mean? That number one, land and building exists, that the assets and liabilities and the shareholder equity balances, whatever it is, okay, as stated at the end of the accounting period, that exists. Okay, then that building belongs to the company, that When I say belongs to the company, that means the company has the right over that building. So it's a right, asset is a right and liability is of course an obligation. Okay, then 30 lakh rupees, it's the valuation, right? So it also conveys to us the valuation of the building, the carrying value. Let's say when I say valuation, basically assets, liabilities and equity balances have been recorded at proper valuations or not. And other than, let's say, land and building of 30 lakhs, they don't have any other land and building. So it also conveys that the company has disclosed all the land and building, and the total of land and building is coming as, let's say, 30 lakhs. So we have completeness assertion. That means all assets, our liabilities or equity balances have been fully reported. So remember, we have four CRVE: completeness, rights and obligations, valuation and existence. These are the four assertions for balance sheet items or account balances. Okay. Then we have transaction level assertions. We have five of them: accuracy, classification, completeness, cutoff, and then we have occurrence. Okay. Now, what does accuracy mean? It simply means that full amounts of all transactions are recorded. Let's say we are checking advertisement expense. Advertisement expense is 3 lakh rupees in the books. Okay, so it means that the 3 lakh rupees is correct. Full amounts of all transactions are recorded. There is no error. Number one. Second, the advertisement expense has been properly classified. Okay, it has been put in the correct ledger. The classification is proper. It should never happen something of revenue nature you have capitalized, etc. Then advertisement expense 3 lakhs. That means again, accuracy means without error, and completeness means that other than this there is no other advertisement expense. That means 3 lakh rupees represent total of the advertisement expense. It's complete. All business events are recorded. I mean, everything with respect to advertisement is recorded. Cut off means advertisement expenses of 3 lakhs is reported in the correct accounting period. It means all transactions were reported or recorded, sorry, within the correct reporting period. Okay, it should not happen that advertisement expenses pertaining to, let's say, next financial year you are showing it in this year. Nothing like of this sort should happen. And advertisement expenses, guys, you are going to show it in your books only when the transaction has actually occurred, that the business transaction actually took place. Okay, so all these five assertions you have to remember: accuracy, classification, completeness, cutoff, and then we have occurrence. Okay, all right. So yes, guys, we have completed two levels of the assertions. Transaction level, we have completed the account balance also. Now last is presentation and disclosure. When I say presentation and disclosure, we have again four assertions: accuracy, completeness, occurrence, and rights and obligation. Presentation and disclosure can be with respect to balance sheet item and P&L also. So we have accuracy, completeness, occurrence, rights and obligations. Let's say it's a requirement of AS 18 that all the related party transactions should be disclosed properly. So then we'll see these assertions: accuracy, completeness, whether the transaction actually occurred, rights and obligation, if it of course pertains to assets and liability. Okay, all right. So remember, the concept of assertion is an important concept. In our regular lectures, we have also discussed some practical questions also. In once in the old course, it was asked, they gave you a statement. Let's say you are the auditor, you are doing a procedure. Let's say you are wanting to check year end. You do an year end physical verification, inventory physical verification. What assertions are you trying to test? So in our regular class, we have discussed all this. Just doing a quick revision now, guys. Okay. All right. So yes, in chapter number 3 we have covered the basics part. We have already covered what is audit risk. We have covered, guys, what is meant by risk of material misstatement, and then what is meant by assertions also we have covered. Okay, now two things we have to study together. We are going to take up SA 315 and also the concept of internal controls. Okay, two things. Now SA 315 is a really very important standard. And what is this standard about? Identifying and assessing the risk of material misstatement. See, we just covered the concept of risk of material misstatement, right? How actually are you going to identify and assess risk of material misstatement? It is given as a part of SA 315. And the name itself says that you have to identify and assess the risk of material misstatement through understanding the entity and its environment. You have to understand the entity and its environment, and then only you are able to assess the risk of material misstatement. And this is what, guys, we have been learning right from the fundamentals chapter. If you see, assessing risk of material misstatement comes as a fourth step of our audit process, right? And how did you arrive at this? See, obtaining an understanding of the client, that means entity, and its environment, including internal controls. Only this part when you do, you are going to be in a position to assess the risk of material misstatement, and this we are going to learn as a part of 315. Again, read the name of 315: obtaining understanding of the entity and its environment. Okay. Identify and assessing the risk of material misstatement through understanding the entity and its environment. But then I told you, you have to have knowledge of internal controls also. That is why if you see, the next topic that we have is on internal controls. So both of them we have to understand together, and then only you would be in a position to identify and assess the risk of material misstatement. Once the risk of material misstatement is assessed, then we'll learn about how the auditor is going to respond to those risks. In essay 330 we are going to learn about it. Okay. Anyway, so let us quickly now start, guys, with essay 315. Very, very simple standard again. And many students, let me just tell you this, I have observed that many students at the intermediate level, I don't know why, they find the standards of essay 300 series, very boring. But then if you understand them properly, guys, it's quite interesting. I mean, it's not boring, it's not tough at all. Okay, you have to understand the proper flow, proper logic of the standard. Okay, all right, so let's begin, guys, with essay 315. What all things we have to cover? Only two things. See, objectives and then some requirements of the standard. So what is the objective, guys, of 315? Of course, it says to find risk of material misstatement. This standard will teach us, the objective is basically to assess, to find the risk of material misstatement. At what levels? At two levels. I already told you this. We at FS level, financial statement level, and at the assertion level. How? The point is, sir, through understanding the entity and its environment. We have to understand the entity. We have to understand its environment and their internal controls. Of course, when I know about all these things, then only I'll be able to assess the risk of material misstatement. And sir, why do we even find risk of material misstatement? Because when you find risk of material misstatement, guys, at the FS level or at the assertion level, then only you will be able to decide as to what has to be actually done in audit. I mean, this will help you. It is going to provide you with a basis for designing and implementing responses to the assessed risk of material misstatement in accordance with which standard? Essay 330. So did I not tell you this? Just for your understanding, guys, for risk of material misstatement at the FS level, what kind of responses will be designed? We design overall responses. And for risk of material misstatement at the assertion level, what kind of response we design? We determine the nature, timing, and extent of further audit procedures to be done. Okay. Anyways, nobody is going to ask you about the objectives in the exam. This is, but I feel it is always important to understand the crux of the standard. I mean, understand the logic as to why this standard is there in your course. Then it becomes very easy to follow a standard. Okay. Now let us start, guys, with the requirements of the standard. Only if you can see, guys, we have how many points? Only 4 points to cover. Okay, very simple. 4 points we have to cover in this particular standard. Okay, remember, guys, this is a standard which teaches us how to find the risk of material misstatement. Yes, though I'm in my regular lectures, before I cover this standard, we take up essay 500, right? But now, because it's a revision series, I'm going chapter wise, right? I have not yet touched essay 500, but in my regular lectures I take it like after 200, 210, 230 we take up essay 500, right? Now please understand, in essay 500, you know we learned, and in revision sessions we'll be doing it, don't worry, that audit procedures can be, you have to learn about two types of audit procedures. One is RAP and the second one is FAP. Okay, and you have to understand that when you do a risk assessment procedure, when you apply risk assessment procedure, you get something called as risk of material misstatement. Okay, so, and in further audit procedure, what is it that we do, guys? We do test of controls, and we also do some substantive procedures. And when I say substantive procedures, it could be test of details, it could be substantive, let's say, analytical procedures, right? You know all this, right? Now why did I even bring this concept here of SA 500? Because you have to understand, how are we going to get ROMS, find ROMS, assess ROMS? By applying which procedures? Sir, we have to do RAP, risk assessment procedure, and we are going to learn about this now in 315. So let's see this. RAP, can you see RAP? RAP is risk assessment procedures and related activities. So it says, guys, the auditor shall perform RAP. he has to do RAP to provide as basis for identification and assessment of ROMS. So to identify ROMS, you have to do RAP, and to identify ROMS at both levels, FS level or assertion levels, you have to perform RAP. Okay. Now, sir, when we do RAP, will it give us sufficient and appropriate audit evidence? No. I just told you, in as a part of 500 also, you would be covering it, that RAP, I mean, by itself, RAP is not going to give you sufficient and appropriate audit evidence. You actually have to do the testing, right? You have to do the test of details. You have to see whether the controls are operating effectively or not. So we also have to do further audit procedures. So remember, guys, RAP by themselves do not provide sufficient and appropriate audit evidence. Okay. Now, how will I get to know about this? How will I identify and assess risk or material misstatement? I mean, you are saying, sir, that we have to do RAP, but what exactly I'm going to do in RAP? I'm yet to start my audit. I have not yet started my audit. Remember, guys, very crucial thing. Many students, I mean, they kind of, overlook this aspect. Let me take you back to the definition of ROMS. What is ROMS? It is a risk that financial statements are materially misstated prior to audit. That means, sir, we have not yet started the audit, and now you are saying you have to do RAP. Yes, that means what? Let's discuss this very practically. Okay, I'm yet to accept the I'm yet to start the audit. Okay, but then let's say you are the management of the company, and I'm just doing a casual discussion with you. Okay, then I say, sir, I saw your financial statement, sir. I feel that you have done a lot of transaction in cash, and because of this, I feel that there is a high chance of misstatements in your financial statement. I'm just doing a discussion. No, no, no. Management tells me, no, 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 sir. What are you even saying? Yeah, yeah, we do a lot of transaction in cash, but we have got good controls for that, sir. Sir, we give vouchers, we give invoices, we give money receipt to all our customers when they pay in cash. Good thing. Second, sir, all the cash that we collect in a day, we count it, we reconcile it, we make a BRS, we ensure it is deposited in the bank also. Okay, good control. And sir, because we have a lot of transaction in cash, we always have two persons sitting at the cash counter. All of these they are saying. So what will it make me believe? Oh yeah, I can see that they have done a lot of transaction in cash, but at the same time they have a lot of controls also. So this is just a discussion that I'm doing, right? So RAP is what? RAP will include, see the point, inquiries of the management. I might make inquiries of the management. I made an inquiry. Hey sir, I see a lot of transaction in cash. What are the controls you have? So they will respond to the inquiry. I might do some analytical procedures also. When I say analytical procedure, it means, guys, it means that, okay, if there's a lot of fluctuation in the financials, I'll compare the current year financials with the previous year, right? So if there is a lot of fluctuations, I might feel, oh, their GP ratio this year is gone up or low. I might do an inquiry for the same. And then when I know that, okay, the GP ratio or some of the expenses, let's say, has fluctuated a lot, there might be a misstatement. This might be a case, right? And then I can even go for observation and inspection of entities, operations, documents, and reports. For example, let's say, the moment I entered the office, I saw that there is a security guard, there are cameras everywhere, and yeah, there were two persons at the cash counter. So I observed a lot of things, right? So RAP, please remember, guys, of course it's a part of our audit, but then when we it's not the real audit, I mean, that we have started, right? So generally it is said that ROMS is assessed prior to the audit. Okay, and you have to do all these things: inquiring of the management, analytical procedure, and it may include observations and inspection also. Now if you see first point, guys, it says inquiries of management and others. Yes, who are the others? I mean, from whom can I make the inquiries? So I have just written certain points. Okay, the inquiry can be, guys, with respect to, you can make an inquiry with TCWG. It can be with the internal audit personnel. It can be with the employees of the company. It can be with the in-house legal counsel. It may be with the marketing or sales personnel. It may be with the IT team members. It may be with the risk management department. So I can go and talk to and inquire from all the employees, all the departments of the company. If you are able to recall, in essay 210, we read certain preconditions to an audit, right? And there we also covered this aspect that auditor shall be having, or he should be getting, unrestricted access to all their employees also. Okay, all right. So these are, guys, things that we do as a part of RAP. Done. So it's over. It's the first portion is over. What did I teach you? How do we assess risk of material misstatement? Sir, we assess risk of material misstatement by doing RAP. Sir, what is it that we do in RAP? We can go for inquiry, we can go for observation, inspection, we can even do analytical procedures. Okay, done. So the first part is over. Now, guys, how actually do I arrive? What all things will I be asking? Sir, you told us in RAP we have to inquire, but about what things do we have to ask? Sir, we need to first know the entity and its environment, including its internal controls. See the point. Understanding of the entity and its environment, including internal controls. Now, again, in this standard, this is the heart of the chapter, because unless you have a proper understanding of the entity, its environment, their internal controls, you would not be able to assess the risk of material misstatement properly. And if your assessment of ROMS is not proper, guys, your planning for further audit procedure, of course, would not be appropriate. So it's very important for us to have the correct assessment of risk of material misstatement. Please be very clear. Some students end up thinking that when I say you have to assess risk of material misstatement correctly, that see, risk of material misstatement is just an expectation. It's just a probability. It's just a likelihood that these are the chances of misstatements in the financial statement. It's not an exact amount or value. Please be very clear about this. Okay. Anyway, so what are the things now that you have to obtain an understanding of the entity and its environment? Okay. Now, guys, let's say I'll give you one simple example. Okay. Um, let's take the case of two companies. One company is into jewelry business, okay, and one company is into a very simple trading company they have. Okay, they a small, let's say, store, and they are only having 5 to 10 items. Okay, now you are assessing risk of material misstatement, and one aspect of risk of material misstatement is understanding the inherent risk. So automatically it might come to your mind, assuming that there are no internal controls, the inherent risk would be high in case of jewelry business. Why? Some of you might think that, sir, jewelry business, the value of the goods are very costly, it's very pricey. uh, the other trading shop might not have costly items. Jewelry is, of course, expensive thing, right? But then try and understand, yeah, because of the nature of business, you are feeling that, yeah, the risk of misstatements in the financial statement of the jewelry company might be high. It might be high because the price of gold, let's say, it keeps on fluctuating also, but the trading company, the goods that they are selling, the prices are fixed. So the chance of misstatement might be high in case of jewelry business. And then accordingly, you are now going to ask the management, I feel that in your business there might be misstatements chances because gold prices have fluctuated a lot during the entire year. Sir, what controls do you have? Management will be like, yeah, we understand that the gold prices have fluctuated so much, but we do have controls, don't worry. So what is it that I'm trying to convey through these examples? I'm trying to tell you that, guys, I would be in a position to assess risk of material misstatement by understanding two things. I need to know about the entity, its environment. So let's say I know, okay, jewelry business, because of the it has an inherent characteristic that the gold prices will go up and down. So I feel there might be misstatements. But then management is like, no, don't worry, we have very good controls for this aspect. Every time, guys, there is a fluctuation in the gold prices, we have a note of it. We do the transactions on the current prices only, on whatever is the latest prices. So management kept on telling me about a lot of controls. So what would I now believe? Oh, okay, they have good controls, that means the chance of misstatements would be low. So always understand, see, this was a very layman's way of conveying the concept, that always remember, when you are assessing risk of material misstatement, you have to understand entity and its environment, including what? Including their internal controls. You just have to obtain an understanding. Did I even check the controls yet? No. It's just that management told me. Do you not remember that I told you in RAP, we just inquire, we observe, we inspect. So on the basis of that, actually you do the assessment of ROMS. We have not yet actually tested the controls. Testing of controls, guys, will be done as a part of FAP. Okay. So understanding of the entity and its environment, what all things you have to understand, guys, here two things. Now, what are let's say you want to know more about the entity, you want to obtain information about the entity and its environment. What all factors would you consider? Very important question. What all things would you, as auditor, would consider, or what are the aspects that you should be knowing with respect to entity and its environment? So there are 5 points, guys. It says SA 315 requires the auditor to obtain an understanding relating to 5 aspects of the audited entity. So this may be asked as a question, guys, that you are the auditor, you want to obtain understanding about the entity and its environment. What are the aspects that you need to obtain knowledge about? So there are 5 aspects. What are the 5 aspects? Let's read the names first. 5 aspects. What are the 5 aspects? You need to know the industry, to which the company belongs. You need to understand, you need to know the applicable laws, regulations, what FRF is applicable on them. These are the basic things, guys. Okay, now imagine you are a chartered accountant. You come to me to do the audit. Okay, and we are a software development company, let's say. Okay, and you check the balance sheet, and while you are checking the financials, you say, sir, I can't see fret outwards. So probably if you if you have such issues in the audit, if you point out such issues, sir, everything looks fine, but I can't see fret outward. Array, this is a software development company. How will I deliver software through a truck or through transportation? It is delivered through cloud. Okay, so why would be there even a case of, let's say, fret outwards in case of software development company? It won't be there, right? So what I'm trying to tell you is, you shouldn't be sounding very foolish in front of your client. So you have to have first a better understanding of the entity, the what kind of business they are into. Okay, what industry do they belong to, what are the applicable laws and regulations on them, what kind of FRF is applicable on them, what how should they be making their financial statements. So number one thing, you have to obtain understanding of this. So remember three words: relevant industry, regulatory and other external factors. Okay, now just to go deeper, I mean, just to define these words, what I have done, what is relevant industry, guys? I mean, you have to consider industry factors. Industry factors would mean what? Let's say it might be competition, the relationship which is there between the supplier customer, what has changed with respect to technology. All these things we have to, as auditor, understand. When I say relevant regulatory factors, it means what accounting principles, is there any industry specific regulations or government policies that the company should be following. Okay, and then there can be other external factors also, like economic conditions. How is the overall economy, whether we have a recession now, what is the inflation rate, what is the interest rate going on. All these things also you should be aware of. Okay, then only you'll have a good understanding of the entity and its environment, right? So first is relevant industry, regulatory and other external factors. So industry, regulatory and other external factors we have just understood. Okay, all right, next is you have to have an understanding of the nature of the entity. You need to know about the nature of entity. Now when I say you need to know about the nature of entity, it means what? You need to know about their operations. Okay, you need to know about their operations, you need to know about their governance and ownership structure. You need to know as to what type of investments do they make, do they have a lot of subsidiaries, etc., and how they are actually financed, whether they have a lot of equity or debt in their capital. All these things are basics, right? So nature of entity, it's operations. What is meant by operations, guys? Operations as in, you need to understand from where are they generating revenue, what is the source of their revenue, what products or services are they selling, do they manufacture themselves or they buy it. All these things you have to understand. You need to know their ownership and governance structure. Then what type of investment it makes, that means what where does this company made, have they made any acquisitions this year, whether they have made any capital investments, do they have any investments in joint venture, subsidiary, etc. Then the way the entity is structured and financed, that means whether it is mostly equity, or it has been, this company's capital structure consists of more or debts. You have to know all these things, right? So in point number 2, guys, nature of entity. Remember 4 things. Nature of entity means operations, number 1, ownership and governance structure, types of investments it makes, and the way the entity is structured and finance. You have to know all these things. Okay, all right, so we have covered 2 points. What is it that we are studying, guys? We are studying what are the factors, what are the aspects that you as an auditor have to obtain an understanding of if you want to know more about the entity and its environment. So 2 things we have covered: relevant industry, regulatory and other factors, and then nature of entity. Third, you have to understand about the entity's accounting policies. Very simple. What accounting policies do they follow, or is mandatory for them? And then entities objectives and business strategies. You need to also know about the business strategies of the entities, because business risk, that it may result in risk of material misstatement. Now what does this mean, guys? It simply means that you have to understand whether they are planning to expand. Let's say, if they are, let's say, planning to expand, what could be the risk associated with company growth. Now let's say they are planning to expand, they want to procure more loans, and to procure more loans they might show inflated sales and all, inflated turnover. So it's a risk of material misstatement, right? So you need to understand your business, the entity's business strategies, the business risk. Okay, let's say they are introducing new product. What if the product doesn't really work and the company doesn't want to show that the product has not picked up in the market? Again, they might inflate the sales, and also all the business strategies might also have an impact on the misstatements in the financial statement. So yeah, you have to know about the business strategies. And also guys, when you are doing the audit of a company, you need to know how the entity is performing. That means you have to have an understanding of the entity's financial performance. That simply means you need to know the KPIs. KPIs is basically key performance indicators. Like for example, you need to understand some important ratios, the trends. You need to know the operating statistics. You need to analyze their financial performance. I mean, you can compare it with their budgets, if they have made any forecast, if variance analysis, etc. So you need to know, in simple words, whether it is a profit making company, loss making company. You can just go through all the important KPIs, ratios, etc. All right. So yeah, this is done guys. And again, let me tell you what is it that we have covered here. You have to cover this five aspects to understand the entity and its environment. Again, I'm just going through the 5 points. Number one is relevant industry, regulatory and other external factors. Second is nature of entities, including these four things. Nature of entity includes four things: operations, ownership and governance structure, the type of investment the company makes, and how the entity is structured or financed. Next is entities, the process of selecting the accounting policies and their business strategies, and finally the performance. Okay, but this is not enough. This is only going to give you an idea as to how the entity is and their environment is, right? But then I told you, to assess the risk of material misstatement, you have to consider two things. You have to consider what? Internal controls also. Now please understand this guys, that when you understand the entity and its, let's say, environment, when you understand the entity and its environment, what happens? It will give you an idea about the inherent risk. Okay. And when you understand the internal controls of the organization, it will give you an idea as to whether the controls are good or not. It will give you an idea about the control risk. And when you combine these two, what is it that you get? ROMS is nothing but combination of inherent risk and control risk, right? So that is why we have just covered this part now, that in order to identify and assess risk of material misstatement, you have to understand the entity and its environment. But then the next part is left. We also have to understand the internal controls, guys. So let us understand internal controls. Though the point entities internal controls, we are going to cover this in detail in as a part of this portion. You have, can you see this? We have a separate topic of internal controls, this one guys, right? So we are going to cover it here. However, what about internal controls do you need to obtain information, basically? So it's a very basic point, guys. Auditors should obtain understanding of those internal controls which are relevant to the audit. I call it as ICRA. I mean, there can be n number of controls in an organization, but all controls are not going to be relevant for our audit. Like I always give this example. Let's say we are the auditors of an airline company, an Indigo Airlines. Okay, so we are the auditors of the financial statement of the company. We would not be concerned whether after every flight lands, whether they check the tires or not, whether they check the um, uh, weight balance of the flight or not before taking off. All these are very important. It's very important for the operations of the entire airline, but it is not a control which is relevant for my audit. I am only concerned with those controls which are relevant to my audit. Now for example, in case of Indigo Airlines, whether a passenger cancelled his ticket, whether refund was issued to him or not, whether proper amount of refund was given to him or not. So we have controls for that also. Now this is a control which is going to be relevant for me, because ultimately the amount is going to be a part of the financial statement, right? So remember guys, an organization can have many different controls, but we as auditors are only going to be interested in those controls which is going to be relevant for our audit. Okay, and hence we are going to evaluate the design of ICR and determine if they have been implemented. Now the question that might pop up in your mind basically is, sir, what aspects, what things about internal controls are we going to check? Are we going to check every control, whether they are there in place, whether they are operating properly or not? So this standard teaches us that if you want to know about the controls, whether the controls of the organization are good or not, or the control risk is high on the other hand. So what is it that you have to understand? This standard tells us that you have to obtain understanding about 5 components of internal controls. Okay, what are the 5 components? Very simple, guys. The 5 components of internal controls are control environment. Number one, control environment. Then we have risk assessment process. Then we have information system and business processes, control activities, and monitoring of controls. So you have to have an understanding of these 5 elements of the control. Okay, and then once you have an understanding of these 5 elements, you would be in a position to know whether the internal controls are okay or not. We are going to learn about these 5 components of internal controls here, guys. I'll just show it to you, though I'll tell you about the basics. If you can see, in internal controls we have components of internal controls. So all these 5 components, we are going to cover it in detail in this part of the chapter. However, just for your sake of understanding, what I've done here is I've written one line against each of them, if you can see. So what is control environment? Now control environment simply means the overall attitude, the seriousness of management with respect to internal controls, whether there is a culture in the organization to follow the controls that they have designed. So this is control environment. Then guys, always remember, who is responsible for the internal controls in the organization? It is the management, right? So have they randomly just installed or implemented internal controls, or they did a proper risk assessment? Because guys, it shouldn't happen like this, that I have implemented a particular control because my neighbor was doing it. If I actually face the risk, I should implement the controls. So before implementing internal controls, as a prerequisite, there has to be something called as risk assessment process. Every organization should do a thorough risk assessment process, and on the basis of the risk that they face, they should be implementing the internal controls. So then I as an auditor would want to know whether you have a risk assessment process or not, and then whether you use systems and processes to generate and communicate financial information, whether the financial system information that you make, the financial statements that you make, whether you are doing it manually or whether you are using systems and all. Then whatever risk you face, control activities means it is the policies and procedures implemented by the entity to mitigate risk and achieve objectives. That means the real controls which the management has implemented. And finally, only by implementing controls also might not be very helpful. Whether monitoring is done, whether by the management, basically about what, whether the controls are followed or not. And it says review processes in place, review policies, review controls in place to monitor the effectiveness of internal controls over time. So whatever controls the management is implemented, whether it is still relevant, whether it is still effective or not. So as an auditor, I need to obtain understanding of these 5 components of internal controls. Now for example, if I say, guys, the management of the company is very serious about internal controls. Now this increases the probability that everyone in the organization must be following controls. So that means the chances of controls being good is very high. On the other hand, I mean, on the contrary, if I put it in this way, management is least bothered about internal controls. The top management, they hardly care about controls. All they want is just to get sales, increase the figure of sales. So in that case, if they are not serious, I might conclude that overall environment of control is not good in the company. Then let's say they randomly implemented controls without doing a risk assessment. So that means the chances of their controls to be good is now going to be very less. So all these factors, all these components I would see to basically check about their internal controls. Don't worry, we are going to learn about this later on as a part of our internal controls topic. Okay. However, after this two, what is going to happen, guys? What we have done as of now, we have understood how to gain an understanding about the entity and its environment, including its internal control. When you gain an understanding about these two things, what will happen? Now you are in a position to identify and assess the risk of material misstatement. And I have been telling you this. At what levels are you going to identify and assess risk of material misstatement? So if you can see the next point, identify and assess risk of material misstatement. Now you have the knowledge of the entity and its internal controls. So now you identify and assess risk of material misstatement. Okay. So it says, having obtained and documented an understanding of the entity and its environment, the auditor is now in a position to assess the risk of material misstatement, and at both levels, at FS level and as well as the assertion level. Okay. Now guys, let's say we have identified and assessed risk of material misstatement. Let's say, just hypothetically, I'm putting it in this way. Let's say we feel that there are misstatements in 5 areas, but all the misstatements might not be equally dangerous. Okay, I'm just discussing in very layman's terms. So we have to prioritize that. Okay, I need to tackle this misstatement first, then this misstatement, etc. Right? So please understand, once you are done with identifying and assessing risk of material misstatement, you have to prioritize. Okay, some misstatements might be very severe. It might require your special attention, and those misstatements which require auditor's special consideration or attention would be called as significant risk. Okay, so it says an important part of assessing risk of material misstatement is that risks identified should be prioritized. Okay, it says important part of assessing risk of material misstatement. Once you have assessed, you have identified and assessed risk of material misstatement, now you have to prioritize, guys. Okay, and why do we need to prioritize? This is because 315 determines that risks which are of significant nature, the risk which is of, we call it as significant risk, it requires what? Special audit consideration. Okay, now I've put a star mark here. That simply means we are going to learn about, guys, certain factors now, certain factors uh, which will help us to determine whether this risk is a significant risk or not. Okay, now let's say, guys, we found, you all know that misstatements can happen either because of fraud and error. Okay, now let's say I'm just asking you. Okay, I want you to answer in the chat box, guys. Let's say my question is, you have identified two misstatements. One is on account of fraud and one is on account of error. Which one do you think is more dangerous or more significant? Where will you put your more attention? RMS arising out of what? Fraud. So in this topic, guys, I am going to teach you the factors which the auditor might consider in determining whether this misstatement is a significant risk or not, whether this risk is a significant risk or not. So it says, number one thing you have to understand, guys, it's a matter of professional judgment whether a risk constitutes significant risk or not. It's of course going to be a matter of professional judgment, right? But we are going to consider, we have certain factors to be considered, in determining whether a risk is going to be a significant risk or not. So what are the factors? See the point. Number one, whether risk is risk of fraud. So number one is, if the risk is on account of fraud, then it is going to be a significant risk. When the risk is because of, the transaction is very complex in nature, then it is going to be a significant risk. Complexity of transaction, you have to put in special attention. Okay, now very important, where the risk is on account of transaction with related parties, again it becomes a significant risk. Why? Because, guys, if let's say the company wants to do some ghapla, some fraud, they might engage it with related parties. They will not be doing it with strangers, right? So let's say I want to book, my profits this year was very high. It was, let's say, coming to 9 lakh rupees, and I know one of my relatives, he doesn't, fall above the taxable limit. So what I did is 2,50,000 rupees or 2 lakh rupees, I booked an expense in my books, consultancy charges to my relative, and I give him 2 lakh rupees bank transfer, and then I ask him to give me back the cash. So it will not matter to him, because what is going to happen? Anyways, 2 lakh rupees income he can show, he will not have to pay any taxes, and I have saved taxes here, and I get back my 2 lakh rupees. So there can be frauds with related parties. So when it comes to transaction with related parties, it's always a significant risk. Remember, transaction which is very complex, significant risk. Transaction with related parties, significant risk. Okay, then transaction, this one point, I'm reading this point first. Transaction which is outside the normal course of business, which is not a regular thing, something which is very unusual, which was done outside the normal course of business, it will be a significant risk. Things wherein there is a lot of subjectivity involved, there is no precise measurement. Okay, let's say provision and all, where management feels they have just made a transaction, where there is no objectivity but there is a subjectivity involved, then it is a significant risk. Okay, and then we have a point whether the risk is related to significant changes, let's say in economic, accounting, or other development changes because of economic, accounting, or other development. So all these are basically factors that would help you to determine whether a particular risk is going to be called as significant risk. Very important topic. Okay, done. So what have we done, guys? So I told you first something about RAP, and then we learned about how to obtain understanding about the entity and its environment, including the internal controls, and then we were in a position now to identify and assess the risk of material misstatement. Right now, the point is, once you have identified and assessed the risk of material misstatement at the two levels, what is it that we have to do? Sir, we have to prioritize. We have to see, I mean, if there is any risk which requires our significant auditors attention, basically. Sir, those type of risk would be called as significant. This is what I have taught you. Okay, done. And finally, guys, okay. So again, I'm asking you before I take up the next topic, guys, when do you assess the risk of material misstatement? Is it before the audit, during the audit, after the audit? Prior to audit, right? But then what happens, let's say, I was having a discussion with the management that you do a lot of transaction in cash, and then they said, no, we have controls for it, don't worry. So I thought that, okay, the ROMS is here. Okay, but then when I actually do the audit, when I went to the client's place and I saw and I was trying to test the controls, they told me they make BRS every day, they deposit cash every day in the bank. Then I asked the management accountant to give me the BRS. He did not have the BRS. I asked him, hey, when was the last time the cash was deposited? Sir, I think it was done a month ago. I don't know. I mean, we have the cash, it's in the tijori, it's in the vault. We did not deposit. I mean, whatever controls management had told initially, none of them are present, or none of them are, let's say, effective. So in that case, what is going to happen, sir? The controls are not there only, or let's say it's very poor, it's not effective. Then the ROMS that I had assessed here earlier, ROMS is going to increase. And when my ROMS increases, what happens, guys? You'll have to change your plan. You have to change your further audit procedures, etc. Right? So the point says, if you see the last thing, revision of ROMS, it says, as additional evidence is obtained during the course of audit, when you do the audit, let's say when you do the test of controls, ROMS may change. And when your ROMS changes, what has to be done, guys? The auditor shall modify the further audit procedures according. Okay. All right. So yes, with this, if you can see, yes, we have covered essay 315. So up until now, guys, in this particular chapter, what all topics have we covered? We have covered audit risk, we have covered risk of material misstatement, we have covered assertions, and we have covered in detail the standard 315. All right, guys. So far in chapter number 3, we have covered audit risk. We have covered the concept of risk of material misstatement. What is assertion? We covered the different types of assertions, and we have also covered the standard 315. 315 was basically about identifying and assessing the risk of material misstatement through understanding the entity and its environment. Okay, but then I told you that it is, for the auditor to identify and assess risk of material misstatement, he has to understand the entity and its environment along with internal controls. Okay, just to make you understand, guys, again, in 315, I told you that you have to obtain understanding of the entity and its environment, so including its internal controls. And in the concept of internal controls, I did tell you this, that we are going to learn a lot about internal controls in the next topic basically. Okay, so always remember, guys, when you're doing 315, you have to cover the concept of internal controls along. Okay, so let's start now with the concept of internal controls. We have a lot of theoretical aspect to cover in this particular topic, as you all can see, and we'll begin with some basic things. What is the meaning of the word internal control, guys? All of you have to remember that these are processes, these are policies or processes. When I say internal control, okay, it would always be in the form of some policy or process of the company. Remember that internal controls are designed, maintained, implemented, or let's say they are implemented, or they are designed, implemented, and maintained by management as well as ECWG of the organization. They are responsible for the implementation, design, and maintenance of internal controls. Okay, now just to give you an example, guys, let's say the company says any payments that we make above rupees 5,000 has to be authorized by this officer. So it's a control. They don't want any bogus payments to be made in excess of rupees 5,000. So they have a control. Let's say all the payments would be first approved or authorized, and then only the payment process will be done. So it's an example of internal control. You see so many times when you go to some shops, some restaurants, where at the cash counter you'll always see two persons sitting there. Why? Because the restaurant will handle a lot of cash probably, let's say, and they have two people. It's called as dual control, so that if intention of one person becomes bad, I mean, there is a check, immediate check. Okay, there is one more person, right? So it acts as what? Control. So any business organization that you go into, guys, you will see that each business's process, I mean, will be subject to some sort of internal controls. Okay, now as an auditor, I did tell you this, that we would be concerned with not all the internal controls, but we would be concerned with internal controls which are relevant to our audit. Okay, so what is the definition? Let me just complete the definition again. These are internal controls, are processes or policies which are designed, implemented, and maintained by TCWG and management. Now, why would a company have internal controls? Internal controls provide reasonable assurance about the achievement of four objectives. About the achievement of objectives with regard to, we have four objectives. Number one, if internal controls are there, the reliability of financial reporting would be higher. Then they can carry out their operations effectively and efficiently, all operations. Okay, then if they have controls, they would be able to safeguard their assets. Now, for example, very basic concept, right? All of us, when we go out of our house, we lock it, right? Why? We are safeguarding, it's an asset. We have so many things in our house, we want to safeguard it. When we sleep at night, we ensure that the main gates and everything is closed. It's again a part of what? Internal control, right? Just a layman's example. And internal controls also ensure that the company does all the compliances with laws and regulation. Now imagine it, let's say, guys, we have to make a payment. Okay, and when we make a payment, as per income tax act also, we have to deduct, let's say, the tax, TDS. Okay, now if the company doesn't have good controls, they might end up paying, let's say, the entire 2 lakh rupees. They would not deduct TDS on it, which is a requirement as per income tax act. Then again, it's a violation of the income tax act, right? So internal controls ensure that the company achieves the objective of complying with the laws and regulations also. All right, so remember, guys, I'm reading the definition for the last time. The process, what is internal control? It is a process designed, implemented, and maintained by management or TCWG. Why? Because it gives reasonable assurance that the entity will be able to achieve its objectives regarding four things. What are the four things? Number one, reliability of financial reporting, effectiveness and efficiency of its operations. Third is safeguarding of assets. And the next one is compliance with applicable laws and regulations. Fine. Okay. Now, guys, this internal controls will only give reasonable assurance. Please be very careful about it. None of the controls, I mean, can give you full guarantee. Okay, controls will also give you reasonable assurance. I mean, I'll again take a very simple example that, let's say, guys, you have laptops or you have mobile phones, and for laptops, let's say we buy antivirus also. So even if you buy the best of the antivirus, okay, it won't give you a guarantee that virus is not going to penetrate your system or enter your system or damage your system. There's no guarantee. Okay, we all took the shots of this COVID vaccine, but then it doesn't give a guarantee, right, that COVID will not happen, right? So no control basically will give 100% foolproof guarantee. Hence, always remember, guys, that controls will also give us only reasonable assurance. But why? I mean, there are certain inherent limitations of control. There are certain limitations of control because of which controls are only going to give us reasonable assurance. So we are going to now understand limitations of internal control. Please be careful that the inherent limitations of audit we had covered as a part of SA 200. It's a different topic. Now what is it that we are covering? We are covering limitations, inherent limitations of internal control. Okay, so we have got six points, guys. Number one is cost effectiveness. Cost. Okay, guys, all internal controls will come with a cost. So the management, before they think of any control, they will be doing a cost benefit analysis. Okay, so they might not be procuring or installing very expensive or controls also, because there's always some cost involved. No control will come for free. So cost, it's a resource, right? The money that we have to pay for it. So this is a limitation. Next, even if you have the money, but let's say you get the best of the controls. Okay, let's say I got a very good control for this door, to this room, let's say. But then it's a very automated digital kind of lock, and it has all the passcodes and pin. And I instructed my staff that, okay, when I'm done with the class, you have to lock it in this way. But he has not understood it. He did not understand my instructions, and he somehow was not able to lock. okay, and then something bad happens, let's say. So what has happened here, even if I had purchased the best of the controls, but management, let's say the employees, the management, they did not understand the instructions properly, and hence the control became a failure. Okay, so human errors is also one of the reasons. Then I was giving you this example, right? That at the cash counter, you'll often see two people sitting together, right? Why? Because if one person's intention becomes bad, at least the other one is there as a check. Okay, but then what if they both make a partnership and do 50-50? Let's take all the cash today, let's do 50-50. So people might come together and, make plans, right? So collusion among people, even if we have the best of the controls, what if people come together? What if, forget about the employees, what if management is only involved in the perpetration of fraud or something? So this is always a limitation. Next is change in conditions. Guys, we had implemented controls, but then we have not yet updated it. Let's say a very layman's example, let me give you. Let's say we had installed some CCTV cameras, okay, way back, and this CCTV camera doesn't have the capability to capture night vision. I mean, at night when it is dark, it can't record anything, it's all black. So with time, guys, the technology has upgraded, we need to change, right? So we have to ensure that our controls are still relevant or not. Okay, so many times what happens, they become obsolete, and when it becomes obsolete, it is going to be of no use. You might feel that, yeah, you have controls, but it is not working. Okay, then judgments by management. Now this is a very important point, guys. See, how many controls we have to implement, what controls we have to implement, it's a matter of professional judgment. Okay, so if management feels that, okay, this is the risk we are facing, this is the level of control we need, it's okay. But then if management feels, no, this is the risk we are facing, they might need higher level of control. So what amount of controls, what type of controls are needed, at what point of time is the control needed, all these decisions are basically totally based on management's judgment. If they feel that the company is facing a lot of risk, they might be really serious about controls, else not. So controls, guys, it's all about management judgment. There is no concrete formula that if this is happening, you have to have this control. No, it's about management's judgment. Okay, and then, guys, we have last point, limitation in case of small companies. Limitation in case of small companies. Now, uh, let's say there's a very common good internal control, which is called as segregation of duties, right? And segregation of duties means that one task from the start to the end will not be given to one person. I mean, there has to be division of responsibility. More people should be involved in the completion of the task. Let's say, you have to divide the task and give it to different persons. This is segregation of duties, because if you give the entire task to one person right from the start to the end, he might indulge in fraud, he might do fraud, and others will not even get to know. So we have segregation of duties, right? It's a very simple and very common control which which we see in a lot of organizations, right? However, in case of small companies, guys, let's say I only have one employee, then how will I go with segregation of duties? It's not possible, right? He will have to do he will be doing, let's say, all the tasks. So in that case, segregation of duties might not be possible. But then what can we do? So we might have to think of some alternative, different types of controls there, right? Segregation of duties might not be possible, but let's say I might have to implement some monitoring system. Let's say I implement a software of monitoring whatever he does on the system, on the computers. So we might have to have some different controls there, right? Anyway, so guys, we are done with limitations of internal control. Please remember, I mean, we have covered six points here, right? And this question has also been asked in the exam. All right, okay, now coming to the next topic, guys, I have told you this, that as auditors we shall not be concerned with all the internal controls. Remember, I gave you the example of Indigo Airlines, right? If I happen to be the auditor of Indigo Airlines, it's a very essential thing that yes, they have to check upon the tires after every landing. They will check the fuel, they will do all the necessary checks to ensure that the flight is safe for the next sector, right? These are all very important controls, very important from the perspective of all the passengers as well, the safety of passengers, right? But then they might not be really very important from my financial audit perspective. But on the other hand, I told you, whether, let's say passenger has cancelled the tickets, whether he has got the refund, whether the right amount of refund has been issued to him, whether the cancellation fee has been duly collected by the airlines or not, all these might be important for my audit. Why? Because all this are going to be reflected, let's say, will impact the financial statements. Okay, So I will have to see whether these controls are operating properly or not. As an auditor, I might not be interested in seeing whether the control with respect to the maintenance and changing of tire after every, let's say, some flights, etc., whatever the controls they have, whether they are being followed or not, might not be very important. So always remember, we will be concerned, guys, with controls which are relevant to audit. So it says controls relevant to audit are typically controls over financial reporting. So all controls over financial reporting, I would be concerned. So I've just written a basic line here, guys. An entity might be having or might have controls relating to objectives that are not relevant to an audit. So, ensuring that the tires are okay, ensuring that the plane is safe for the next sector. All these are very important controls, but they are not relevant to the audit, and therefore I may not consider them. Okay, done. Okay. Now, so see the theoretical part, the basics we have covered. With respect to internal controls, guys, we have covered the meaning, we have covered limitation, and we have also covered what is ICRA, controls relevant to audit. Okay. Now, what is it that we have to cover? We have to cover the most important part of the topic of internal controls. A very basic thing, however, but it is most important. Remember, I told you this in SA 315. I was telling you repeatedly that, guys, the auditor has to obtain understanding of the entity and its environment, including internal controls. Okay, but what about internal controls should the auditor obtain understanding of? Okay, so the standards tells us that if you are able to obtain information about these five components of internal controls, you will have a good understanding about internal controls. So now we are going to learn about those five components of internal controls. Okay, so please remember, guys, first let's just read the names. What are the five components? Number one, control environment. Then risk assessment process. Mind you, it is not risk assessment procedure which the auditor does. It is risk assessment process which is to be done by the management of the company. Third is about the information systems. Fourth is actual controls which is relevant to the audit. And finally, monitoring. So these are the five components of internal control. Again, why as auditors do we need to have an understanding about these five components? Because if you have understanding about these five components, overall you will have a good understanding about the internal controls of the company. Okay, so what is meant by control environment? Let's understand first the meaning. Guys, control environment means what? Let's understand. It says this term refers to the attitude of the management, the company, and the staff regarding internal controls. Just remember the word attitude. Simply means how serious they are with respect to internal controls. In simple words, again, guys, see this point. Do they take internal controls seriously or do they ignore them? Okay, and if the controls are taken seriously, this greatly will enhance the overall, robustness of the system of internal controls. Guys, this is the, I can say that this is a foundation of the entire system of internal controls, because if management is not serious about internal controls, the other components that you can see will not be considered, will not be very good. Only when they are really serious about internal controls, remember this line: the strengths in control environment provide appropriate foundation for other components of internal control. Now please remember this, a question might be asked using this sentence also. Do you agree with this, that strengths in control environment provide appropriate foundation for other components of internal control? Okay, only when management is serious, when they have this attitude that yes, internal control is important, we need to really be serious about it, then only all the other components will be effective, will be good. Okay, now the basic of control environment you already know. However, one very important question which may be asked from this part is, guys, okay, basics, that control environment means, sir, we have to check attitude of the management, the employees, etc. But when I want to know about the control environment of this organization, what exactly will I be seeing? So we have to learn about certain elements, guys. There are 7 elements, very important question, of the control environment. Okay, so this can be asked as a separate question. What are the elements? Let's understand. We have some 6 7 points here. 7 points. Number one is communication and enforcement of integrity and ethical values. Communication and enforcement of integrity and ethical values. Guys, understand it very practically. Let's say we are all a part of the organization. You are the employees, and I'm one of the senior management. Some of you have recently joined the company. How will you get to know that these are the things which you have to do, these are the things which you shouldn't be doing? I mean, how will you get to know the controls? How will you get to know the policies that you have to follow? How will you get to know the do's and don'ts? So very important thing is, guys, only by framing internal control policies is not going to help you. We have to communicate the same to the employees. We have to, you know, uh, tell everyone in the organization that yes, you have to follow this, these are the do's and don'ts. So very important point is communication and enforcement of integrity and ethical values. We have to communicate, right, that you can't take bribes, we have zero tolerance policy towards this. So all these are communicated, and you will realize this, guys, when once you become a chartered, let's say, and then you join a corporate. So the moment you join, they will send you a lot of documents in the form of policies. These are basically the do's and don'ts of the company. So very important thing is, number one, proper communication has to be there. Else, employee might say, sir, we did not even know that this has to be done. How will we get to know? So that's why I'm saying that, the controls will be effective only when the proper communication is done. Second, commitment to competence. Second is commitment to competence. Now, guys, you know we have to ensure that in our organization we hire competent people, we hire right people for the right job, then the chances of errors and all will be less. Okay, so if, guys, imagine, if even if we have the best of the controls, but then we are not hiring the right type of people, people are not able to understand their jobs and all, their responsibilities, then of course the controls will also be of no help, right? So we have to be committed that yes, we are going to appoint competent person. And with respect to this, point number two, if you can see, I would want you to read immediately point number 7. 2 and 7 are somehow related to human resource. 2 says that we would be only recruiting competent person, and 7 says we have to have good HR policies, human resource policies and practices, in the sense that we have to have policies and practices with respect to recruitment. After recruitment, let's say, we have to give them orientation, make them familiar with their job. There has to be proper orientation, there has to be proper trainings, there has to be a proper system of promotion, compensation, rewards, all these things in an organization. Then only the organization will, I can say, prosper. Okay, so we have to have the right people in the organization. So point 2 and point 7 elements, these two elements are with respect to HR. So you can think of it as to, you can write them as to one after the other, basically 2, and then you can also write 7. Then third point, I mean, this is participation by TCWG, guys. The more serious the senior management of the company is, the more they are involved in the design, maintenance, implementation of internal controls, everyone would also be serious. I mean, all the middle level managers, the lower level managers, the employees would also be serious about internal controls. However, if top management themselves are not uh, much participative, they are not very serious about internal controls, you can't expect the others to follow the same, right? I mean, can't expect the others to be following the internal control. So very important perspective, important point to see is what level of participation is there by TCWG. And then along with TCWG, we have a point with respect to management. It says management's philosophy and operating style. I mean, this means how, again, how does management take the internal controls? Maybe the TCWG is serious, so is management also serious? What is the attitude of management towards internal controls? So this is a point with respect to management. Okay, now you have to understand this, guys, that one very important aspect of control environment in the organization is the organization structure. Okay, now what is, I can put it in this way, that organization structure in itself is a control. I mean, what is organization structure? Organization structure is basically how the organization is, the hierarchy of the organization, right? So who is going to report to who is at the top, who are the subordinate managers, who is at the middle level manager, who are the middle level managers. So this has to be fixed. Else, if there is no organization structure in the company, the employees will not know whom to report. One manager will not know whom to deliver or whom to delegate the responsibility or assignment to. So there will be a chaos in the organization, right? So a very important aspect for an organization is to have the organization structure. And point number 5, that means the organization structure, and this you can just link them together: assignment of authority and responsibility. So if you have a proper organization structure, guys, then only the jobs can be properly assigned, The jobs can be, there would be assignment of delegation of authority and responsibility. Without organization structure, this would be a chaos. Okay, so remember guys, these are the 7 elements of control environment. Let me tell you this again guys. In exam they may ask you a question, what are the 5 components of internal controls? In that case you don't have to define the elements of control environment in detail, but then they might ask you as a separate question, what are the elements of the control environment. So remember, there are 7 elements of the control environment. Okay, all right. So yes, let's just summarize control environment, guys. What did I tell you? It's all about the attitude of the management, the TCWG, towards internal controls. It simply means how serious the organization is with respect to internal controls. Okay, but then guys, you have to also understand this aspect. Now I'll just make you just make an analysis here, guys. See, you all know that internal controls is the responsibility of the management, right? But how do they even implement the internal controls? Are they just randomly going to implement internal controls just because their competitor has implemented, or just because their neighbor has implemented? The answer is no. See, we can't just randomly go and implement internal controls. Internal controls will come with a cost. Only when you face certain risk, then only you are going to install or implement, let's say, or have the necessary internal controls. So always remember guys, that as a prerequisite to internal controls, management will always do something called as risk assessment. They would first want to know what risk they are facing, and accordingly they will now implement internal controls. So who does this risk assessment? This risk assessment is also done by management. So I, as an auditor, would now have to see whether this company has a process of risk assessment, because only when they have a process of risk assessment, they would be able to understand the risk that they face, and accordingly they would have implemented the appropriate controls. Now, if an organization doesn't have risk assessment process, or let's say risk management process, the controls that they would have implemented would not be that good or relevant. So hence, it's a very important aspect for me as an auditor to see when I'm overall trying to obtain an understanding of the control that your organization has. So I need to know whether you have a proper system or process of risk management or not. Remember, risk assessment or risk management is a prerequisite before the management implements internal control. So coming back to the chart, we have this point, risk assessment process. It's not RAP, risk assessment procedure, that we do. RAP, if I use the word risk assessment procedure, it is something which the auditor does, okay, to identify and assess the risk of material misstatement. It is not risk assessment procedure, it is risk assessment process, which is done by the management. So the auditor shall obtain an understanding of the entity's risk assessment process, and in short, the auditor should evaluate whether management has identified its riskiest areas and implemented controls to prevent or detect errors of fraud that could result in material misstatement. So you have to understand whether they have a proper system of, guys, risk management or fine. Okay, I'm asking you this again. Who is responsible for this risk assessment process, guys? Risk assessment process. Is it the auditor or is it the management? Yes, tell me this, guys, again. Management, absolutely, yes. Okay, all right, yes. Next, next is information systems. Now see the word, basically it's a big word, guys, big heading you have to understand. It says information systems, including related business processes relevant to financial reporting and communication. So we are basically discussing about what we are discussing about. We in the third component is basically information systems, or let's say business processes. Okay, information systems or business processes, but this information system or business processes is related to what? It is related to financial reporting as well as communication. See, I told you, we are the financial statements auditor. I mean, we are doing the audit of the financial statements, right? So when we have to understand the controls, we shall only be understanding those controls which are relevant to the audit. So this third point is about we have to obtain information, we have to obtain understanding about the systems of the company, the processes of the company with respect to the financial reporting and with respect to the communication. So read the heading again. It says information systems including the business processes relevant to financial reporting the and communication. Okay, so what about this, what is it that you have to understand here, guys? Okay, now see, very simply, if I put very in very layman's terms, okay, let's say the company does all its accounting, the total accounting of the company, let's say, is very much automated. They do all the sales online and all the sales entry and all is posted in the accounting system automatically. Then you only tell me, when things are done automatically, the chances of errors would be less. I mean, I can say that, yeah, when there is automation, they have better controls as compared to, if things would have been done manually. So you have to obtain understanding of these systems. See the points, what are the points that we have to cover here? Yeah. So what are the points? Information system including related business process. So auditor should obtain understanding of the information technology. I should be able to understand the technology which the company is using. What is their accounting process? What is the communication systems and process? How do they do the accounting? I mean, is it totally manual or is it automated? See, what are the classes of transaction? How transactions are initiated, processed, and reported? Whether it is automated, whether it is manual. And I also need to see what are the systems with respect to communication. Sir, communication between whom? Communication between TCWG and management. It might be, sir, external communication also with regulatory authorities. I mean, let's say the company has received some letters from a particular department. So are they prompt in replying, or they just ignore it, or they are very casual about it? So all these aspects of communication also I need to know. So basically, point number 3 is about understanding the systems primarily relevant to financial reporting and communication. Okay, then fourth point, control activities relevant to audit. Guys, this is the main point. I mean, when the management has done the risk assessment, they know that, okay, these are the risks that they face. Have they implemented the appropriate controls or not? So when I say control activities, this is nothing but the control which management should be implementing. So control relevant to the audit are typically controls over financial reporting. The auditor should obtain an understanding of control activities, the controls which is relevant to audit, and whether the auditor considers necessary to assess ROMS. Of course, we have to consider these controls, guys, to assess the ROMS. And once we assess the ROMS, of course, why do we assess the ROMS? To basically design the nature, timing, and extent of our further audit procedures. So control activities relevant to audit is the actual control. And then, guys, you also have to see one more aspect to understand, to have a good understanding about the controls. The last aspect is whether management monitors their control or not. And what does it mean? This component involves understanding how management monitors its control and how effectively it is done. Because I told you that controls might become obsolete, they might become outdated. So only when you monitor them, it would ensure that they are still, and you make necessary changes, then only we can say that yes, the controls are effective. So it says the best of the controls are worthless if the company does not monitor them and make changes when they are not working. So you have to have monitoring, guys. I mean, let's imagine that the company has installed 8 CCTV cameras, and after 3 months of time, 5 of them are not working, but they're least bothered. So is the control effective? No. So once the controls are implemented, they have to monitor also whether it is working properly or not, whether everyone is following the necessary controls, policies or not. And then if things are not working, or let's say they might have to make corrective actions and all. Okay, so this is all about monitoring. So guys, done. We are done with the 5 components of internal control. Very easy topic, but very very important one. Okay, so next time when you are revising SA 315, guys, and then you happen to come across this point, entities internal controls. Okay, if you see, we have the 5 components here. Okay, so you can just read the 5 components that we have just covered in detail. you can read it along with 315 only. Okay, it's actually a part of 315, but in my material I did not want the students to feel that 315 is really very lengthy standard. So what I did is I divided, let's say, it into two parts. One is internal control and one is the basics of 315. Okay, all right. Next, guys, is evaluation of internal controls by auditor. Okay, now all of you know this, that auditor will evaluate internal controls. He will have to see the internal controls. He will have to obtain understanding of the internal controls. So the point is, first we are going to understand what are the methods which the auditor may use to obtain understanding to evaluate the internal controls, and then we'll learn about what could be the benefits of the same. Okay, so what would be the methods? Very simple topic, guys. There are four methods given in our ICI material. So one is narrative records. Narrative record means that I would want to have a very complete and very exhaustive description about the internal controls. Let's say management has some internal controls with respect to inventory. So I would want to take, a very detailed description from them with respect to the control over inventory. It may be in the form of paragraph, it may be in the form of, a deep, very exhaustive explanation. But what happens, this is always in paragraph forms and all. We have a better option, which is flowchart. Flowchart will represent the same control over inventory, but it will be in the form of diagram, it will be in the form of some chart. Okay, and all of you know this, that it is always better to understand things in the form of chart, right, rather than the big text and explanation that we have. So charts are graphical representations. Flowcharts are basically graphical presentations, and it gives a bird's eye view of the entire internal control process. Okay, other than this, guys, we have two more methods. One is checklist and the second one is internal control questionnaire. Now checklist is basically a list of questions. The auditor is going to prepare a list of questions that, okay, with respect to purchases we have to see this. With respect to purchase, we'll see whether purchase order was there or not, whether invoices, whether the company has made the payment only after matching the purchase order to the invoice to the goods received note. So we are just going to write certain questions, and when we go to the client's place to do the audit, there will be options against the question: yes, no, not applicable. So the auditor is going to put tick marks, whether this control is there, yes, whether, oh, this control is not there, no. So all these things the auditor is going to do. But the same concept, the same set of questions, let's say, we have made certain set of questions against for internal controls, but then instead of the auditor answering those questions in the form of yes, no, not applicable, now it is being done by the management, the employees of the company. So we call it as internal control questionnaire. Internal control questionnaire is basically what? It's a series of questions on internal control, but to be filled by employees of the client. Please understand, checklist was also a series of questions, but it was filled by the auditor himself. But when I talk about ICQ, internal control questionnaire, it is filled by the employees of the client. That's the major difference between the two. Done. So these are the four methods, guys, which we have to cover with respect to the internal controls. These methods can be used by the auditor to obtain understanding about internal controls. Okay, now why would you even evaluate the internal controls? There are certain benefits, guys. Let's just go through the benefits. It says, let's understand few points. Yeah, so when you evaluate internal controls, when you actually assess internal controls, it will give you an idea whether there would be chances of errors and frauds in the financial statement in the ordinary course of business. Because if the internal controls are good, the probability of frauds is and errors also will be very less. Okay, the purpose of basically having internal controls is to prevent, detect and correct misstatements, right? And all of you know this, that misstatements happen either due to fraud or error. So one benefit when you evaluate internal controls is basically you will get to know whether there are chances of fraud or error happening in the financial statement. That means whether the misstatements might be there or not. So all of you know this, that when the internal controls are good, adequate, the chance of misstatements anyways, ROMS, might be low. Okay, then guys, when you evaluate internal controls, one more benefit is you will get to know whether internal control is adequate and effective. Okay, and along with this point, you can also read point number 8. Okay, you'll 7 and 8, you will also get to know if there are control areas which is weak. Okay, so it, one advantage again of evaluating this system of internal control is basically you get to know whether the controls are effective or not, whether they are weak, and if they are weak, let's say I found that this control is weak, I can always give suggestion to the management, right? Suggestions for improving the controls. Okay, now guys, the main reason, tell me this, what is the main reason that the why, as to why we evaluate the internal controls? So we evaluate the internal controls to assess RMS, and on the basis of this we would plan the nature, timing and extent of the procedures that we have to apply in our audit, right? So see the point, the extent and the depth of checking the auditor needs to carry out. So once you do the evaluation of internal controls, you'll get to know, you'll get to assess the RMS, and consequently you'll know the kind of, the extent of procedures that you have to apply. Okay, and accordingly you might choose to apply appropriate procedures. Okay, then few more points guys, when you see the internal controls, you'll get to know that yeah, they have good controls, that means their assets are safeguarded, that they, you know, the financial statements reliability also increases, how reliable the reports, managements, certificates etc are. Okay, so these are certain benefits. You already know this guys. Let's say if the internal controls are weak, and whatever certificate you take from management, you might not be able to trust them. But however, if the internal controls are good, you will feel that whatever certificates, whatever reports I have obtained is also accurate. Okay, so these are certain benefits of evaluation of internal controls. Now I think this is not required now. Yeah, so the next topic guys that we have is about testing of internal controls. We have a topic which is testing of internal controls. This internal controls in IT environment is not there. We have an entire topic now, audit in automated environment. So it is not required. Okay, so testing of internal controls. Now please understand, testing of internal controls means what? I mean, when we are identifying and assessing risk of material misstatement, I want you guys to answer. When we are identifying and assessing the risk of material misstatement as per SA 315, do we test the controls there, or what procedures do we apply? I want you to recall. As per 315, I told you when you do an RAP, what is it that you do, guys? Yes, tell me, guys. You remember that I told you that we only do inquiry, we might do observation, inspection, and we might do analytical procedures. So we just try to obtain understanding, guys, of the internal controls. We never test it. It's only when we actually go and do the audit, we first thing that we do is testing of controls. Okay, so why is testing necessary? Testing is necessary to conduct, it is conducted to assess the effectiveness of both the design and the operation of internal controls. So testing of internal controls is like test of controls that we do. Okay, and it says auditor plans testing over a period ensuring coverage of critical areas within a designated time frame like 3 years. So it might so happen that guys, you are not able to test all the internal controls in 1 year. I mean, you are the auditor, so we have to plan it. I'm going to teach you more about this in SA 330. So we have to plan our audit in such a way that at least once in 3 years we are able to cover all the controls. Okay, so for 1 year we might do selective testing. I mean, at least ensure one third of all the controls you are able to test. Okay, then what are the methods of testing, guys? What is the method of testing? I told you, you can go for inspection, we can go for inquiry and observation, we can even reperform things. Like for example, let me ask you, let me tell you this question. The management, when I was having a discussion with them, they told all the payments in excess of rupees 10,000 are authorized and approved. So now I have started the audit. How will I test this? I'll ask them for the payment vouchers, and I'm only going to see whether the signature of the concerned person is there or not. Okay, so what am I doing here? Is it not an inspection? I'm inspecting the documents. I'm inspecting the purchase vouchers, let's say, or payment vouchers, not purchase vouchers. Sorry, I'm inspecting the payment vouchers. And when I'm inspecting the payment vouchers, I might not be very much interested here about knowing the amount, etc. Because at the moment, my objective is to see whether they have been approved or not. So I would only be concerned whether the signature of the appropriate management or authority is there or not. So it's an inspection. Yes, similarly, guys, I can do inquiry observation. So let's say what is inspection? Reviewing documents supporting transactions to verify proper operation of internal controls, such as authorization. I gave you this example, whether payments have been authorized or not. Second is inquiry and observation, gathering information about controls. Uh, let's say like determining who performs specific functions. So I might ask, okay, who takes care of the inventory? Who is the who is the go down manager? Who is the store manager? I can ask this, so I can get to know about the controls by inquiry and observation also. Sometimes, guys, I might re-performance. I might do a re-performance. Okay, now let's say company told me, sir, we make a BRS every day. We make a BRS. I had asked them that, I had told them, sir, you do a lot of transaction in cash. There might be a misstatement. So they gave me an assurance. No, no, sir. We tally, I mean, our cash and the bank balances, I mean, we ensure that it is always tallied. We make a BRS. So what you can do is you may prepare a BRS yourself also. It's like re-performance. So independently executing procedures or controls originally performed by the entity, such as let's say bank account reconciliation. And if they maintain, if they do a lot of things on the system, guys, then it can be like you are assessing controls over specific applications or the overall IT function. So we'll read more about this in the audit of automated environment chapter. But then testing computerized systems means either you can test one particular application, we call it as application control. You can test the general things in the system, whether they have a user ID password, so we call it as general IT controls, or ITGC, information technology general controls. Don't worry, we are going to learn about this. Let me just show it to you. If you can see controls in automated environment, we have these type of controls: general IT controls, application controls, IT dependent controls. So these are certain basically methods of testing the controls, guys. Please mark this as important. Might be asked inspection, inquiry, observation. It may be re-performance, and then you also have to test computerized systems. Okay, then guys, after you do the testing, what is it that you have to do? So results of the test determine if internal controls are functioning as intended. Okay, now you only tell me, guys. Management had told me, sir, we make a BRS every day, on the basis of which you thought, okay, risk of material misstatement for cash is less. Okay, but then when you actually did the audit, when you are doing the audit, you saw that they have never made a BR. What is going to now happen, guys? The risk of material misstatement with respect to cash that you had assessed earlier, it might be higher now. So please understand, it says deviations may prompt. If there is deviation, that deviation means what? That the control is not there or not followed. So deviation, they were not making BRS, so it's a deviation may prompt revisions in assessed control risk level related, and it might lead to revision in your RMMS, and consequently will it need you to revise the further audit procedures that you have to do? Yes, leading to adjustments in the planned substantive procedures. Are you all clear with this evaluation part? Do you all agree with this? Yes, is this clear? Okay. All right. So, see, guys, with this, yeah, we are done with the topic of internal control. So many concepts we have covered, guys. Now, the best thing, guys, with respect to this charts is you need to know, exams. You have to have this knowledge that, okay, sir, with respect to internal controls, these are the topics we had covered. We covered meaning of internal controls, then we covered the limitations of internal controls, then we covered ICR, internal controls relevant to audit, then we covered components. Okay, sir, there were 5 components, but yeah, in component number one, control environment, there was some extra topic, elements of control environment. So how many elements? Oh, we read 7 elements. So you need to map things, topics in your mind like this, guys. Okay, so see, conceptual clarity is very important, but at the same time, if you want to score extremely well in the subjective area, a bit of retention, a bit of smart retention, smart way of studying is required, and these maps, these charts are going to help you in that. Anyways, my main book, my textbook, the textbook that you all must have got, it's also in very tabular format and all, which is very easy to understand and very easy for you to remember the points. Okay, all right. So with this, guys, again, let me just zoom out the master chart for you. So we have covered so many topics from this particular chapter. Yes, we have covered uh, yes, We have covered audit risk, risk of material misstatement, assertions, 315 also we have covered, and we have also covered internal controls. Now, as per the chart, the next standard that you can see is 320, but I would be taking 330 first because we have just completed 315 and we have assessed the risk of material misstatement. Now, how you are going to respond to this risk of material misstatement is something which we are going to learn as a part of essay 330. So let's complete 330 first, which says auditor's responses to the assessed risk. Assessed risk. Where did the auditor assess the risk? Sir, in 315. What kind of risk did he assess? Sir, risk of material misstatement. At what levels did he assess the risk of material misstatement? Sir, at two levels, at FS level and at the assertion level. Okay. So 315 is basically about assessing the risk and how are we going to tackle and respond to this risk. We are going to study this as a part of essay 330. Okay, so let's first take 330 and then guys, we are going to go back to 320 and there is one more topic left in this chapter, which is audit in automated environment. Okay, so auditor's response to assess risk. There are certain topics, if you can see here. First, let's understand the objective of this standard. Very basic, very simple thing. The objective of the auditor is to obtain sufficient appropriate audit evidence about the assessed risk of material misstatement. So whatever risk of material misstatement he has assessed, he will now be obtaining sufficient and appropriate audit evidence about it through designing and implementing responses to those risks. Okay, so what responses will he be making? So there are a lot of requirements that we have to see here, guys. Okay, so there would be two responses. I think I told you this yesterday also. Let me see again if I have the chart here. No, okay, I'll just draw it once again for your understanding. So as per 315, I think I have it here. Okay, so as per 315, guys, as per 315, what did we do? We assess the risk of material misstatement. Yes or no? We assess the risk of material misstatement. Okay, and at what levels did we assess? We assessed at the FS level and at the assertion level. Let's say for class of transaction, account balance, or disclosure. Now we have assessed the risk of material misstatement already. How do we respond to this? So if it is a risk of material misstatement at the financial statement level, that means it is a misstatement which is pervasive. Okay, so we are going to design overall response for it. Okay, and if it is a misstatement pertaining to a particular class of transaction, account balance, or a disclosure, then we are going to basically design something called as further audit procedure for it. That means, let's say, we are going to basically have what kind of uh, um, response, overall response here, and then we have further audit procedures here. And all of you know this. What is included in further audit procedure? It would be test of controls, or let's say scientific procedure. Okay, all right, so these two concepts now we are going to learn in essay 330. So what would be the overall response? Okay, now guys, you only tell me if the misstatement is not just confined to one particular class of transaction or account balance. Misstatements might be there throughout the financial statements. It's, let's say, pervasive. It's a FS level ROMS. So what response? How should I respond? How should I tackle it, guys? So there are certain overall responses which I have to design. Okay, so I have mentioned this in my example here. So overall responses, what would be the overall responses? Let's first understand this. So what is overall responses? It is basically a design and implement overall responses to address assess risk of material misstatement at what level? FS level. And what is overall response going to include? Overall responses includes, guys, you have to understand this. Okay, it says number one, that I would ask my entire team again. I would just remind them, yes guys, there are misstatements at the FS level. You have to be more alert. You have to exercise. You have to maintain the attitude of professional skepticism. Now when I know that there might be misstatements which is pervasive in the financial statements, I might not be keen on sending the less experienced team members. I would only be sending, or asking experienced team members to be, to I will assign them to do the audit work. So assigning more experienced staff or those with specialized skills or using experts. Then because it's a risk of material misstatement at FS level, you would also be now doing more supervision to their work. Okay, and guys, you have to incorporate elements of unpredictability in further audit procedures. Of course, you are going to do FAP, but these are the extra things that you might have to do for the overall response. Okay, so overall, because the risk of material misstatement is pervasive, you have to be more alert. You have to have a team of experienced persons, skilled persons, maybe an expert also. You have to exercise more supervision, and then you have to include a lot of elements when you are doing actually the further audit procedures. Okay, but then guys, when you know that the risk of material misstatement is not pervasive, it is just related to one particular, let's say, transaction or account balance, etc., then in that case you are going to do further audit procedures. Now, you all know what, further audit procedure means. What these are, further audit procedure, you have to design and perform FAP whose nature, timing, and extent are based on and are responsive to the assessed risk of material misstatement at the assertion level. So what could be the types of FAP, guys? Can anyone answer this again? What are the types of further audit procedures? Please write it in the chat box. Yes, Deepika says TOC, okay, test of controls, and not SAP would be substantive analytical procedure. Yeah, substantive procedure is correct. Yes, Amrita, you are correct. So what are the types, guys? We have test of controls and we have substantive procedures. And all of you know this, that substantive procedures, I can divide it further into what? These substantive procedures, can I divide it further into test of details and analytical procedures? Yes, okay. And now this test of details I can also further classify. Okay, if you are checking on the uh, transactions, I will be calling it as, let's say, vouching. And if you are concerned with the balance sheet items and all, you're checking them, it is called as verification. Yes, vouching and verification. Absolutely. Okay, so all of you know the types, right? Now, the entire standard, see, we have covered the basics, guys. Okay, now the entire standard is going to revolve around these two things. Okay, we have already learned the overall procedures, overall responses, that yeah, the auditor has to exercise more supervision, has to have an expert team, experienced team. He has to maintain and ask his team members to be more alert during the audit. All this we have learned, right? Now, the main focus of this entire standard would be further audit procedures. And all of you know, if you can see the next 2 points that we are going to cover, test of controls and substantive procedures. So we are going to discuss the further audit procedures here in detail. Okay, so let's start with the test of controls part, guys. Okay, we have a lot of points to understand, but it says number one, test of controls are designed and performed to obtain sufficient appropriate audit evidence. So why is, why do we even do the test of controls? We do the test of controls, guys, to obtain sufficient and appropriate audit evidence about what? That when the auditor expects controls to operate effectively, whether the controls are operating effectively. And guys, you do a test of controls because sometimes substantive procedures alone will not be able to give you enough evidence or sufficient audit evidence at the assertion level. So why do we even do or go for test of controls? Number one, you want to gain evidence with respect to the operating effectiveness of the controls. And guys, only by doing substantive audit procedures, probably uh, it will not give you sufficient appropriate audit evidence. Hence we resort to test of controls. Okay, now this was basic, but then, sir, what about the nature and extent of test of controls? What is it that we have to check when I say test of controls? What is the nature and what is the extent of test of controls? Okay, so with respect to nature and test of controls, guys, very simple. In designing and performing test of controls, when I talk about nature, what is it that we will be concerned about, guys? Yeah. So in designing the test of controls, what are we going to be concerned about, sir? Perform, Yes, it says, see, in designing and performing test of controls, the auditor should perform other procedures alongside inquiry to assess the operating effectiveness of control. So you have to do inquiry, but then other than inquiry also you might have to do some procedures. So perform other audit procedures alongside inquiry, then evaluate how controls were applied and how consistently were they applied, who are the ones who are actually responsible for the controls. All these things you will have to know. So when I say nature of controls, guys, we are studying what nature and extent of test of controls. So you have to understand that you have to perform uh, yeah, you have to perform some audit procedures in combination with, let's say, inquiry. Okay, and then to assess whether the internal controls were effective or not, were operating effectively or not, and then you have to see how the controls were applied, whether they were followed consistently or not throughout the year, who are the responsible parties. Okay, and sometimes what happens, guys, determine if tested controls, whatever controls you have tested, they rely on some other controls. Okay, so they are dependent very much on some other controls. So you'll have to also see the effectiveness of those other controls. We call them as indirect controls. One control is dependent on the other control. You have checked this control. So to check whether this is effective or not, you might have to now check the indirect control also. So determine if tested controls rely on other controls, that means indirect controls, and assess their effectiveness also. Okay, now please understand this, guys. Inquiry alone, please understand this, that inquiry alone is insufficient for testing controls, and other procedures are also necessary. Only by asking is not sufficient. So what could be the other procedures, guys? Did I not tell you? Can we do in inspection? Did I just tell you in the chapter of internal controls that, let's say, we want to see whether payment vouchers have been authorized or not? So we will have to do inspection. Only by inquiring, hey, do you authorize all the payments above 10,000? They will say yes, sir. But will it give you sufficient evidence? The answer is no. You will have to basically perform some other procedures along with inquiry. So we might have to go with inspection. Can we also do reperformance? Yes, sir. So they said we have made a BRS. Good, they have made. You can also make one and then reconcile. I mean, see whether their BRS, your BRS is okay or not. So it is basically what? Reperformance, right? Now, guys, so I have, what did I tell you? I mean, see this point. When you're designing and we are performing test of controls, what is it that you have to do? You have to do inquiry, but then inquiry alone will not provide you sufficient audit evidence, guys, sufficient evidence. Okay, so what is it that you have to do? You have to perform other audit procedures in combination with inquiry, number one. Second, you also have to see that how the controls were applied, were used in the organization, were followed in the organization, then whether it was consistently followed, who are the parties responsible for it, and then if the control that we have tested it is dependent on some other control, we also have to see the effectiveness of that indirect, the other control also. Done. All right. Now, the point, one more point, one topic which I feel might be important. Factors considered in determining the extent of test of controls. Now, how much test of controls will you be checking? What are the factors to be considered in determining the extent of test of controls? Okay, very, very important question. Okay, in your main material also I've included it as a part of the questions also. So what are the factors considered in determining the extent of test of controls? There are 5 points, guys. Number one, frequency of control performance by the entity during the audit period. How frequently was the control being used? Frequency of control performance by the entity. How important was that control? I mean, what is the frequency with which the entity was using that particular control? Number one. Okay. Second, length of time the auditor relies on the control's effectiveness. Now, for example, guys, do you want, will you only be seeing whether the control was effective as at the end of the year, or you are concerned whether the control was effective throughout the period? So, depending on that, you will basically decide on the extent of checking you want to do. For example, guys, if you are only concerned with whether the control existed as on 31st March, so you might just want to see things as on 31st March, right? But then if you want to make sure whether the controls was in operation, operated effectively throughout the period, you might have to check a lot of other things also. I mean, check on other dates as well, right? So what is it that we are discussing? We are discussing on what factors will the extent of our checking of controls, extent of test of controls depend. Number one is very important point, guys. How frequently, what was the frequency of the control performance by the entity? Okay, second, what is the length of time the auditor relies on the control's effectiveness? Then third, expected deviation rate from the control. What is deviation? Deviation is basically, we will learn more about it in the chapter of audit sampling also. But then what is deviation? When control is not working as intended. So if you are expecting that, yeah, more deviation will be there, the payment vouchers would not be signed. If you are expecting, so you would have to increase the extent of your testing, right? So if you are expecting deviation, you will have to increase the extent of your testing. Okay, then relevance and reliability of audit evidence regarding control effectiveness at an assertion uh, level. So the evidence that you get about controls effectiveness, relevance and reliability of audit evidence regarding control effectiveness at the assertion level. So guys, if let's say you apply one test, okay, you are doing one test of control, but you are not satisfied, you are not happy with the evidence that you have got, or you are not convinced with the evidence, with the response to the inquiries that you have made to the management, you are not very convinced with that, you feel it is not very reliable, so then you will have to do more testing. So if you are not satisfied, if you are unhappy, if you feel that the information, the evidence you have obtained is not very reliable, you'll have to resort to more testing. Okay, and extent to which evidence is obtained from related controls. Now I have already, let's say there are two controls related, I have obtained a lot of information already from this control, so maybe for the other control which is related, I might not have to resort to much testing, right? Now this topic is very difficult. Why? Because it will require you, of course, along with understanding, it will require you to have some retention about of the points. So let me repeat it again, guys. What is the topic that we covered? What are the factors to be considered in determining the extent of test of controls? How much test of controls do we need to do? So number one is control performance by the entity, frequency of control performance by the entity. Number two, length of time the auditor relies on the controls effectiveness throughout the year or just at the end of the year. What is the expected deviation of the control? Whatever evidence I've obtained, whether it is reliable and relevant or not. If not, you'll have to obtain more evidence, of course, you'll have to apply more tests. Okay, and then finally, information which I've got from testing the related controls. So all these factors are going to make you decide basically on the extent of test of controls. Very, very important topic. Okay, so test of controls, guys, we have covered nature and extent. Now the next point, again very important one, is timing. When are you going to test the controls? Okay, so let's read this, guys. Very simple. With respect to timing, I have given 3-4 points. It says test of controls for specific time or throughout the period for which reliance is intended. So if you are only concerned, if you just want to see whether controls with respect to inventory, was it there as on 31st March, so you'll have to check only for that specific point of time. But you are concerned, you're worried whether this control on inventory was there throughout the period or not, so you'll have to check throughout the period. That's it. So test controls for either specific time or throughout the period for which reliance is obtained, is intended. If I'm only concerned with obtaining reliance whether the control was working as on 31st March, I will do testing on that specific time, for that specific time. If I'm concerned, if I want to obtain uh, uh, you know information that whether the control was operating throughout or not, I want to have reliance for the entire period, so that means I will have to check throughout the period. That's it. So what is about the timing of testing of controls, either specific time or throughout the period. Okay, now let's read this. Audit evidence pertaining to a single point in time may suffice, such as testing controls over period and activities like physical inventory counting. So sometimes only by checking at the physical at the period end at a specific point of time, at a single point in time may suffice. For example, in case you want to do a physical verification as at the end of the financial year, so it's basically audit evidence pertaining to single point in time. However, if relying on a control over a period, if you want to rely whether the control was there throughout the period, test should provide evidence of its effectiveness at relevant times during the period. So you have to check a lot of times during the entire period. Okay, now you have to understand this. I mean, we are done with the concept of timing. Okay, simple words, it can be either at a specific time or throughout the period. But the testing of controls, guys, may also include monitoring the entity's controls throughout the period to ensure ongoing effectiveness. Now when I say timing, you also you might have your test may include monitoring of the entity's controls. You remember monitoring, we learned that it is one of the important components of internal controls, right? So you may test whether monitoring of internal controls is done throughout the period to ensure whether the controls are effective or not. If monitoring component is not there, the controls might not be effective, guys. It might become outdated. So this can be checked. Okay. All right. So yes, we are done with the timing concept also. Okay. Just remember two words, either point in time or throughout. Now, one thing, guys, let's say I was the auditor of this company in the previous year. Last year also I did it. And last year when I was doing the audit, of course, I would have assessed their internal controls. So can I use that understanding? Can I use the results of that test in the current audit? So the point says considerations for using previous audit evidence of control effectiveness. Can I use the previous audit uh, evidence of controls effectiveness in the current year audit? So let's read the point. It says, guys, yeah, I can use, okay. So but there are certain considerations for using previous audit evidence of control effectiveness. Again, can be an important question. So what are the considerations? Can I use, let me repeat this again, can I use the previous report? Last year also I had done my audit. Can I use the previous audit evidence, okay, with respect to the internal controls effectiveness in the current year? If yes, what are the considerations? So number one, effectiveness of internal control elements. What are the internal control elements, guys? The components basically. So you have to see the effectiveness of internal control elements. Like what? Like you have to see that whether the control environment is still there. You have to see the monitoring of controls. You have to see the risk assessment process. Okay, so if you know uh, the three components that we have just covered, I mean, we have five components, but you have to see basically if these components are there. I mean, these are important components. Control environment is basically what? The foundation. Okay. The how serious the management is with respect to internal controls, the attitude of management towards internal controls. And risk assessment process, I told you whether management has a system of risk management process or not, whether they have this ongoing system of monitoring the controls. So you have to see if these elements are effective. If these elements are very effective last year, you might think of using previous audit evidence in the current year. Okay, but if these things are not effective, these are very crucial things, probably you might have to check all the controls again this year maybe. Okay, then risk from control characteristics. Next point is, if they have more of manual and automated controls. You only tell me if they have most of the controls, if they have things are automated. So probably then the extent of checking in this current year would be less. You might rely on the previous audit report also. So the risk arising from the characteristics of control, including whether it is manual or automated. So what kind of risk arises from the control? See, no control is 100% foolproof, right? So you'll also have to consider the risk that arises from the controls. All right. Then effectiveness of general IT controls. Now, guys, you don't know about this yet. There is something called as general IT controls. There is something called as application and control. I did show you here, right? Controls in automated environment. I'll just give you an idea. What is ITGC? What is general IT controls? General IT control means controls which is throughout the system. I mean, let's say if upon logging in to the system, you need to give user ID and password. It's a general IT system. However, application controls are controls with respect to specific applications. Like, for example, if you have some specific controls on the software of Tally, if you have some specific controls on a particular software, then it is application control. Okay. So the point says effectiveness of general IT controls. If the general IT controls were good, then effectiveness and the application of the control. Okay. No, I think there's a mistake. Yeah, actually, the heading should have been directly deviations. Anyways, effectiveness and application of control. I mean, whether the controls were really followed by the entity or not, or whether deviations. Deviations means when the controls are not followed. So nature and extent of deviations. If there are any changes in the personnel. When I say changes in the personnel, that means, let's say last year the store manager was this person. Now the person has changed. The person, Mr. X, who was the store manager last year, he was there in the organization since last 3-4 years. Let's say he has knowledge of the entire department, he was working very well, but now the person has changed. all of a sudden the person has been replaced, a new person has come. So in that case, maybe you would want to see whether he is doing the work properly or not, etc. So again, whether the controls are being followed or not. Okay, then we have certain more points, guys. Potential risk from lack of change in control. Potential risk from lack of change. A control was required to be changed, it was supposed to be updated, but then there is no change. So potential risk from lack of change in control. There was a change which was supposed to be done in the control, but they have not uh, done it. Okay, then risk of material misstatement and reliance on control. Of course, how much last year, let's say, guys, okay, last year there were a lot of misstatements, that means the controls were not good. So this year also probably you'll have to see that risk of material misstatement this year, and also to what extent you are relying on the controls. Okay, and accordingly you'll have to decide whether you can use the last year's audit evidence, or you'll have to basically do the checking, do the testing of controls again. And establishing continuing relevance, most important part. Okay, sir, I wish to use the audit evidence that I had obtained with respect to controls in the previous year. I want to use it this year. So first you'll have to see whether it is going to be relevant. Ensure establishing continuing relevance, obtaining audit evidence of significant changes in controls since the previous audit. So let's say you have decided that, okay, I'm going to go with the previous audit evidence that I had obtained. But then if there are any changes in the control, you'll have to do the audit of the changes. It says obtain evidence of significant changes in control since the previous audit. Okay, so guys, a tough question, I should say it's a tough question, because again it will require you to remember the points. It says again, what is the point? Considerations for using previous audit evidence of control effectiveness. Okay, so the auditor shall consider the following. If you wish to use the previous audit findings or evidence with respect to control effectiveness, you have to consider these aspects. What are the aspects? Whether the control environment, not environment, control elements, or let's say components of internal control are effective or not. What is the risk from the controls that the company faces, whether it's more of manual or automated. How effective are their general IT controls? How often do they deviate from their controls? Have they made the necessary changes in the control or not, which they were supposed to make? Okay, and if they have made changes in the controls, you will, of course, you will have to at least check the changes. You'll have to do the audit of the changes if you wish to rely on the previous audit evidence of control effectiveness. Okay, all right, done, guys. Now, so we have completed this considerations for using uh, audit evidence of the control effectiveness of the previous year. Okay, now we just have one more topic. You have to evaluate operating effectiveness of controls. Okay, so with respect to test of controls, see what all things we have covered. Majorly we have covered nature and extent of controls. I'll just summarize it, don't worry. Then we have covered timing, and then we have covered what if you wish to use the previous audit evidence of controls, what are the considerations, and now how are you going to evaluate the operating effectiveness of controls. Okay, so guys, you only tell me. Let's say you are doing the substantive process and then you find some misstatements. So does it mean that your controls are ineffective? What do you think, guys? Yes. Don't you think, guys? Okay, please understand it in this way, guys. If we are doing substantive procedure and we come across misstatements, so does this indicate, if we have detected any misstatements by doing substantive procedures, does it indicate that the controls are not operating effectively? Yes, that is why there are misstatements. Okay. However, guys, that doesn't mean that if you are doing substantive procedure and you don't find any misstatements, that doesn't mean that the controls are effective. I mean, if you don't find any misstatements, doesn't mean that the controls are effective. Why? Because detection risk, it's not necessary that we find all misstatements. So in case you don't get any misstatements, don't assume that the controls are effective. Okay, so first 2 points, I'm repeating this again, guys. Let's say you're doing substantive procedures and you come across a misstatement. So will it indicate that the controls are not effective? Of course, yes, it might indicate. However, you did not come across misstatements. So does it mean that the internal controls are absolutely fine? They are perfect. They are great. The answer is no. Because please understand, guys, it might be the case that we are not able to find all misstatements, but that doesn't mean that your internal controls will be 100% effective. Okay, and then there is a point, deviations from intended controls, guys. Okay, now when you come across deviations, okay, what does it mean when you come across deviations? So if deviations from controls upon which the auditor intends to rely are detected, if you have found some deviations in the internal control, what is deviation? That means the controls were not working as uh, intended. Now the auditor will make specific inquiries. See guys, let's say we are checking the payment vouchers. They told us that every voucher, every payment of in excess of 10,000 rupees, there is a signature of the authorized management competent authority. And now you're checking the payment vouchers. You found that in many payment vouchers exceeding rupees 10,000, the signatures were not there. So is it not a deviation? The answer is yes, it's a deviation. Now what is the thing that you're going to do? You're going to make inquiry. We are going to make specific inquiries to understand these matters. I mean, we are going to ask, hey, you were saying that all the payment vouchers are signed, but I can't see the signatures here. So you are going to make specific inquiries. Okay, now uh, you and when you make specific inquiries, you have to also determine that whatever test of controls you have tested so far, okay, the test of controls that have been performed provide an appropriate basis for reliance on the controls. Can you rely on the control or not? Whatever test you have performed so far, can you rely on the control, or there is a need to do additional test of controls? Okay, so if there is deviation, guys, from intended controls, number one thing that you have to remember is you are going to make specific inquiries, and then you shall determine whether the test of controls that have been performed provide an appropriate basis for reliance on the controls. Then any additional test of controls are necessary, or the potential risk of misstatements needs to be addressed by using substantive procedures. So you will have to do more of substantive procedures also if you feel that the control was not working properly. Okay, again, last part, guys, how we are talking about evaluating the operating effectiveness of controls. Okay, what did I tell you? So let's say, guys, you are doing a substantive procedure, and then you come across a misstatement. So will this indicate that the controls are not proper? Yes, maybe yes. However, if you don't come across any misstatement, does it mean that the controls are super effective? The answer is no. The control, might not be very effective. No misstatement doesn't mean that the control are effective. Okay, and the third one is basically, guys, if you come across deviations from the intended controls, you are going to make specific inquiries, and then you shall determine that whatever test of controls you have done so far, whether you can place reliance on the controls, or you need to perform additional testing of controls, or you need to increase the extent of your substantive procedures. Okay, so this was all about test of controls, guys. Again, I'm just quickly going to revise it for you again. Okay, it's a revision session, again doing a revision. Okay, so first thing that you have to remember is nature and extent of test of controls. Under nature and extent of test of controls, what all things do we have to cover, guys? You have to understand that when I say nature and extent, inquiry alone will not give you sufficient appropriate audit evidence. You have to perform other audit procedures. Also, you'll have to see how the controls are used, applied, whether they have been applied consistently or not, who is responsible for the controls. If one control is dependent on the other control, you will also have to see the effectiveness of that indirect control. Okay, please note, inquiry alone is not going to give you sufficient, hence other audit procedures are also necessary, like reperformance, like uh, you know observation, I told you, inspection, etc. But this is very important question, guys. Factors considered in determining the extent of test of controls, very very important question. So we have covered this. Then timing, I told you two things you have to remember, either at a point in time or throughout the period. Now considerations for using previous audit evidence for control effectiveness, this again is a very important question. So please remember this topic here, factors and this consideration, it would require a bit of retention. Okay, so be smart, focus more on these topics. And then it was basically about evaluating operating effectiveness of controls, right? So we have primarily four topics which we have covered with respect to test of controls. Now the last topic with respect to essay 330, what is the last topic? Substantive procedures, guys. We are going to cover substantive procedures. Now in substantive procedures, in our book, the content is not much. I mean, in the ICI book, they have little less of content, but then I have tried my best to incorporate other aspects also, because auditing pronouncements is also there for you, right? They have uploaded auditing pronouncements also in the ICI website, right? Board of Studies portal. So, and 330, essay 330 is very much in your course. So we'll understand some aspects about substantive procedures also. So first thing that you have to know about substantive procedure, let us quickly understand. You already know this classification. We have test of details and we have substantive analytical procedures. And under test of details, you already know we have test of transactions, which is vouching, and we have verification also. What is vouching, guys? Vouching basically means verifying individual transaction, and verification means what? It means verifying the existence of assets or liability. So verification is basically with respect to balance sheet items, and vouching is testing of transactions. So you already know this classification, not very important for you. However, similar to this, if you can see, we had covered nature and extent of test of controls here. We had covered nature and extent of test of controls, right? Similar to this, guys, we are going to cover nature and extent of substantive procedure. So let's cover the nature and extent of substantive procedure. Very simple. It says, okay, guys, we have options here. How much substantive procedure you have to do? We have options. What are the options? Either you can only do substantive analytical procedures, because analytical procedure, if they are giving you sufficient appropriate audit evidence, you can just do that. I mean, analytical procedure anyways is an intelligent way of doing the audit. Or you might even do just test of details alone, you might just do vouching verification alone, or it may be a combination of these two. So substantive, we have the options, guys, either substantive analytical procedure alone, or test of details alone, or combination of both. Okay, however, you all know this, when will the extent of substantive procedures increase? If you do a test of controls and the results are not satisfactory, don't you think the nature, timing, and extent of our substantive audit procedures will increase? The answer is yes. So unsatisfactory results from test of controls may increase the substantive procedures. I hope you all are clear with this. Okay, now guys, do you remember in essay 315 I had taught you something called as significant risk? Can you tell me, guys, in the chat box, what is significant risk? What is significant risk? Yes, I did tell you. Let me just quickly take you back to the chart. I told you that once auditor identifies and assesses the risk of material misstatement, okay, uh, once he identifies and assesses the risk of material misstatement, he has to prioritize. And yeah, yeah, Amrita, you're absolutely correct. Significant risk means risk which requires special attention of the auditor. Okay, so we covered about significant risk. Now, if there is a significant risk, do you remember on what uh, we covered certain factors to determine whether a risk could be a significant risk? I told you whether the risk is on account of fraud, if it involves complex transaction with related parties, transaction outside the normal course of business. We covered these points, right? Now, if you happen to come across these type of transactions, let's say, what will you do? What will you do? So the point says, I mean, the topic that we are in at the moment, it says substantive procedure responsive to significant risk. Very simple point, guys. You have to perform substantive procedures specifically tailored to address the identified significant risk. So if, let's say, I feel that there might be a fraud, it's a significant risk, so now I'm going to do substantive procedures to basically see actually if there is a fraud. I have to do substantive procedures specific to the address identified as significant risk. Very simple. Okay, now there are few more points, guys, in this standard, guys. Let's say substantive procedures towards the, for the transactions, or let's say related to financial statements closing process. Substantive procedure, let's say with respect to some disclosures also. We are not going to go into that detail, it's not there in your ICA material. However, with respect to timing of substantive procedure, this is also not there as such in your ICA material, but then it's a basic thing, right? Timing of substantive procedure. Do you remember we covered timing of test of controls? With respect to timing of test of controls, what did I tell you? Either at a single point in time or throughout, right? But in case of substantive procedures, guys, let's say if we have done some substantive procedures, okay, for the month of, we have checked sales for the month of, let's say, July, then what has to be done about the others, other transactions of sales? So we are going to learn about this timing of substantive procedure here. Okay, so substantive procedure, if you do at an interim date, not at the end of the year, but at somewhere in between. Let's say, you are the auditor of the company, and in the month of July, uh, of this financial year, you went and you just check certain sales amount transactions. You have done substantive procedure at interim date. So now what has to be done? It says if you do it at an interim date, then options, you have certain options for covering the remaining period. What are the other options? Either you do substantive procedures combined with test of controls for the other period also. So for other months also, I would be doing some substantive procedures, or you can only do substantive procedures if you determine it to be sufficient. If you feel test of controls are good, then you can only resort to substantive procedures. So we have got two options, guys. Again, if you have done some substantive procedures at the interim period in the middle of the year, let's say, okay, then let's say once the financial year is over and all, you want to get more assurance, let's say, so you might check, you might go for further substantive procedures along with test of controls. But if you already have the knowledge of test of controls, if you feel they're effective, you might only resort to substantive procedures. That's it. Okay. And guys, timing of substantive procedure, again, response to unexpected misstatements. If there is some misstatements, okay, so evaluate and potentially modify the assessment of risk and planned procedure if unexpected misstatements are detected at an interim date. So if you come across some misstatements at an interim date, you might have to make certain revisions and extend your nature, time and extent of substantive procedure, because you feel that there might be more misstatements, so you'll have to accordingly plan your audit work. Okay, done. So not very important, but yes guys, with this, if you can see, we have completed essay 330, and there might be few direct questions asked from this standard, and it's a new standard. I mean, this was there in the CA final, we have been teaching this in the CA final, but then this has been newly incorporated in the intermediate level also. This standard was, I mean, the basic concepts of this standard, like what is test of controls, what is substantive procedure, I used to teach in the old course also, though this standard officially was not there in the old syllabus, but now they have formally incorporated it. But then again, the full standard is not there. Okay, so with this guys, we have completed essay 330 also. Now in this particular chapter, what we are left with is two topics. If you can see, one is essay 320 and the other one is the topic of audit in automated environment. All right, friends. So now let us start with the last standard of this chapter, which is essay 320, a easy standard. And 320 is on materiality, materiality in planning as well as performing the audit. Okay, this is the last standard of our 300 series. We have already completed 300, which was on planning. We covered 315, identifying, assessing the risk of material misstatement. We just covered essay 330 also as to how we have to respond to the assess risk. And now the last standard from the 300 series, which is on materiality in planning and performing the audit. Okay, so what all things do we have to cover here? First, we'll just understand the basics of materiality, guys. We'll go through these basic concepts of materiality. Okay, so we have certain concepts here. 320, essay 320 defines information as material if its omission or misstatement could influence the economic decisions of users. So I've been telling you this from my regular lectures, in my regular lectures also, that guys, what is materiality? Something which would influence, the misstatement of which would influence the economic decisions of the user. Okay, now materiality is important to the auditor because if a material item is incorrect, if material item is incorrect, if something which is material is incorrect, is misstated, then the financial statements will not be giving true and fair view. Okay, now what would amount to as material? It's a matter of professional judgment. The auditor's determination of materiality is a matter of professional judgment, and whether something would be material can depend on two things. Basically, it can be by the size of the misstatement, size of the item, or on the nature of the uh, item. Okay, so let's say the total of the balance sheet is 10 lakh rupees and inventory alone is 8 lakhs. So if any item in the inventory is misstated, of course it will be material. Why? Because out of 10 lakhs of the asset side, 8 lakhs is only inventory. But sometimes it's not just about the size which would make an item as material. It may be on the nature of the item also. Let's say in this company only, wherein the total of the assets is 10 lakhs and inventory is 8 lakhs, but what they have done is the director gave 5,000 rupee to his son as loan. Director gave 5,000 rupee as loan to his son. Now 5,000 might not be a very big amount, okay, or let's say he gave 2,000 rupees only. Let's make the amount even smaller, but then It's a very important thing for the shareholders to know that the money that they have put in the business, the director has given it to his son for their personal usage. So this is something which requires disclosure. So as per AS 18, it's a related party transaction, right? Transaction with the director's son. So the disclosure of the same has to be made. Even though the amount is only 2000 rupees, if the disclosure is not made, it would be a misstatement. So it is a material thing now. Okay. So this was just an example, guys. Okay. So in our regular lectures, we cover a lot of examples though, but I hope you have understood that materiality can be on the basis of the magnitude, the size of the transaction or item, or it can be on the basis of the nature of the item. Okay. All right. Now, guys, something, whether something is material or not, I would determine materiality not considering the needs of individual users. Like for example, this company of mine, of which I am the auditor, they have taken a loan from the bank against their plant and machinery. So this bank would always be concerned about the assets of the company. On the other hand, the shareholders would be concerned whether the company is earning profits or not. Yes. So different needs, different users will have different needs, right? But then as an auditor, I need to determine materiality based on the needs of the common users, not individual users. It says judgments about materiality are based on consideration of common financial information needs of users as a group and not specific individual users. Fine. Okay, so these are the basic things about materiality, guys. Okay, now what is the objective of auditor in this particular standard? Very small point. The objective of the auditor is to apply the concept of materiality appropriately in both planning as well as performing the audit. Okay, so we have to apply the concept of materiality while planning as well as performing the audit. Not very important. Okay, now let's start with the main standard, guys. Let's talk about the requirements of this standard. If you see, guys, we only have 4 requirements. Number one, you have to determine materiality, or 2 types of materiality. Determine materiality and performance materiality when planning the audit. So we have to basically find something called as materiality and also performance materiality. Okay, now what is the point? Let's understand. It says when establishing overall audit strategy, remember in SA 300 I told you first is what we establish overall audit strategy. When establishing overall audit strategy, the auditor shall determine materiality for the financial statements as a whole. There would be 2 materiality levels: materiality for the financial statement as a whole and materiality for specific class of transaction, account balance, or disclosure. So again, guys, in very simple terms, if I say, okay, materiality can be of 2 types, I mean 2 levels. Materiality is what? For the financial statement as a whole, and it could be for specific class of transaction, account balance, or disclosure. Specific class of transaction, account balance, or disclosure. For example, now let's say I have set the materiality for the financial statements as a whole to be 5 lakhs. That simply means I would be checking all the transactions which is 5 lakhs and above. Other than that, I will not be checking. So this is, let's say, I'll be doing sampling rather. Okay, but then all transactions which are above 5 lakhs, I'll be checking. I'll be doing 100% checking of those transactions. But then, guys, sir, you told that related party transaction is an important thing, let's say. Okay, and even if it is of 2000 rupees, 5000 rupees, it has to be disclosed in the financial statements, right? If you don't disclose a particular requirement, let's say it's an AS 18 requirement that related party transactions have to be disclosed, but if it is not disclosed, it leads to misstatement. It would amount to misstatement, right? So in that case, guys, what we can do is we can even set materiality for specific class of transaction, account balance, or disclosure. So let's say we set materiality for a specific transaction, or let's say related party transaction. We set it at, let's say, rupees 1000. So all related party transactions above 1000 will also be checked. Okay, the management will anyways give me the list, but I'll check them. Let's say. So what has happened here? I have set 2 levels of materiality: materiality for the financial statement as a whole and materiality for specific class of transaction, account balance, and disclosure. But you have to always remember, guys, that the materiality level for which is set for specific class of transaction, account balance, or disclosure would be less than the materiality which is set for the financial statement as a whole. Else the purpose is only defeated, right? Let's say you keep this as 8 lakh rupees, then anyways, guys, you are checking all the transactions above 8 lakhs. So remember that when you keep materiality, when you determine materiality for the specific class of transactions, it has to be lower than the materiality for the financial statement as a whole. Okay, all right. Now, guys, what happens is, yeah, So this standard tells us that you have to determine materiality at two levels, at financial statement as a whole and for specific class of transaction. Okay, now let's read the point further. It says the auditor shall also determine something called as performance materiality for the purpose of assessing risk of material misstatements and determining the nature, timing, and extent of further audit procedures. So we also have to determine performance materiality. Now, just to make you understand, guys, after setting this, we are also going to, for each level, we are going to have a performance materiality also. For this also, we are going to have performance materiality. Okay. Now, what is performance materiality? Performance materiality is basically a materiality level which is set below the materiality for the financial statement as a whole, or let's say materiality for specific classes of transaction, account balance, or disclosures. We set it at a lower level. Why? In very simple terms, first let's read the definition. It's a complicated definition here, but you'll understand the logic very clearly, don't worry. In my regular class, perhaps we give almost more than an hour into this concept. Okay, so what is performance materiality? Performance materiality means, read it very carefully, very slowly. It means the amount or amounts set by the auditor. Who is going to set it? The auditor, at less than materiality for the financial statement as a whole. So we are going to set it at a lesser amount than the financial statement as a whole, or lesser than materiality for specific class of transaction, account balance, or disclosure. So we are going to set it at a lesser level. Okay, and to reduce to an appropriately low level, the probability that aggregate of uncorrected and undetected misstatements in the financial statement exceed the materiality for the financial statements as a whole. So we want to reduce the probability that the aggregate of uncorrected misstatements and undetected misstatements should not exceed the materiality for the financial statement as a whole. Hence, we determine something called as performance materiality. Sir, what are you saying? Nothing is going inside our head. Don't worry. This is a technical definition. I'll take some time and I'll explain it to you. Okay. Now, what happens? Let's first understand this, guys. Mr. Auditor, this auditor, what does he do? When he's doing the audit, he basically is there to look for misstatements, right? And when he applies his procedure, of course, he would be able to detect some misstatements. And when I detect a misstatement, I'll ask management to correct it. So either they will correct it or they will not correct it. Okay, if they are corrected it, good enough. And there might be certain misstatements which I did not detect, guys, because you know that there is something called as detection risk, and I'm not doing 100% checking of the transactions, right? So some misstatements might not be detected. So what is going to happen now after my audit? What is the total misstatement, guys, remaining in the financial statement? What is the total misstatement that might be there in the financial statements, even though I have done the audit? So it would be basically the sum of uncorrected misstatements and undetected misstatements. Yes or no? It's just an estimation. So I have mentioned it as UCMS plus UDMS. It's not an accurate value, guys. UDMS, undetected, is just an estimation, right? Now, please understand again, what is performance materiality? I'm going back to the definition. Performance materiality means the amount or amounts set by the auditor at less than materiality for the financial statement as a whole to reduce to an appropriately low level. What? The probability that, read this very carefully, the probability that aggregate of uncorrected and undetected misstatements in the financial statement exceeds materiality for the financial statement as a whole. So you would not want this to exceed the materiality which you have set for the financial statement as a whole. Hence, what we do is, guys, we basically check for transactions below this financial statements materiality level also. If let's say, I'll give you an example. Let's say let's say there is a company and their transaction ranges from rupee 1 to rupees 50 lakhs. Okay, and you have set the materiality level as rupees, let's say, 5 lakh. So this simply means what? You have set the materiality for the financial statement level as 5 lakhs. So this means all the transactions above 5 lakhs, guys, you are going to do 100% checking, and the remaining transactions, it's not that you're going to ignore them, you're going to do a sampling. But then what happens is, guys, let's say some transaction which is very close to 5 lakhs, let's say 4,80,000, or let's say 3,20,000. Okay, let's say all these transactions, let's say there is a misstatement in this one, but then because sir you have determined 5 lakhs as materiality, maybe you will not be checking this, maybe you'll not be checking this, and then let's say there is a misstatement in these two transactions. What happens now, the sum of these two goes below above 5 lakhs and collectively it becomes material, right? So as an auditor, what we do is, even though we have set materiality as 5 lakhs, just as a safety cushion, we would be checking few more transactions close to 5 lakhs. I mean, we would be in, when we actually do the audit, we would consider something called as performance materiality. Performance materiality is a level which is set below the financial statements materiality level. Okay, why? So that aggregate, again read the line, aggregate of undetected and uncorrected misstatements do not exceed the materiality for the financial statements as a whole. So generally, how it happens, guys, what we do is we set the performance materiality maybe at, let's say, 80% of m, 80% of this materiality, or let's say 90%, 60%. It is upon the auditor, it's a matter of his professional judgment. Okay, so I hope you are clear on this. Why do we have something, what is performance materiality? Let us read the line again. Performance materiality means the amount or amounts set by the auditor at less than materiality for the financial statement as a whole. So in my example, materiality for the financial statement as a whole was 5 lakhs. So let's say I have set the performance materiality at 80%. Okay, so it's set at a lesser amount than the financial materiality for the financial statement as a whole. Why do we even have something called as performance materiality? To reduce to an appropriately low level the chances that aggregate of uncorrected and undetected misstatements exceed the materiality for the financial statement as a whole. We want to reduce this probability. Hence, we are going to check few extra things in our audit. This is called as performance materiality. Sir, can performance materiality be there for individual transactions also? Yes. That is why if you read the line, if applicable, performance materiality also refers to the amount or amounts set by the auditor at less than materiality level or levels for particular class of transaction, account balance and disclosure. So that is why we can have multiple performance materiality also. Okay, I hope this is clear to you. Now, if this is clear, guys, we are not left with much in the standard because, okay, the main topic is still left, but this was basic, wherein we take a lot of time. I told you in my regular lectures, just to explain performance materiality, guys, almost 1 hour, 1.5 hours I take. Okay. Now, guys, the most important question, guys, from this standard is, how are you going to determine the materiality? Okay, so guys, we generally use some benchmarks. We use certain benchmarks in determining materiality for the financial statement as a whole. Okay, what could be the benchmark? Sir, it could be anything. I mean, we apply a percentage of to net profits. It can be percentage of the turnover. It can be percentage of some expenses. It can be anything. Okay, it can be any benchmark. So what happens is, determining materiality involves, number one, it's a matter of professional judgment, and please be very careful. It says a percentage is often applied to a chosen benchmark. A percentage is often applied. So what could be the percentage? Sir, it can be, let's say, 5% of a benchmark is net profit. It can be, sir, 1%, let's say, of um total assets. Sir, it can be 0.5% of the turnover. So these are benchmarks, guys, and a percentage is often applied. So always remember, guys, when I teach you about benchmarks, please remember percentage will be applied to a benchmark. And now the most important question from this chapter: what factors will affect the identification of appropriate benchmark? Now the question comes arises as to how are you going to select that benchmark? Now let's say, I'm just going to give you a very simple example, guys. Let's say the company is a new company. They are still in the gestation period. They have not yet started earning profits. They are having losses. For the first 4 or 5 years, they will be having losses because they are just, incurring expenditure and all for the capital, plant machinery, whatever they're creating, let's say. Now, in this case, it's not going to be wise if I take net profits as a benchmark, right? So, different scenarios, we have to take different benchmarks. So, how will you choose the appropriate benchmark? It says factors that affect the identification of appropriate benchmark. Number one, what are the factors? Number one, your benchmark should be element of the financial statement. So, I told you it can be net profit, it can be turnover, it can be total assets. Okay, and the item, the item that you are choosing as your benchmark, it says item on which attention of the users of financial statement of the entity tends to be focused, wherein the users as a group are more focused. You have to choose that as benchmark. Okay, you also have to consider the nature of the entity and where it is in its life cycle, whether it is in the initial stages, in the introductory stages, or is it in the maturity stage, or is it in the decline stage? So you must have read about the life cycle in strategic management as well, right? So you have to consider that also, because if the company, if the product is in very early stages, you can't consider profit as a you know a benchmark. If let's say this it's in a declining stage, when the sales, when the market is almost going down, you can't take the turnover probably as the benchmark. So it is a matter of professional judgment, but then you also have to understand where exactly the entity is in its life cycle. Then the entity's ownership structure also you have to consider, whether it is the structure is mainly, whether it consists of equity or it's a mix of equity and debt. All these things you have to consider. And also you will have to consider the volatility of the benchmark. I mean, see guys, we can't consider advertisement expense to be a benchmark, that I am going to consider materiality on the basis of advertisement expense. Advertisement expense is very discretionary. This year it may be 5 lakhs, next year it may be 30 lakhs. So we can't consider something which is very volatile to be a benchmark. Okay, so what are the factors that will help you in choosing the benchmark? Number one, guys, it has to be an element of financial statement. Second, choose that benchmark wherein the users are more focused. Third is, you also have to consider the nature of entity, where the entity is in its life cycle, the ownership structure, how the entity is financed, whether it has more of equity or debt in its capital, and also the last part is the volatility of the benchmark. So this was the most important part in the entire standard, guys. And with this, almost our standard is going to be over. So once this is done, you have set a materiality level, guys, let's say. Okay, and we set the materiality at the planning level. But then when you actually start doing the audit, you see that there is a lot of, the controls are not good, there are a lot of misstatements, etc. Okay, then you might have to even change the materiality level that you had initially decided upon. And trust me guys, this is going to be really dangerous situation. Okay, because you have already tested so many things, you have checked, you have done substantive procedure. Again, if you revise your materiality level, you will again have to test a lot more things, right? So revision as audit progresses, it says the auditor should revise the materiality level for financial statements as a whole, or for the ABCD level, assertion level, in the event of becoming aware of information during the audit that would have caused the auditor to have determined different materiality levels initially. So had you known about this thing initially, you would have set a different materiality level altogether. So there might be chances that you might have to revise your materiality level. It's going to be a dangerous situation. Okay, all right. So last part of the standard, guys. Sir, we have to even document something. Yes. What is it that we have to document as a part of this standard? We have to document the materiality that we have set for the entire financial statement, the materiality, if at all, we have set for individual class of transactions, account balances, or disclosures. You also have to document performance materiality for each of them. And if there is any change in either point 1, 2, or 3, then also you'll have to document in the changes. Fine. So with this, guys, 320 is over. We have covered it quickly. I hope you have the concept specifically with respect to performance materiality is clear to everyone. Yes or no, guys? Is it all good? Please write in the chat box. Should I move with the next topic? Yes, okay. All right. So, chapter 3, we are almost towards the end. The last topic that we have to cover is audit in automated environment. Very small topic, but very easy and a scoring one. We have limited set of questions to cover from this aspect. Audit in automated environment, one of my favorites. Okay. So, what does automated environment mean, guys? In very simple terms, if I tell you, these days what has happened is our clients have started using the systems, right? And most of the business transactions processes that they do is in the system. So we are going to learn here things with respect to auditing in an automated environment. So let's see what all things do we have to cover. Some basic points we are going to cover about automated environment. Then what could be the risk if uh, the entire system is automated. Then we are going to learn about certain controls. Then how will you do testing in the automated environment? Then concept of data analytics, and finally audit trails. Okay, so what is audit in automated environment? In basics, guys, we have three things to cover. I'm going to teach you first what is the meaning of automated environment, what are the features of automated environment, and as an auditor, what things you should consider when you are wanting to understand the environment, automated environment of your client. Of course, you need to understand your entity, client's entity, and its environment, right? So you need to know about their systems also. Okay, so very important question we have to cover. Now, what is the meaning of automated environment, guys? It simply means business environment where the processes or operations or accounting, any process, marketing, let's say they are doing sales, okay, accounting, and even the decisions also are taken by the computers, by the systems. So decisions also, let's say, guys, uh, I happen to be a manager of a bank, okay, and you have come to me to get a loan of 2 crore rupees. So we have a software, okay, and I will put some details. I will ask you for your income of the last 3 years. I'll put the details, and then I'll press the button, and the system is going to tell me whether you are eligible for the loan or not. So system also helps in decision making. So what is automated environment? It's a business environment where the process, where the operations, even the accounting, even decision making is taken care by the systems. That means information systems or information technology. Okay, now if our client is using technology, guys, if they are using information systems for their different businesses, different processes, etc., what will be the features, what would be the benefits? See the point. So if the client uses IT systems, guys, it will help them to have the business operations would be much faster. Imagine like a company like Amazon, right, or Flipkart, the number of orders they receive in a particular point of time, and if imagine if it was manual, they would have not been able to process so many orders at one point of time. But then because of technology, what happens, the operations becomes faster. Also there is accuracy in data processing, the sales transaction, the amount, everything would be automated. So it never happens like when you are placing an order on Amazon and they are charging less money. Okay, I mean, the order amount is, you can see 5 items, but they're only billing you for 3 items. It is not going to be there. So chances of errors, accuracy is going to be high, chances of errors is going to be less. They would be able to process large volume of data. Imagine number of orders at one point of time in Amazon. Large volumes of data is only they are able to process because of technology. Okay, integration between business operations. Integration between business operations. Now, in the traditional times when there were no systems, what used to happen? There was a problem in coordinating. Let's say the sales team has done a sale, okay, but then the logistics team is yet to deliver the goods, and the customer is now shouting. But then when the things are in systems, everything is integrated, right? The moment the sales happen, the logistics department is updated, they pick up the goods and all, and the consignment number, the courier number, the delivery challan number, etc., is updated to the customer also. So everything is now integrated. I mean, when you order goods, okay, from any website, okay, let's say uh, my website edu launch, okay, you have purchased a class, but then I don't have my own delivery system, right? So we use Blue Dart or delivery courier, but then you do get a message that your books are dispatched, or maybe the books is arriving today. You do get a message. So all these things are possible, integration is possible because of the systems, okay, and because of the systems we have better security and controls, less prone to human errors, of course. Manual things, when there is no manual intervention, or the chances of human errors is less. It can provide you with the latest information, guys. Let's say in traditional systems, uh, on one particular day, let's say it's almost 12 p.m, okay, and I am the manager. I ask my person, I ask my staff, hey, up until now from 9 a.m to 12 p.m, in last 3 hours, how much sales have we done? You will have to calculate, you'll have to see. But then if things are automated, you can tell the data in real time. You can just say, oh sir, by now in last 3 hours we have achieved sales of 3 lakh rupees, let's say. So information, it gives you latest information. And connectivity and network capability is also there. Connectivity and network capability in the sense, let's say, guys, if my system is connected through technology, I'm traveling, I can just very well see it in my mobile phone. I can see all the information in my mobile phone also, right? I can see it from anywhere, anytime, if it is cloud based also. All right, so these are some basic features of the automated environment, and a good question that may be asked. Okay, all right. But as an auditor, guys, it's very important for us to understand the environment of our client. We need to understand, in 315 we did cover, right? You need to understand the entity and its environment. So now if they are using automated systems, we have to still understand it, right? So that is why this topic of audit in automated environment is along with the 300 series of our standards, okay? So understanding an automated environment. So very important question. What things will you check, or try to obtain an understanding of? So first thing is, you need to know what information systems they are using, whether they are using normal tally software, or whether they are maintaining accounts in Excel, or they are using complex or sophisticated systems like ERP, whether they are using SAP, etc. Okay. And if they are using technology, for what purpose are they using? Is it for financial purpose or non-financial purpose? Are they using technology only for wishing their customers happy birthday, or are they even using technology for processing the financials, okay, of the company, the accounting part also? So you have to be very clear on that. Okay. Third, where is the system located? I mean, their server, is it located with them in their office, or is it somewhere in the cloud? So you need to know about the location of the IT system, whether it is local or global. And if they are using a particular software application, let's say they say that, sir, we are using SAP, or let's say we are using Tally. So you need to be aware which version of Tally are they using. Are they using still 7.2, or whether you're using 9, or they are using Tally Prime? You need to know all these things. Okay. And let's say they say that, sir, we are using this software. You need to understand whether the software that they're using for accounting or for, let's say, billing, whether they have bought it, it's a ready-made software, or is it customized. Okay. Now Tally is a ready-made software, it's a packaged software. Some companies might use their own in-house developed accounting software. So you have to be clear on that also, whether they are using packaged software or is it an in-house software. Okay. Now, with respect to IT, what aspects have they outsourced? Sometimes in your offices also, you must have seen that many things with respect to IT, the systems is outsourced. If something goes wrong in the system, there is a maintenance guy, we call him, and he comes and he does the maintenance work. So what aspects of IT has been outsourced? Who are the key persons who takes care of the technology? Who is the chief information officer? Who is the chief information security officer? Who is the chief technology officer? You should be knowing the hierarchy also of the security, or let's say technology officers, okay, in the company. So this is all about understanding of automated environment, and these are some points, guys, that the auditor should consider. These are certain points that the auditor should consider to obtain understanding of the company's automated environment. Very, very important question. Okay, please mark it as important. All right. So with this, the basics part, guys, is over. And in basics, we read the meaning. We have covered the features, and features and understanding of automated environment. Both are important topics. Okay. No doubt, the company will have these many benefits if they use systems, right? But then, guys, it will also come with certain risk. When you use systems, it will have certain risk also. See, I mean, these days we see so many scams with respect to UPI and all happening, right? A lot of people, they and they perpetrate, basically they indulge in scams in different ways, right? And why this has happened? Because people can get into your WhatsApp and hack your WhatsApp basically, and get your bank account details and transfer money to their account, or maybe make you click some unwanted links and then you lose out your money. All this is happening. Why? Because see, earlier when technology was not there, people would not break into the banks and steal money, right? That the probability is less. But because of technology, there are certain risks also. So now we are going to understand, no doubt there are the features, but then there are certain risks also in automated environment. Okay, so what are the risks? So first we are going to learn about what could be the different risk from the use of IT, and then we are going to read about the impact of this IT related risk. And after covering the risk, of course, we have risk, right? And that is why we have to have controls also. The entity should have necessary controls. So immediately after the topic of risk, we are going to cover the topic of controls. Okay, so what are the risks from the use of IT? There could be various risks, guys. Number one, inaccurate processing of data. Let's say we have our systems, but it doesn't process the data accurately. I mean, when I write 2 plus 2, it gives me 3. So that means the processing is not correct. Number one. Second, unauthorized. Okay. Okay. So let's see the second one. Unauthorized changes to the data. Somebody has made changes to my data. Let's say I have my details in the bank, right? I have an account in Union Bank, let's say. So they would be having my master data, my name, my PAN number, etc., and all the transactions that I did. But some hacker hacked into the website and he has changed the data. So this is called as unauthorized changes to the data. That means the integrity of my data is now compromised. Okay. With respect to change, I think we have one more point, guys. Yeah, this one is unauthorized change to data, and this one is unauthorized change to system or programs. I mean, the hacker makes changes to the settings of the system. Okay, there is a difference between point 2 and point 5. Both are unauthorized changes. One is to the data, and one is to the settings of the system. Now, in very simple language, if I say, let's say somebody hacks your phone and he gets into your WhatsApp, okay, and now he's deleting your text, or he's sending some text to others, etc. This is changing in the data, but then he changes the settings of your WhatsApp. Let's say he changes your display picture, he changes your last scene, and whether you want to have the read receipts or not, he changes the settings of that. So this is also what unauthorized changes to the system or programs. Okay, one more point with respect to change, guys. We were supposed to make changes. Let's say we are the organization, and last week the rate of GST was changed, so now we have to make this change in our software also, in our accounting software, but we have failed to do so. So this also is a risk. Now all the accounting transaction, all the billing which will be made will be incorrect. So it says failure to make necessary changes to the systems or programs. So point 2, point 2, point 6 and point 5 are all with respect to changes. Okay, then let's say, guys, there is lack of adequate segregation of duties. You have given responsibility to one person, there is no segregation of duties, then it can be a very dangerous, it's a very big risk. Okay, first point was inaccurate processing of data, and then there is some changes in data. What if the hacker deletes all your data? This loss of data, it's a loss of data. Forget about the changes, he completely deletes, wipes off all your data. It's a loss of data. And let's say, guys, you are an authorized user to use the system, you are an employee of the company. Always remember that excess rights must only be limited to your job responsibilities. You should not be given excess rights. If a person is given more access or privileges than required, it is always a danger. Remember, guys, more than the hackers, the internal employees are biggest perpetrators. Statistics shows, history shows that perpetrators, the main perpetrators, the one who create havoc in the company, the one who perpetrate into the systems, mostly are employees. Okay, employees are even more dangerous. So we have to have good controls with respect to employees. Ensure that you don't give them excess beyond requirement. Okay, so very important question, this also has been asked in the exam. What are the risks that can arise from the use of IT? So 7-8 points you have to remember. Okay, now what would be the impact of these IT related risks, guys? So of course it will have an impact on the substantive procedures, on your controls, on the reporting also. So what would be the impact on substantive procedures, guys? Now you will not be able to rely on the data obtained from the systems. So if you know that, okay, your integrity has been compromised, that means the system's integrity has been compromised, somebody has made unauthorized data change, somebody has made some unauthorized changes in the software. So in that case, what will happen? You will not be able to rely on the data generated by the system. So it is impacting your substantive procedure, right? And maybe you would now need more audit evidence. Sir, what would be the impact on controls? Sir, you cannot rely on automated controls anymore. Okay, and probably because you can't rely on controls, uh, even though you had controls, hacker has hacked in, you have given more access rights to the employees, you will not be able to rely on controls, and then you'll have to resort to more of substantive procedures. What could be the impact on reporting? Guys, you might have to communicate about the issue to the TCWG, and if, let's say, even after doing substantive audit procedures, more of substantive audit procedures, still you are not able to get sufficient appropriate audit evidence, you don't have evidence with respect to the truth and fairness of the financial statement, then you are going to give a modified auditor's opinion. Okay, so not very important, but then yes, of course, guys, if there is a risk from the use of IT, these are the impact that will happen in our audit. So it will impact our substantive procedures, there will be an impact on the controls also, and there might be an ultimate impact on the reporting part as well. Okay, done. So now we have covered the risk. Okay, now let's cover a very important topic, another important topic, which is controls in automated environment. So the next topic that we have to do is, what are the different controls in automated environment? Guys, the different controls in automated environment, we have three different controls. The three different controls are general IT controls, then we have application controls, and then we have something called as IT dependent controls. So I'm just going to give you an overview first of the three controls: general IT controls, application controls, and IT dependent controls. So what is general IT controls? These are, guys, controls, these are policies and procedures that relate to many applications. It is not specific to one application, and they support the effective functioning of the application control. Okay, now for example, when you switch on your laptops, very simple example, when you switch on your laptops, or when you have to unlock your phone, we have this passcode, we have the biometric, we have the password. These are general IT controls. It is safeguarding lot of your applications. Like when I have a password on my phone, it is safeguarding my photos, it is safeguarding my WhatsApp messages, it is safeguarding, let's say I have some uh, bank apps also, so it is safeguarding a lot of applications, right? So these are called as general IT controls. But then guys, I might also have specific controls with respect to application. For example, I have one trading application, okay, and to use that, first I need to unlock my phone. That is general IT control. But to use the trading application, I have to log in again. It uses my biometric, and then only I can trade. So this is specific to one application. I call it as application control. I can have password only for my WhatsApp also. That will be application control. Okay, so what is application control? Application control, let's read the meaning, are specific controls. Please remember the keyword. Application controls are what? Specific controls which is unique to each application. It may be order processing application, it may be your WhatsApp, it may be the trading application which I told you. And these controls, guys, very important, will be embedded in the application itself. Now WhatsApp only gives you the feature to have password on for the WhatsApp. Okay, so they are embedded in the IT applications. They are embedded in the application only, and they help in ensuring accuracy, confidentiality, completeness, etc. So please remember, general IT controls are general, okay, and application controls are specific controls which is unique to each application. Okay, what could be the examples, guys? Okay, there are certain examples of application control. Let me just make you go through this. Okay, now let's say validation of input data, mandatory data fields, limit checks, reasonableness check. These are examples of application control. Probably you'll not be able to understand the meaning, so I'll tell you the meaning of each of them in brief. It's not there in detail in our ICI material also, but then because I told you this chapter is my favorite, I have an expertise in teaching IT related concepts. I'm a certified information systems auditor also. I have experience in this audit also, IT audits and all. So I can, teach you these concepts very well. But then I'll, it's a revision lecture, so I'll stick to that. Okay, not be as detailed as the regular lectures. So what is validation of input data? Okay, now let's say, guys, I'll put it in this way. You are filing your exam form, let's say, or you're filing any form in on the internet, on the online form, okay, and then there is a phone number, and then you only write 8 digits there, and then you press the submit button. The system will immediately prompt you that there is an error. Why? Because they will, validation has not happened. They know that, okay, mobile number, there has to be 10 digits. So if you write 8 and then press submit, it will immediately prompt that there is an error. Rectify it, and then only you submit again. So this is validation of input data. So this is an inbuilt control, right? I mean, any application wherein you are supposed to write phone number and you write 8 characters, it might not accept. Like for example, in Tally, you must be familiar with Tally. Let's say I'm creating a company and they're asking me the PAN number. If I write only 4 digits, it will immediately prompt me that there is an error. So what has happened? Tally itself has a control to check the validation, to basically validate whatever data we have inputted. Okay, now sometimes you will see that in some forms that you fill online, there is a star mark. You ignore that and then you press the submit button. It will not, the form will not be submitted. Why? Because they have a control that this field is mandatory. You have to mandatorily give it. Okay, this is again an application control. Next is limit check. Now limit check is what, guys? In very simple terms, let's say if I say there's a payroll processing software, okay, and in this payroll software, the employees are only required to feed in the number of hours they have worked, and on the basis of number of hours they have worked, the rate per hour is there and the calculation is done. So our company's policy is that no person can work for more than 80, let's say 8 hours a day, and we have this 5-day working system from Monday to Friday. Now after the end of the week, let's say I am filling my working hours and I feel, let's say 80, or let's say I feel 60. Should the system accept it? No, because maximum an employee of this company can work for how many hours? 8 hours a day into 5 days a week, 40. So the number cannot go beyond 40. So the system will immediately prompt that there is an error. Maybe you were wanting more salary, so you fed 50 hours, but it will not take. It is not going to take anywhere more than 40. So this is limit check. Then reasonableness check. What is reasonableness check? Reasonableness check basically compares two fields. Okay. Now, just for the sake of example, let's say you are filling an online form. Okay, and then in the name column you write Rahul. My name is Rahul. Let's say Rahul, and then there is a declaration towards the end. I dash I, Rahul, the name Rahul should come. I, Rahul, declare that the above information true and correct, and then there is a signature. But then what you do is in the name field on the top, you write Rahul, and then declaration, you write Rohit. Both are correct. I mean, because you are supposed to write alphabets, you are supposed to write name, but considering the entire form, is it correct? The answer is no. Both of them should match, right? So reasonableness check checks basically the relationship between two fields. The relationship that, okay, name Rohit, which has come earlier, should come in the declaration part also. So this is reasonableness check. So these are certain examples, guys, of application control. Remember, application controls will be embedded in the main in the software itself. Okay. And what is IT dependent controls, guys? IT dependent controls. IT dependent controls, let's read the meaning first. These are processes that are manually performed by individuals but rely on computer generated information. Okay, IT dependent controls. Remember, these are manual controls. These are manual controls, but it is very much dependent on the computer generated information. Hence, we call it as IT dependent controls. Just for the sake of example, let's say, guys, you want to have an access to a list, let's say, of users who have not logged into the system for last 90 days. Okay, it says a system generated report list users that have not accessed the system within the last 90 days. So there is a list. You took the list out from the system. Oh, these users have not accessed since last 90 days. Now, the internal control may require the administrator to review such report and disable certain users whose accounts have not been accessed. So I took the report from the system. Now I'm manually disabling these users because these users are not very, the frequency of them accessing is not high. So I'm disabling them, let's say. So what I have done here is I took the list out from the system and now I'm manually disabling them. I told you, see, it's useless to give access to people, just like this, right? So we have to restrict our usage. So people who are not regular in accessing the systems, let's just block their passwords, or let's just temporarily block their password, etc. So we are disabling the users. Okay, now what has happened, I have taken the report from the system and I'm manually disabling them. So it's a IT dependent control. Okay, that's it. So let's say I have to review my debtors. I will take the list out from the system, and then I'm asking the debtors, I'm calling them, I'm following up for the payments and all. So again, it's what? IT dependent control. I took the list from the system and then I'm following some manual procedure. So it is IT dependent control. Okay, so I hope, guys, the three controls, general IT controls, application controls, and IT dependent controls is clear to you. Okay, now just for your understanding, the general IT controls, I told you, it's general controls. It is not specific to one application. These are controls which will be there throughout the organization, right? So controls with respect to our data center. Data center is a place where all the servers are kept. Okay, so you would want your data center to be safe, right? You would want your data center to be protected, where all the servers are kept. You would not want any unwanted person to go inside your data center. You would also want to keep backups of all your servers, right? So all these data center controls will be a part of general IT controls. Program change. Let's say if you want to change the settings of Windows software, the operating software. Okay, it's not related to one application. Windows is your OS, right? So we have to have controls over that also. No, I mean, random person should not be allowed to make changes to the OS. So we have program control. We have access security. I mean, who is going to have access, what level of access to the systems? Again, it's a general IT control. The system administrator will decide upon this. Okay, and then we have application. See, in this organization, what all applications do we have to buy? Should we discard the unwanted applications or not? It's a part of general IT control. You might think, sir, we are talking about application, but no, decision as to which application has to be purchased, decision as to which application has to be discarded, decision as to what level of maintenance we need for the application. It's a general part. It's for all the applications, that's all. Maybe 5 applications. Okay, this application we have to maintain this way, this application we have to maintain this way. So it's a general aspect. Okay, so these are general IT controls. Though in our regular sessions, guys, we discuss all the data controls, all the controls in detail, but for the timing, it's a revision session. I'm not going into the details. Okay, so we have 3 levels of controls in automated environment: general IT controls, we have application controls, and we have IT dependent controls. I hope you have understood this. Okay, now we have understood the risk in automated environment. We have covered the controls also in automated environment. Now let's understand about testing in automated environment, guys. How are we going to test things in automated environment? So what are the common methods of testing? Very simple. Either guys, you can use walkthrough. Walkthrough is basically a combination of inquiry, observation, inspection. What does it mean? I mean, you would want to walk through the entire process and understand the process. You are testing the controls. Okay, it says testing in automated environment. So how can you test? It says to obtain an understanding of how the transaction is processed in an automated environment. So let's say I'm doing the audit of a e-commerce company. So I would want to understand how the sales process is done. So I would ask them to make me walk through the entire process. So the first thing is order comes and this is how it happens. Then the order is confirmed and then the goods are dispatched. Then the invoice is sent. All these things I will ask them. So walkthrough is basically what? Obtain an understanding of how the entire transaction is processed in the automated environment. So it would include inquiry, it would include observation, inspection, etc. Okay, then I can just observe. Okay, let's say how a user processes a transaction. I can just observe, oh, this is how you dispatch your goods. Okay, so I can just observe. I can inspect certain documents. I can inspect, let's say, the configuration which is defined in the system. What is configuration, guys? The settings of the system. The settings of the system I can inspect. I can inspect the system logs. Logs is basically the records, right? Who made the changes in the software? We can have logs, right? Do you remember the concept of audit trails? Also, audit trails is something which you must have covered in company law. Also, it has been made mandatory, like for the companies. So audit trails, they are logs. Okay, logs means you can inspect those logs to see if there are any changes which was made, etc. And you can also do reperformance, like applying the formula, business rules, etc. You can do a reperformance. 2 plus 2 answer is coming as 4. Oh, that means the system is correct. We can do such reperformances as well. Okay, so these are the common testing methods: observation, inspection, reperformance, and walkthrough. Walkthrough means having a detailed understanding of the entire process. So this is how you can test the automated environment. Okay, now with this, guys, the basics of automated environment, I mean the major concepts with respect to automated environment, we covered the basics. We have covered the different risk in automated environment, controls in automated environment, testing in automated environment. We have covered them in detail. If you want to understand this in more detail, we already have a video on audit of automated environment on YouTube. Okay, and this was basically pertaining to the old syllabus, so you can still refer to that video. Okay, anyways, two more topics we have to do, very small topics. It is with respect to data analytics. Now guys, what happens is, so up until now, the 4 points which we had covered was from the perspective that, let's say, our clients are using IT environment, but then you as an auditor can also use systems to do analysis of the data. I mean, what has happened of late is, because of technology, the volumes of data which our clients are generating is humongous. It's huge. Okay, and imagine, I mean, you are doing the audit of Amazon and you want to check the sales and you have to do sampling. Will you be able to do that manually? It's not possible. So you have to do a very detailed analysis of the data. We call it as data analytics. Data analytics is a term wherein we analyze very big, huge amounts of data, maybe a big data also. We call it as big data. So that data analytics cannot be done manually. So we have to use certain technologies and tools. So what is data analytics? Let's understand. We have to cover two things only. We are going to first cover the meaning, and for us as auditors, where is the concept of data analytics we can use. So we are going to learn about the application part. So let's understand the meaning, guys. What is data analytics? It is a combination of tools, techniques, processes that are used to tackle vast amounts of data, electronic data, to obtain meaningful information. It is called data analytics. You are going to analyze vast amount of data, which is not possible without technology. Imagine analyzing the sales of Walmart. Almost at one point of time, it does millions amount of sale. It has stores across the entire America and in some European countries as well. So imagine the amount of sales they do in one particular point of time. So it's not possible to analyze the sales manually. So we use certain tools, techniques, processes to analyze this huge volume of data, and this concept is called as data analytics. So sir, as an auditor, how is it going to be helpful for us? So we have the applications. Okay, so data analytics, number one, will be helpful for you to pick up samples. I mean, generally what we do is we have certain softwares, guys. Okay, we can use the CAAT tools, computer assisted auditing techniques. We can use those tools. Even Excel also we can use to do the sampling. Okay, so we can do some bit of analytics of the data in Excel also. So we have selection of audit samples. You can see whether the data is complete or not using data analytics. Sir, how? Sir, let's say they give you a detail of the debtors, and you can match the total of the debtors with what is reflecting in the financial statement. So you'll get to know whether they have given the list of the entire debtors or is it something is missing. You can recompute also the balances. You can do some recalculation of mathematical calculations. Like, of course, in Excel, can't we do calculations? Can't we check the depreciation value again? Can we recalculate it ourselves? Yes, we can do. We can also do journal analysis of the journal entries using the softwares, guys. Okay, and this would be required in specifically if there is a fraud. I mean, in cases of fraud, as per SA 240 is now no longer in your syllabus, but as if there is a fraud and all, you might have to analyze the journal entries. So fraud investigation, all these things you can use data analytics for. Okay, so the major thing is what sampling should come first. You can check whether the data is complete. You can recompute, you can recalculate, you can investigate for fraud. You can see the fluctuations if there is any huge fluctuations. All these things you can see. Okay, all right, so this is how data analytics is important for us, the auditors. Okay, and finally the last topic of the entire chapter 3, it is audit trails, guys. Okay, now what is audit trail? The concept, I mean, as I mentioned, you must have covered this in your company law also. These days all the companies are also required to maintain systems which has the mandatory feature of audit trail. Audit trail is nothing but logs. Okay, it keeps a record. In very layman's terms, if I tell you, this is a feature, let's say in our accounting system, which keeps a record as to when was a transaction done, who did the transaction, at what point of time was it done, which system was used to make the transaction. If any changes are made to the transaction, that would also be recorded. So these logs now, probably you as an auditor can see these logs to see if they have made any manipulation in the transactions or not. Okay, in India also what used to happen, a lot of backdate entries would be made. In India what happens is, many companies would determine, see, oh, this is a profit they are getting, and then when they have to pay a lot of taxes, they would book in some fake expenses. And also if fake expenses are booked later on, you can see the audit trail and you get to know that this never happened in the month of April. The entry was only made after the financial year end to manage the profits. So audit trails are what? It's what is the concept? It's basically the documented flow of transaction used to investigate its translation into financial statements. So right from the source, from where is the transaction entered, who entered, at what point of time he entered, using which system he entered, everything would be recorded. It records system and the user activity. Okay, so just remember, guys, audit trails are logs. They are logs. Okay, now what is the purpose or benefit of these audit trails, guys? Audit trails helps in reduction of fraud, errors, unauthorized use. It enhances internal controls. Now if everyone knows that all their activities are being logged, they can't do backdate entries, they can't manipulate the transactions. And also this is the purpose and benefit. But what are the challenges, guys? It's not easy to implement audit trails. Okay, the government has mandated it, but it is costly. It might be a costly thing. So it says, what are the challenges of audit trails? It's cost implications. And guys, audit trails will again keep on, all the transactions which is done, the audit trail logs will be there. Again, you need more storage space. You have to handle that volume of data. So need for automated tools for analysis to handle large volumes of data. So if you want to have a look at the audit trails also, guys, it's the data is going to be huge. Okay, so you need to have some specific softwares also to analyze those data. It can't be done manually, right? So these are the two challenges of audit trails. Okay, again, a new concept which was introduced, but then it was there in detail in your EIS subject, which was there in the old course, no longer there in the new course. Okay, all right, so with this, guys, finally we are done with chapter number 3. We have covered all the topics in great level of detail.